Reliance Industries, Wipro and Infy were the few gainers on the Nifty 50, but Reliance Industries key in terms of the support that it provided to the benchmark. Despite that recovery, the Nifty Bank actually dropped 3% and the PSU Bank ended with cuts of 4%. The losses in the PSU Bank were largely on account of the announcement of the farm loan waiver, which we will talk about in some detail today. The market breadth remained weak throughout that session. Oil sensitives were the worst affected, both downstream as well as upstream, because we spoke about it. Crude oil prices actually dropped quite substantially from the high point of the day. $119.5 per barrel was the high point, and it had dropped to about 105 or thereabouts towards the end of the session. So even ONGC lost all of the ground that it had gained, and then it lost more. So sectorally, you had the Nifty IT that was the only pocket of green. Everything else lost ground.
And you might see a bit of that playing out yet again today, right? So that's the easier part to predict, if you will. A relief rally today for sure, but the continuation would very much depend on news flow and how volatile it is. Remember, the news flow continues to be volatile, so don't be surprised there whatsoever. Crude sensitives will see either a rebound or a fall, depending on which end of the crude spectrum you are in today's session as well. And then the mind takes you back to the newsmakers of day before yesterday, which some of them corrected rightly and some of that maybe corrected because the markets took them down. So maybe the pipe companies could see a bit of a rebound in the session today, but PSU banks, which got hit badly yesterday, partly on account of the market, but partly also because of this farm loan waiver news, could well continue to maybe stay lower, even if it's a rebound day. So bear that in mind, or might see a sell-on rise, as the case may be. I'm watching out for the AC supply chain news as well, and there is, I think Alex is speaking in detail about it. There's a Morgan Stanley note which kind of speaks about how volumes are picking up, so keep an eye out for that. Remember, yesterday we were talking to KR and heat exchangers on the same news flow as well, that it promises to be a strong summer. Maybe you just see some of these starting to do well. And 6 new stocks in F&O from April 1st. Watch out for them. Now, the capital market plays are starting to get more and more presence in the derivative space, with both Nippon Life and asset management, that is Nippon MF, and Motilal Oswal AMC going to be coming into the F&O space from April 1st. Keep an eye out. Some interesting names out there. Adani Power, Cochin Shipyard, Hyundai, and the 2 AMCs in addition to Vishal Mega Mart. So watch out for these names as well.
I think the big one, of course, is coming from Trump's statements. They're giving markets a reason for a relief rally this morning, but we have to wait and see what's coming from the other side. And the statement that I saw from the Iranian deputy minister said that Iran will only end the war if it is assured it won't be attacked again. This is from Deputy Foreign Minister Kazim Garib Abadi, who told the state channel that we will only end the war under conditions where we are certain it won't happen again. I think I see that as a positive, because at least the door has opened. I mean, it's a reasonable request, and one that the US can also agree to and then paint as a victory for them. So there is a off-ramp, as they say, geopolitically in place. Watch out for that. Oil sensitives, of course, will be in focus, likely to lead the temporary bounce back. Meanwhile, markets not in clear waters yet, till there is a definitive cool-off in the war. The market setup does reflect one in high stress mode. Nifty's 300-point recovery late Monday gave bulls a glimmer of hope. The index still remains in a sell-on rise regime. The fear gauge, that is the India VIX, exploded to a 21-month high of 23.36, signaling massive discomfort for bulls. However, momentum indicators have entered oversold territory, suggesting the possibility of a short-term technical bounce. Key factors to watch will be whether any rebound sustains or faces selling pressure at higher levels. Resistance levels at 24,080, 24,170 and 24,315. Key supports at 23,790, 23,700 and 23,555. For the Bank Nifty, index is trading 2.4% below its 200-day EMA. The RSI is at 24.88, lowest since January 2025. Resistance levels at 56,240 and 56,800. Support at 55,470 and 55,235. So those are some of the levels you should watch out for. But let me go across to Puneet this morning on the F&O setup.
Well, thank you for that. Definitely the 300-point implied open shows you some confidence yet again back at the 24,400 level. Hopefully, with this implied open of sustains that has come down to around 220, 230 points yet again. So the most important thing will be the sustenance of this 200 to 300 point up move that we might see yet again on the Nifty 50 today, led of course by global factors. But the Bank Nifty, that has been an area where was an area of comfort, was an area of solace, and now over the last couple of days with the global factors, with the Maharashtra waiver, we are now again looking at 56,000. So the conversations have moved away from the resistance of 60,000 as a key level, 61,000 as a key level, all the way back to the supports of 53 to 54,000 on the Bank Nifty, led by the sell-off that we see in the PSU banks. And that trend reversal, until that happens on PSU banks, this momentum is expected to continue for now. Yet again, selling from foreign investors, DIs continue to support the markets, yet again with 9,000 crores being bought yesterday. But largely the index long surprisingly unchanged compared to yesterday as well. Yet again at the 12.5%. And while we have the expiry for the Nifty, you are largely seeing that a lot of the money has been pulled out. Fresh puts haven't been yet visible, at least in this system. And the put call ratios were slightly inching up to 1.17. In terms of open interest distribution, we've continued to maintain that 24,000 to 25,000 chart and show you the open interest distribution. So 24,000 is a key level for the puts and 25 for the calls continue to be dominating the news flow of both the out of money options. There are some at 23,500 for the puts as well, and probably we'll put that chart tomorrow, but largely continues to be out of money as of now given the volatility. And not too many trends being formed yet in stocks. Oil India continues to be in focus with the Israel-Iran war, and so will ONGCB. KPIT Tech yet again saw a build-up of shorts now below the 700 rupee mark. It's been a steep correction from almost 1700 to 700 now. So continue to monitor this stock, but open interest losers, the open interest thins out very quickly. So continue to monitor all of those spaces, but the sustenance of this implied open through the day will be the most important factor to watch today.
I agree. I think crude sensitives definitely, but stocks on my watch list. I'm starting with M&M. The business updates for February have come in and look good on the face of it. Total production up 13% year on year at 94,550 units. The new 7XO model production is at 8,478 units for both diesel and petrol variants. I mean, this is what really stands out because this model was launched only in Jan. Scorpio and Bolero have grown 28% and 17% respectively. The electric origin SUV, including models like BE6 and XEV9e, 9S are up 48% at 4,527 units. The XUV 3XO and XUV 400 diesel electric is also up 68%. So the total production has looked pretty decent for M&M, and that's the first one. Dixon, I think, could well be the stock of the morning. It's received approval for their HKC joint venture from MeitY under the Press Note 3 of 2020 to form a joint venture with HKC Overseas Limited. They've executed a share subscription and shareholders agreement on August 16, 2025, and now they have basically received approval. Press Note 3 allowed Chinese investments into the country, very simply put, and this was one sticking point. It's now finally come in. Nomura has maintained a buy on the stock with a target price of 14,678 on the receipt of that approval. They're saying backward integration to boost structural margins. The joint venture and HKC's capital investments are contingent upon fulfilling all remaining conditions outlined in the share subscription agreement. The PN3 approval, which was announced in June 2024, provides meaningful clarity on the ramp-up of this joint venture. HKC is a strong partner in display, which is already catering to most of Dixon's mobile customers globally and remains a longer-term structural margin tailwind. So that's the other one to look out for. The tile industry has been in focus, and Jefferies has an interesting note out. They say the Middle East conflict has constrained domestic gas supplies as India receives 75% of LNG via the Strait of Hormuz. LNG and propane account for 70% of fuel to Morbi tile industry, which is notably curtailed now. This could impact domestic tile production and margins as energy cost is 20 to 25% of net sales. Approximately 5% rise in fuel cost could impact EPS by estimated 5 to 7%. a weak FY26 estimated volume for Kajaria at 1% year-on-year has been put into place. So, you know, of all the things that are getting impacted, tiles is one of it, but this message from the Restaurants Association across the country, and then the Bangalore restaurant was saying that we're running out of gas to cook, really struck me. So I think we're not yet realizing the outcome of this if it doesn't cool off sooner.
Yeah, let's hope that it does. There's 3 stocks on my list as well, and Swan Defense, this is one of the exchange filing updates that we got. Not too much detail here apart from the fact that the promoter Hazel Infra is set to sell 5% stake via offer for sale. And the objective of that offer for sale is to meet minimum public shareholding. As of the 31st of December, Hazel Infra held nearly 95% stake in Swan Defense. So this is really procedural in nature, but that supply coming through at this time could well lead to some pressure on the downside for the stock. Adani Ports, the second counter, this is a stock that did take a bit of a battering on account of this entire geopolitical issue, which it has implications for trade more than anything else. Macquarie on Adani Ports has weighed in. They've maintained their outperform with a target price of 1,760, which at this point offers quite the upside. They're saying that the Haifa port is about 2% of overall port volumes. It accounts for 25% of international volumes for Adani Ports. And with the consolidation of the NQXT terminal, the share of Haifa in the overall volumes is set to go down, with 40% of Adani Ports volume and about 15% of this linked to the Middle East. They expect this to impact 5 to 6% of Adani Ports' total domestic volumes. The March volumes are also likely to be impacted on account of the current disruptions in the Middle East. But remember that, and these are my words, this is a situation that is changing practically by the hour, so bear that in mind. Going back to the report, they're saying that every 10 million metric tons of decline in Mundra volumes for Adani Ports causes an estimated impact of 1% on annual consolidated EBITDA. So there is an implication for the EBITDA, but they've maintained their target price and their outperform rating. LG India, and this is what Neeraj was referring to earlier when he said that I would speak about AC companies, and this is on the back of a Morgan Stanley note on LG India. They're maintaining an overweight with a target price of 1,726. They're saying that the AC sales are picking up in the north and the west on account of rising temperatures. And boy, those temperatures have actually gone up. The summer, however, is delayed by 7 to 10 days in South India. TVs are seeing a tailwind on account of the various cricket matches that we've been talking about in the recent past. Of course, the T20 World Cup has just concluded. Refrigerators and washing machines are also seeing better sales year on year. And premium traction is also rising. Room ACs, they expect growth in the fourth quarter, and they're keeping or they're evaluating price hikes as we speak, and we've spoken about this as well. Blue Star has told us on record that they expect the prices to increase in March itself, and there is stocking by wholesalers that is taking place ahead of that. Compounded annual growth rate over the long-term margins are expected as well. The margins are expected to bounce back to near FY25 levels in FY27. This is significant.
So just on the point of people watching cricket on TV, for the longest time the conversation was that no one watches TV, everyone's watching on their screens. I'm glad someone's watching something on TV.
No, 100%.
Yeah, news and sports, I think, difficult to let go of live feeds on TV. But I must say, I was watching it on Hotstar as well, right?
25 crore.
81 crore people at the presentation.
Oh, okay.
Yeah, crazy.
So, quite something.
At the start it was 26, so it's 26 crore to 81 crore.
It's picked up. I personally seen a number of 81 crore, so this is not hearsay. So pretty good going. Anyways, 3 stocks on my list. Hinduja Global. Don't know the impact here because it's an MOU, but it's an interesting one. They've signed an MOU with Uttar Pradesh, state of Uttar Pradesh, for the rollout of Project Ganga, which is government-assisted network for growth and advancement, which is a large-scale digital inclusion initiative in the state. Now, even if these projects are done at a discount, for a state the size of Uttar Pradesh, if they've signed an MOU, it could be interesting. We, of course, invited the management to come and talk about this, but could be interesting. If the stock reacts, then obviously somebody in the market knows a lot more about these numbers as well. So keep an eye out for this one. Arvind Smart Spaces is really interesting because Firoz Shah Godrej. He runs a very successful large real estate firm in India, which is Godrej Properties, and he has acquired 8.17 lakh shares, which is about 1.78% stake in Arvind Smart Spaces for about 40.71 crores from HDFC Capital Affordable Real Estate Fund. They were exchanged at a price of 498, so circa the price at which the stock is closed yesterday. Let's wait and watch if this one has a bit of a reaction today. And one brokerage note from mine to cooling solutions, going with the theme, right? So Jefferies has a note on Umber Enterprises. They've maintained a buy and they've hiked the target price to 9120 from 8890. Now their logic is they see multiple catalysts ahead, which is a strong summer, electronics ramp up and acquisition ramp up for Umber. They say the AC industry volume is set to grow, estimated to grow in mid-teens in calendar year 26 on a low base. This is well documented. The base is low. If the summer is strong, you expect a bumper growth period. So keep an eye out. They estimate a 48% EPS compounded annual growth rate from FY25 to 28. So this year, next year, and the year after next, they estimate Umber to grow at 48%, earnings to grow at 48% year after year. Well, if that is the growth rate that Umber does give, then a 50p might well be warranted because then the PEG ratio is just about 1. So let's wait and watch if there is a bit of a bump up in Umber because of all of these factors, in addition to the fact that the market, of course, will lift a lot of boat. I mean, the rising tide will help largely all boats in the ecosystem today, save for maybe PSU banks.
And PSU banks is where our focus is next. The Maharashtra government has announced the much-awaited farm loan waiver scheme, which is expected to cost the state exchequer around 35,000 crore rupees and benefit nearly 50 lakh farmers across the state. I mean, it's much awaited by the farmers, but for investors in PSU banks, turned out to be quite a jolt. Sharad is here to explain the impact.
Well, interestingly, this is the third announcement coming in the last decade when it comes to the farm loan waivers. And you mentioned this one addition to this detail is that this is for those farmers who are having outstanding crop loans, which ending on September last year as well. Now, of course, there are other packages also like a 20,000 crore power bill relief, and also you could see a natural farming push which is coming in. But brokerages have given, you could say, neutral to negative views coming in. Macquarie has stated that this development is negative in view, and the PSU banks are likely to be impacted more than the private banks. Looking at the numbers, the private sector banks agri NPLs, that's much more lower. And looking at the numbers, HDFC Bank's agri NPL is at 3.8% as of FY28, and compare that with SBI, which is at a higher rate of 8.4%. Equurius, on the other hand, they have stated that post this waiver announcement, the NPA ratio actually improved for the banks over the next 1 year, and the absolute NPS declined within the next 6 months. As of December 25, the crop loan GNPS stand at roughly 12.2%, with the higher numbers coming in for SBI and Bank of India. Now, if the scheme benefits for this existing borrowers, this will be positive for SBI and Bank of India going ahead as well. But they do not expect a meaningful spike in the crop loan NPS going ahead for Maharashtra.
Okay. All right. Thanks so much, Sharad, for getting us those details. Abhizar Divanji, founder of Neostrat Advisors, joining us this morning. Abhizar, thanks so much for taking the time, and we're looking forward to this conversation. Specifically, the sense on the street yesterday seems to be that the announcement of a farm loan waiver is not good news for good repayment behavior. Is this what you're interpreting as well? There are some others that are interpreting that this would be net positive for the banks.
No, so I think, as you rightly said, Alex, the behavior is a big issue. So I don't think the hit has been taken by the state. So I don't think banks will be hit negatively because of the waivers announced. The government will bear the cost and give it to them. But it's a very short-term measure. If you look at it even in the past, I don't think there have been any meaningful gains that have come out of farm loan waivers. In fact, if you look at it in the past, what's been seen is that after that, there is a particular spike in the level of NPLs because there is no sustainable growth. If you talk about, I'm a restructuring guy, and when I talk about restructuring, I would say that you only back sustainable businesses. And this is not sustainable business. This is just a waiver given to farmers who are unable to pay the loans without getting into the crux of why they are not able to pay the loans. So I don't think you're solving a problem here. You're just giving a temporary relief, but it impacts behavior very negatively because then people know that a waiver is coming at some stage, so might as well do it. Banks are forced to lend to the agri sector because there is a requirement under the priority sector lending requirements to lend to agricultural sector directly. And that's the reason why banks have to bear this NPL. Is for them, it's a cost of doing business, and they factored it into their overall costing, and that results in the larger profitable sector actually bearing the cost of these agri loans in the longer run. So I don't think it makes sense to do these one-time schemes. However, what one should actually consider is, the crux of our problem is uneconomical farming. People own smaller farms, etc., and it's very uneconomical in terms of what they do. If we could do an Amul type structure, which said that, okay, let's get into farming cooperatives, and people who are given these waivers have to necessarily contribute their farms into this cooperative, so to say, so that economical farming can happen and shared profits can happen. That would result in more sustainable, farm-based loan.
Abizar, the way the street is looking at banks as a result of this is negative, and you clarified that eventually they are not going to be taking the hit. These
not for this waiver.
Not for this waiver.
The implication on farmer behavior of actually not paying loans without the state declaring a waiver will fall on the banks.
No, fair enough. My point is that even the reimbursement, so to speak, that will come from the government will and can come with a lag. There is going to be some sort of impact for these companies, isn't it?
Yeah, so yes, there could be some liquidity related impacts, but that is not that significant. The larger impact is the NPL impact, which I don't think the state is willing to, is going to pass on to the banks.
And private banks, would you say private banks are relatively, more protected?
In a sense, yes, but everybody has to do agri lending. The private sector banks tend to do it more sensibly. So they do it to agri-related sectors, which are more safer than direct lending to farmers. The PSU banks are mandated to lend directly to the farmers, not by regulation, but by behavior. And that's where they end up taking a higher hit on their balance sheets.
This is Neeraj here. Good morning. I think maybe anecdotally, if I look at the pricing, stock market price behavior of the PSU banks, then post-COVID, they have outperformed the private banks. And one of the reasons that is being cited, maybe market is observing the price behavior and saying this, but frankly, the lending culture, the systems, etc. of PSU banks over the last 5 years have improved dramatically, and therefore the ask that maybe the valuation should be higher. Could things like these, I know you're not an equities guy, but I'm just asking, could things like these, and if there are 5 other states coming up for elections in May, so if there are more farm loan waivers, etc. announced, could they dampen the valuation argument for PSU banks versus the private banks?
So in a sense, that's the reason why PSUs are valued per se lower, right? I think they have done a lot in terms of technological advancements, corporate lending, culture. So everything else, they've actually pretty much done what the private sector does. But the so-called government social banking implication is what is pushing their prices down in a sense. And a farm waiver is part of that, because it's not about the farm waiver. It's more about the behavior that comes post that, which really impacts the banks. So yes, I mean, at the end of the day, because of the social banking obligations of the PSU, they are valued lower.
Quick question. We've been talking about the West Asia war, the Iran war, and the impact on all sectors, all spaces. For banks, do you think there's any exposure? There could be exporters, there are force majeures being called. Either way, what is the kind of hit possibly for banks?
I wouldn't be able to quantify it, Tamanna, but the fact is that, the banking sector actually represents the residual risk of financial risk of any of these events that happen globally, right? So at the end of the day, corporations are leveraged, and it impacts the leveraging because the banks' recoveries get hit. So clearly, the ultimate financial impact does come onto the financial sector, and it will come.
That is a good point, because the thinking is that it's a domestic business. It is, well preserved compared to some of the other sectors. But at the end of the day, they will be left holding the can if things go south.
The results of banking depend on the results of their borrowers.
Well said, well put, Abhizar. Thank you. Always a pleasure to speak with you. We'll take a very short break. I want to pull up the implied that has shaved off quite a bit of its peak before we get into that break. About 203 points odd. It was close to 270 points at one stage as well. We'll wait and see what are the top ideas of the day. Very short break. We're coming right back. Don't go away.
Some moments in life are lifelong. Some memories are lifelong. Blessings are meant to be lifelong. Trust is also placed lifelong.
Heart lifelong, love lifelong, bond lifelong, memories lifelong.
True love is lifelong, isn't it?
Love lifelong, bond lifelong.
We respect our loved ones lifelong too, don't we? Some relationships stay shining lifelong. Just like Tata Power Solar Roof. Best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders.
Welcome back. You're watching India Market Open. If you could be behind the scenes in the break, you would see how the mood has lifted since yesterday and today. Parag, Thakkar and Kush Bora in the studios, all smiles, now willing to celebrate a lot of things that were happening yesterday, seeing a possible uptick on the screens. Kush, you seem most happy.
Apart from the fact that India won the World Cup and Dhurandhar 2 trailer released, there is one more thing. Yesterday on our advisory, we gave a call on Nifty 24,100 call option, today's expiry, CMP 150 rupees. Now, among other things which we track, we have our own systems and methods by which, we track these, and of course we give out calls. One of the things that just pushed us over the edge to release that call was the last half an hour conversation that you two were having. I saw you guys, talk about how the mood has been lifted, how the crude prices have come off, Nifty, IT already doing better. So I'm not saying that was the only factor, but that was definitely a contributing factor to saying that perhaps
after all the pessimism, we could have one day of relief, and glad to see that we've got that 200 odd point uptick on the gift Nifty right now.
Yeah, no, the screen sometimes just speaks, right? It says what it is. So, but the big question though, the tough one is, will we sustain? Are we going, even if we see this kind of a bump up of 200 points, could be a little around that figure, are we going to see a sell on rise?
Very simple answer to that is don't chase the momentum. We're not in a market space where you want to chase momentum. अगर 200 पॉइंट का गैप अप होता है, ये यहाँ से मान लो another 50-100 points भी ऊपर चला जाता है. We're not in that setup where you want to chase momentum. But before that, just a couple of things, right? For the good part of the last few days, we've spoken how 24,000 to 24,300 is that zone where even if we slip below, we might not stay for too long. At least for now, that seems to be playing out. So I will stand by that view. Wix also went to 23. Now, typically, when it goes to 25 to 30 zones, we're still shy of that level. But when it goes to those zones, it's not sustainable for a long time. And hence, a reversal was on the cards anyway. So, yes, a reversal was on the cards. That is what Gift Nifty is suggesting. Glad to see that. But also, look, bottoms and tops are typically known in hindsight only. But there is a very high probability that wherever this war bottom is formed for the Nifty will perhaps be a medium to a long-term bottom, and we might see a sustainable up move for the end of the year. Something again that I've been saying for a while now. However, the index to trade on the long side is Bank Nifty. Again, yesterday we mentioned how a lot of indicators, despite having this sharp sell-off, were close to oversold territories but not there yet. That changed yesterday. RSI on Bank Nifty came at 23, and that is true of the other two big boys as well, which is HDFC and ICICI. So very much a rebound on the cards on these, and if that comes about, Bank Nifty from here on could again go out and reclaim the 200-day moving average at 58,500. So yes, if you want to trade an index on the long side, Bank Nifty is your index to go.
So you're saying you will buy the Bank Nifty after it opens gap up today?
Structurally, it is better placed. I want to see how big a gap up it is, because for the last couple of sessions,
prophesize if it opens 2% higher, let's say, or 1.5%.
Up until 58,800, I will play Bank Nifty for the long side. Now, if we open at 58,000 or 58,200, then that trade is lost. But if we are at 57,500, right, or thereabouts, I think you've still got another 1,000 points, maybe even 700 odd points to play on the long side.
Okay, then what about individual stocks that you're looking at? Do you still have a sell call?
I can, no, I was just going to say that I can finally come out with all three long calls, right? And that's the kind of day it is. Also, let me just reiterate, this is not a market where, you want to go and buy all out because ek din ki teji aa gayi hai. But these are still stocks that you can trade on the long side. That's the confidence that, with which I'm, sharing these calls. Cummins is a reiteration because yesterday we gave it as a weekly call. We've already discussed how in the last 2.5 months, the weekly calls have been doing fantastically well. Yes, it was down along with the markets, but there is a good chance that on a sustainable basis, this and the rest of the pack of, of this sector could do well. So Cummins is a reiteration, 5050 5200. These are your targets. 4550, this is your stop loss. The risk reward ratio now seems extremely attractive, doesn't it? Also MCX on the long side, this one has been gaining ground. It's not given up any of the gains that the markets did. So yes, relative strength apparent. 2665, 2750 are your targets. 2485 is where you keep that stop loss. And RR Kabel, very strong setup. Along with the markets, there are some stocks that corrected. This is one of them, but still remains on a very strong footing. So this is something that you can look to add. 1535, 1580, these are your targets, and your stop loss is at 1455.
Parag bhai, good morning.
Good morning.
Are you in animal spirits today?
So basically, as I said, right, I buy on dips. So today I'm not going to buy.
Yesterday, did you buy the dip?
Yes, 100%. Yeah.
You are on track of what DIIs are doing. And just to talk about this, because we've been having this debate buy, not buy, and obviously it's individual appetites and all of that. But this data that I think Alex also referred to earlier on, since the 2nd of March till 9th of March, DIIs have been consistently buying, total of about 40,000 crores, while FIIs have been selling.
Correct.
Not that one set of investors is smarter than the other, not saying that, but it's nazariye ki baat hai.
Correct. So everybody has, as I said yesterday, ICICI Bank and HDFC Bank at 10 PE at 1.7, 1.8 times price to book for about 2% ROA in case of ICICI Bank. I think, and structurally, I feel that 15% earnings CAGR will start from FY27 as margins have bottomed out. Now there is no repo rate cut left, right? Already inflation is inching up because of crude oil, steel price going up. So I would say that, and what I believe is that currently we are in a market where every time there's a big dip, you have to buy, and then when there is a mean reversion, you have to sell also something. We are in that kind of market. So you have to always keep your dry powder ready to buy on the dips, because this kind of shocks will continue. You cannot say that it is over.
Nice.
We'll delve a little deeper into that in just a bit. For now, let's take a look at the watch list, because there are quite a few stocks that took a battering in the recent past that could be up and about in trade today. On top of that are the oil sensitives and OMCs in particular, because you've had a sharp intraday recovery or a recovery from the high point, we should say, for crude oil prices, and they've dropped further in trade today, so watch out for those. Similarly, aviation companies, and specifically Interglobe Aviation, the paints companies as well, and a whole host of other stocks, including tire companies, all those that get affected by crude oil derivatives should be watched out for as well. Astral, Finolex, a couple of the other PVC pipe manufacturers, there is an increase in the prices, so they should benefit. BEL, BDL, there's a deal with Indonesia with regard to the BrahMos missiles, and they should benefit as well. In fact, if anything, the defense pack has been resilient in the recent past. Let's look at a few more stocks. Idea Forge, this is an agreement as well. Drone flight testing is going to be done for NATO. Dixon Tech, China's HKC overseas JV Nord, they've received this approval. Arvind Smart Spaces, they've got 8.17 lakh shares of an acquisition that has happened. Responsive Industries, there is instance of promoter buying. That is something that you're seeing in quite a few counters as well. This is actually Paradeep Phosphates as well. Beyond that is something that you should watch out for on account of promoter buying. IDFC First Bank, 116 crore security fraud has been flagged. ONGC and Oil India, crude has actually fallen. You saw a bit of money being taken off the table in trade yesterday itself when that fall took place. Swan Defense, the promoter, is set to sell. We spoke about this. Cipla, its arm is set to recall a batch of drugs. This is something that you should watch out for as well. So several stocks here. We spoke about not venturing into the crude sensitives, but assuming, Parag bhai, that the broad view is that crude is unsustainable above $100, and if there is a certain amount of normalcy that comes back to the fore, would you venture into any of these names?
Which sector you said?
Oil sensitives.
No, so yeah, basically that is my view, that if it goes above 100 again, then again oil sensitives will fall, and that is the time I'll again buy Pidilite, HUL kind of stocks. My shopping list is ready whenever, but I go always contra. So when crude goes up, I'll buy them. So yesterday Pidilite fell because crude oil was 119 at one point. So this is a good time to start looking at stocks like that.
What else is on the shopping list?
So basically, so PVR, as I said, and as Kush pointed out, I think the preview, which is on 18th, that mostly all shows are booked on 10th itself, so 8 days before that. So 18 crore worth of booking. And so I would think it is going to make 800 crores, 1000 crores easily in the first 15 days.
This is Dhurandhar.
Dhurandhar 2.
But Parag bhai, you may be a fan and will want to see the movie, but what is the view on the stock?
No, the stock is extremely cheap. Yeah. On pre-index EBITDA, it is 7 times EV/EBITDA. And it is a consolidated, I like consolidated industries, right? Where everybody has gone through so many problems that everybody has left that industry. Like what happened in telecom. That is why Bharti is one of my favorite. Right? So this is, everybody throws up the top.
मैदान में एक ही खड़ा है.
हाँ, एक ही है, PVR ही तो है. और क्या लोगे? So I think the PVR makes a lot of sense. It's a good contra buy again. And of course, I have 3% in my portfolios.
By that logic, what about Interglobe Aviation?
So it is also good. That is also, I should agree that the only problem is that I have seen it at 800 rupees when I was in running a contra fund in ICICI Pru. So I don't have that appetite to buy at 4,500. Yeah, it's okay. Yeah, and it's very rightly pointed out, very consolidated industry where everybody else has gone through so much of pain. Even Indigo has gone through pain. Yeah. And survived. And came out stronger. So it fits into that perfectly.
But at what? So would you ever consider? So if it's not 800, it's unlikely to go to 800.
No, it's under consideration. So it's under consideration. I should not say that it is not out of my radar. It is under consideration.
So just extend that argument from Alex, because it's a very interesting point that he's made and the stock that he's brought out. What will make it a buy versus it being under consideration? Usually you thump the table. So will it take Indigo 10%, 15%
it is
correction?
my limitation. I have to deep dive better.
It's for you to take it out. Okay. Yeah. But otherwise, Alex, it's a very good point, simply because the valuation multiple as it stands for Interglobe Aviation on just the basic. Don't do anything else, just do a basic P multiple as well.
12-month trailing.
12-month trailing is fine, 36, but because the 12-month trailing, but even if you account for the disruption in Q4, FY27 numbers, they look very attractive for the market leader as things stand right now, with a presumption that crude prices will be a lot more well behaved than what they are right now.
The only caveat I would add, Neeraj, is that we'll have to look at the latest aviation data just to see whether that heady number of 65 odd, 63 odd% market share that they enjoyed at the peak remains the case, and whether there has been a shift in, to a certain extent, the market share for the other big player, which is Air India, through its pretty.
But even if you assume that it comes down to 60%, it is.
But that's a question. So if it drops to 50%, then?
No, but you're saying
65 to 50
you're
is
saying
difficult.
basis all the flight cancellations.
Sure.
But even Air India's had flight cancellations.
But comparatively speaking,
same or more. No one
we'll see in the data, no?
No. I'm saying, but if the flights are cancelled because there is a global crisis,
I'll talk about my own personal experience.
It will be cancelled for all airlines.
I agree with you. But in the interim, since that crisis, I have personally been thinking twice about Interglobe Aviation.
Okay.
That is my opinion.
Okay. So then, I don't know.
Which is why I said we'll wait for the data.
I don't know if that shows in the data.
That's why we'll wait for the data.
We'll have to wait and see. But, there's so many second order impacts of crude prices going up. We think about it from a very, first stage point of view. All right, airlines, tire makers, paints, but it extends beyond that and more. In fact, Mahima is joining us to throw light on what could be the wide impact which touches pretty much every sector and industry.
Right, Tamanna. So as you rightly mentioned, rising crude prices will definitely have a ripple effect on a lot of other segments as well as products that are being manufactured in India. Now, just a wide view, because of crude prices going up, overall, India's current account deficit will widen. We'll also see delay in recovery when it comes to earnings for companies that use crude as derivative or raw material, and sustained inflation plus deflating rupee will also kind of impact all of this. Now, overall, if you take a look at how this will impact the extraction of sulfur and critical metals, 92% of sulfur globally comes from petroleum refining, and because of this, and sulfur is used for making sulfuric acid, and sulfuric acid is an absolute essential for copper and cobalt extraction. Now, leading to this, any kind of shortage in terms of copper, cobalt, nickel will mean that this will delay in production of transformers, EV batteries, and this will have a ripple effect on data centers and no electronics hardware as well. Now, because of this, if we take a look at how the overall Qatar ships massive share in terms of world LNG happens through Strait of Hormuz, Taiwan uses gas to power electricity, and Taiwan has few days left of LNG reserves, and because of this, the semiconductor manufacturing company in Taiwan uses around 9% of total electricity and makes 95% of world's advanced chips. So this means that this will have a ripple effect on not having chips and leading to no production of anywhere in AI space, phones, military hardware, etc. Now, impact on agriculture and chemical. Well, 33% of global urea flows through the Strait of Hormuz, and fossil gas comprises around 80% of nitrogen fertilizer costs, and shortages because of this will have an impact on crop yields and will drive food inflation as well. Now, talking about companies in specific, Tata Motors margin compression on higher raw material prices will take place. For battery manufacturers like Exide as well as other counters will face input cost rising. Cable makers like Polycab will suffer because of halts in raw material supply. Petronet LNG faces extreme supply risk at Dahej. Coromandel will see high phosphate fertilizer production cost. UPL as well as PI Industries will face volatile agrochemical inputs, and Indigo, we've talked about this at length, that it will be crushed by ATF fuel price hikes. Lastly, Asian Paints will struggle because of crude derivative and will see impact on margins. MRF if Apollo Tyres, because of synthetic rubber inflation, will see again impact on margins coming in. And lastly, FMCG companies would see impact of higher freight and packaging cost as well, which they might absorb or might pass on. So we'll have to wait and watch out for as to how this entire ripple effect of crude will have on different industries.
And one of those industries is even the hotel industry. So in Bengaluru, even the Tamil Nadu Association of Restaurants and you have the National Restaurant Association has said they're going to have trouble actually running business. In fact, the Bangalore Hotels Association says commercial gas supply has been halted from today, and that's triggered a full-blown crisis for thousands of establishments that run on these cylinders. NDTV's Ritu Raj Purohit is joining us from Bangalore with more details. Ritu, is this now a negotiation on, or will these restaurants just not serve food from today? Were all the morning breakfast places shut?
Well, you see, what the Karnataka Hotel Association, in fact, has put out very categorically that, of course, they will try to do their best until unless they really have that last drop of the cylinder. They will continue to serve, but of course, after that, they really have no option. All that they really will have to be forced to do is shut down their outlet. And now this, of course, is going to have a huge effect on the livelihood because you have so many of them really depending on the hotels. And Bengaluru, as you know, that the IT city, in fact, also has a lot of people who really step out of their homes towards their work very early in the morning as well, or probably late at night as well, who really, at the last time also depend on the hotels as well for their meals as well. So on that lines, you have the association who's also gone on to seek the help of many central ministers as well as the Karnataka Chief Minister Siddaramaiah as well, to see to it that, how that they really can help the hotels at this point in time. But also the major point that's really getting highlighted over here from the association side is also that because of the kind of demand and the situation that's really panning out on the ground, looks like the distributors too are taking an advantage of this whole situation where that, deliberately the cylinders are being made to halt as well, because they expect really that going forward, this is going to demand, there'll be an increase in the demand as well. But the situation of this is really not only in Bengaluru, but for that matter, even in Chennai as well, because they also look forward to such a difficulty at this point in time that almost that best they can do is for a 72 hours is what has been highlighted as well in Chennai post that they too will be forced to shut down. Now, this is really coming at a point of time when we are seeing what really is happening on the conflict level as well. Now, going forward, how's that the hotels be able to manage to do their best, that all needs to be seen, because how that post 72 hours, the situation will really get even more worse if this is how the situation continues. That needs to be seen.
Got it. Ritu, thanks so much for joining us this morning and giving us that perspective. Hopefully the situation does get resolved very quickly. Parag bhai, this is of course expected to be a short-term impact on the restaurant industry as a whole, but this is something that we had not necessarily foreseen would take place.
Absolutely.
So if you're talking about the listed players, do you see an impact on business?
So I would say tiles industry, restaurant, fast foods. Yeah. So all this will get impacted due to this gas shortage, right? Yeah. For example, I belong to plastic industry. I've worked in plastic industry for 10 years. So I know, unprecedented price increases in last 10 days. 40% price increase. Now so basically the entire, I would say any plastic processor who has a low inventory is completely wiped out. For at least 1 month or 45 days, he's out of business because somebody else will have inventory. He will sell at a reduced price. So he'll increase the price by say 15 rupees while the other guy has had to increase price of 45 rupees. So it becomes an extremely challenging situation from 30 to 45 days perspective.
So if you look at the second order and third order impacts of all of this, what you're suggesting is that demand destruction in certain pockets will take place.
It will get delayed.
It will get delayed.
Yeah.
So what I'm saying is in the fourth quarter, you will see volume getting impacted in certain pockets.
Some pockets, yeah. That is why I like something like Avenue Supermart or something, or Britannia or something, where, demand cannot be pushed back so much. Avenue Supermart, I am hearing that based on channel checks, they are doing 15-16% revenue growth this quarter. Okay. And if they do that, 20% EBITDA growth, because private label is now 17-18% of the revenue. So again, this is a company where I admire the promoter and I would love to buy this company, but the only valuation is the problem again.
Yeah.
Okay. As we get into the pre-open session, and some of those rates will now pop up on your screen, these are some of the sectors you need to watch out for as we see a day of possible recovery, at least a morning of possible recovery. Watch out for ONGC, Oil India, HOEC. Do they reverse after crude prices have cooled off? Watch out for your OMCs as well. Your HPCL, BPCL, Indian Oil Corporation. Do they see some kind of reprieve? That remains to be seen. Watch out for aviation stocks. Watch out for tires, paints, chemicals. Positive for all of them today, because these were the crude sensitives which were hurting the most going ahead, and you're seeing the initial pop coming in. Remember, this is the pre-open session we're talking about. I would want to see what's happening with an Astral, a Supreme Industries, a Phenolics, even as PVC prices have increased 3 times in the last 8 days. And these are some stocks that you should keep on your radar as well. I think defense will continue to be in focus. Indonesia has an agreement for the BrahMos missile. BEL, Bharat Dynamics, PTC Industries are some of them that you should look at. Idea Forge is another idea that we should look at, because they have got a drone flight testing program for NATO. That could be interesting as well. That we could see. So maybe some things that will buzz this morning.
Very interesting. And by the way, as the pre-open session is starting off, it'll be interesting to see some of these buzzing things as well. Just keep in mind that the indices are starting off with a fair degree of flair. 1.3% or 1.2% the first rates. These rates will change, remember. But there are positive rates out there. Look at the crude sensitives. So look at BP, HP, IOC. Look at what's happening maybe to Interglobe Aviation, presuming there is something happening there. And parallelly look at what's happening to ONGC and Oil India. There could be some corrective moves there. Maybe Reliance too could see some corrective moves, despite the fact that some of the other businesses are doing well. But because oil has cooled off, maybe it has a bit of an impact. I think we'll wait for these rates to settle a little bit. But keep in mind that we'll have, on balance, we'll have some optimism around a clutch of these stocks. I don't know if a Balrampur Chini has a 20% downtake. Really, that must be just a freak rate right now, and I think it will change. Dixon is starting off 7% higher, likely to, let me put it that way. Yeah, so a lot of positivity out there. You know, by the way, just rounding off that valuation number on math, I was looking at a Kotak note that came in yesterday, because they upgraded Interglobe Aviation at a 4,400 price. The P multiple for Interglobe of FY27 based on Kotak's numbers is 15 times.
Wow.
That's 4,400. So it was 4,200.
Okay.
Likely is opened at maybe 4,400. So available circa 15 times. If that is your poison, then the largest airline is available at about 15 times.
It is, by the way, at this juncture, of course, it's 9:03, indicating an open of nearly 5% higher.
So 4,400, right?
Yeah. Also, there's a scarcity premium with this stock. You really have not too much option. Kunal Shah joining in this morning, Senior Technical and Derivative Analyst at Mirae Asset Share Khan. Kunal, very good morning to you. What's the view on the charts?
Good morning, Tamanna. Good morning to everyone. I think we have seen a bit of volatility in the last 1 month or so. What basically Nifty has done is now, at least we have been trading in a bear trend. The technicals had gone into the oversold zone, and 23,800, 700 was the demand zone. So now we are expecting this to have a pullback on the upside, which will go towards 24,400, 24,600 is the zone. 24,400 was the weekly swing low for Nifty, which we broke. So we are again going to test that on the upside. And any rejection from those levels, 24,400, 500 level, will probably see again some correction on the downside. So I'm expecting Nifty to trade in this broader range of 23,800 to 24,600 on the upside. This is what I'm expecting for this week as well. Within this range, the approach again will remain dips to be utilized as buying opportunity, because this is a pullback, what I'm expecting towards 24,400, 500. And any rejection from those levels will give me a further confirmation that the downtrend still persists, and we might break the low of 23,700 and go lower. So that will still take some time, but within that time, I expect Nifty to consolidate in this broad range. Now for the Bank Nifty index, what we have seen that 57,700 was a critical support zone, which was breached with a gap down. Again, Bank Nifty has also gone into the oversold zone. So even on technicals, whether it's Nifty, Bank Nifty, the broader markets all went into the oversold territory. So we will expect a bounce over here as well. But again, Bank Nifty looks much more weaker compared to the Nifty index. So Bank Nifty might have a bounce towards 56,800, 57,000 on the upside. And probably from those levels, again, if we see rejection, that would be a good opportunity to go on the sell side. So currently, Bank Nifty is in a no trade zone. Nifty probably one can continue to look on the long side for a pullback towards the mark of 24,400, 500 on the upside.
All right. Let's also talk about your individual picks and what looks interesting this morning.
I think firstly, again, with the crude oil cooling down, the oil marketing company looks attractive. Specifically, IOC, even if I look at on the technical chart, the longer term trend line, which has started from March 2025, the stock has taken a support from those levels and seen a reversal in yesterday's trading session. So I think a classic reversal, what we have got on technicals at the lower end, 155 should be a stop loss on the downside, and one can expect levels of 167, 170 on the upside for IOC. So IOC is one stock which is looking good. Second is DMart. DMart again in yesterday's trading session had seen a falling trendline breakout with volumes, and I am expecting this again to see further highs. So DMart is looking positive from a short-term perspective. One can keep a stop loss of 3,800 and look for targets of 4,100, 4,150 on the upside.
Got it. Okay. Thanks so much for that, Kunal. Quite a few stocks that you should watch out for. LNG prices are sending shockwaves across sectors, and we've spoken about this to a certain extent, from power to fertilizers to steel to chemicals. And let's bring in Mahima to give you a sense of which sectors and companies get impacted the most. Mahima.
Right, Alex, so just like crude, even LNG, shortage of LNG could also impact a lot of sectors. To start with power, because, a lot of companies, for example, Torrent Power, 56% of current generation capacity is gas-based, so it will impact it in a big way. For NTPC, around 7% of current generation is gas-based. The next one is fertilizer, where natural gas, which is, often kind of imported as LNG, serves as a critical feedstock, accounting for 70 to 80% of total production costs. So counters like RCF, Chambal Fertilizers, Coromandel will be on focus on the back of that. Petrochemicals and refining, so all marketing companies are pivoting towards PNG to diversify from traditional liquid fuels. So all of these companies will be in focus. GAIL controls around 70% of India's natural gas transmission market and 50% in terms of gas trading as well. For steel, JSW Steel uses natural gas in the Dolvi plant, so keep your eye out for this particular counter as well. But the counter has also been actively reducing its dependence by replacing it with coke oven gas. Tiles will be in focus today. There was a note as well saying that any 5% increase in cost could impact EPS by around 5 to 7%. Some other counters that could remain in focus on the back of this include chemicals, counters like Aarti Industries, Tata Chemicals, Gujarat Fluorochem, textiles we talked about, Arvind, Welspun Living, Vardhan Textiles, EMS companies will also be in focus on the back of this. Borosil is one counter that also could get impacted, and pharma companies like Zydus, Alembic, Torrent Pharma, etc. could get impacted because of shortage of LNG. So this is the overall view of how LNG shortage can impact different sectors.
Absolutely. Thank you for that, Mahima. And while we're seeing crude prices cool off, they're still at 90 versus at around the 70 level just about a week ago, or maybe 10-12 days ago. Secondly, LNG production will take time to come back on, so just keep that in mind. Meanwhile, the Nifty looking decent after the pre-open session, about 1% up. Let's go across to the big brokerage call of the morning. Kotak Securities has upgraded Escorts Kubota to add. Sharad joining in with more.
Well, yes, technical chart is also suggesting there might be some positive action on the reversal on the auto stocks, and interestingly, Kotak Securities on Escorts has come out with a report upgrading the stock to add from sell, and even the target price that has been hiked from 3,300 rupees to 3,375 rupees per share. Now, they stated that the core drivers of the stock still remain intact. The monsoon dependency of the tractor sales has reduced, and the domestic tractor sales have shown mixed trades during the El Nino years. The construction equipment segment is expected to recover from calendar year 26 onwards, and the diversification going into spares, engines and agri solutions should help company broaden the revenue base and also reduce the cyclicality. So this is the bullish note coming in for Escorts.
Okay, Escorts in focus. That stock already 3% up. Kotak Securities likes the company. Kunal, Escorts on charts?
I think definitely even for Escorts, we have seen that the stock has been trading in a downtrend with lower top, lower bottom formation. So still the view remains on the negative side. 3,400 is the resistance for the stock. Once that is taken out on the upside and we have a strong closing above that, then probably you can see that the lower top, lower bottom formation has been negated, and then you will see the fresh up move. So still requires confirmation. Once we get a close above 3,400, then probably one can go aggressively on the long side.
Okay, by the way, those sugar stocks that you see getting a little bit of a hammering today, and Balrampur Chini is a prime example, down 3% after the closure of that pre-open session, probably on account of crude oil prices dropping as much as they have, because the interpretation when crude oil prices went to $119, however briefly, was that the ethanol play was back on the table, and that the demand for ethanol would rise on account of the use as a mix with traditional fuel, which is petrol and diesel. On the charts though, some of these names, right, including Praj Industries, which caters to the sector as a whole, creating those boilers that go into the production of ethanol, would you trade any of them?
No, avoid. This is a highly regulated sector, too much news flow and far too much volatility in it. So yes, I would avoid. There's been a spurt, and like you rightly pointed out, now these stocks are starting to see some profit booking, some cooling off. Although that said, let me just point out, I'm not giving a buy call on this. Praj has over the last 1.5-2 months seen very interesting volume spikes, on certain select days where the volume has been as high as 2, maybe 3 times of the average volumes, but that is also being gradually sold into. So that's something to note. And because that's being sold into and it's not able to take out some resistance levels, it doesn't convert into a buy signal.
Unfortunately for Praj, I mean the stock has halved from what it used to be. Shishir Joshipura is no longer with the business as well. The promoter stake sale news keeps on coming every second month. So kind of difficult. Okay, what's doing well though? Tejas is rebounding a little bit, so keep an eye out for that. Interglobe Aviation and Vishal Megamart getting into F&O up 3.5%. So 2 stocks out there, Tejas and Vishal Megamart. Kunal, any thoughts on either of these two?
I think again, Tejas had seen good volume-based buying. So again, Tejas looks attractive at the current levels. Again, we have seen the first leg which got completed, and now we have seen the retracement on the lower levels. So again, this could go higher. Tejas looks attractive at the current levels. One can expect the stock again to go towards the mark of 480, 490 in the very short term.
Okay. What about Dixon? Dixon looking like it will see a pop today on fundamentals first, Parag Bhai? Very quickly, because we just have a minute.
No, so the stock has completely been rogered, right? The high was 18,000. So now it has come down to a level that, and some positive news, so there will be some...
Target price is 14,000 that Nomura has given.
Yeah. So, so basically it has corrected a lot. So definitely I would also like to study and now it is trading at 45 times, which is okay. Worth looking at this price.
Charts, Kush, Dixon?
No, not really. Although there is some base formation, in place around the 96-9700 zone, there are resistance along the way. Still prefer Sirma over it.
L&T on the charts, considering that it's rebounded now.
Yeah. L&T, I said yesterday also that if you want to do bottom fishing, L&T is your stock to go to. As long as the 3700 level is maintained, you should accumulate L&T, not for a trade, but from a medium to a long-term perspective. These are good support zones for L&T.
Okay, less than a minute to go. Kunal and Kush, your top picks, not necessarily your given picks for the morning. Anything that looks interesting post the pre-open session. Kunal first.
I think from the IT space, I think Persistent looks attractive to me at the current levels. There could be a decent bounce over here. I'm expecting the rejection zone of 4,900 to be taken out, and this could go higher towards the mark of 5,100. So I'll be a buy Persistent at the current levels with a stop loss of 4,700, looking for targets of 5,100 on the upside.
Kush.
MCX 2665, 2750 targets, 2485 stop loss.
Well, as quick as it can get. I hope viewers got the stop losses and targets. Effectively, Kush Bora is bullish out there, so keep that in mind. Okay, I thought Parag Bhai will bring in the circle of competence argument in Dixon. He usually says that too. But, well, we'll wait for that. But the markets are likely to show a rub of green today. The question only is, will it sustain the 250 odd point on the Nifty? Will that sustain? Let's wait and watch. About 1%. Nothing rara, just about good. And in fact, just cooling off a bit, but let's give it a chance. I think some BTST traders might be booking profits as well, but the start is not bad. Forget the advanced decline rates, they'll update themselves. Let's get the Nifty IT and then the heat map very quickly on the screen. Nifty IT just about 1/3%, so banks are leading. Let's get the heat map up on the screen and see the green. This is beautiful, isn't it? Because we haven't seen that for a really long time. I mean, the last 10 days seem like really long. We haven't seen this for such a long time. What is doing well? Let's start with that. Interglobe Aviation, no surprise there, 4% higher. Effectively crude sensitives, Asian Paints, 3.5% higher. Some of the metal names, Tata Steel coming back. Shriram Finance was the top loser yesterday on open, starting off about a couple of percentage points higher. Ultratech gaining strength, 2.5%. Larsen & Toubro, a couple of percentage points. Some of the auto names. Adani Ports has a brokerage upgrade as well in the session. In the session today, there is M&M. So you can clearly see mobility with aviation and auto, both of them doing well, and crude sensitives effectively doing well. Fair degree of green. What is not doing well? ONGC and Reliance, no surprise there. Crude cool off, these two will get hit. Coal India a bit hit as well, because remember it had also rallied a fair bit, and some of the defensives like Cipla etc. coming off, but largely the day belongs to the gainers. Just keep in mind though, the markets have cooled off a little bit from their opening tick, now just about 0.7%. Not everybody is 100% convinced with what's happening, and frankly Tamanna, they shouldn't be as well. This could change any moment.
Yeah, I will just go back to David Roche's first statement this morning that I will paraphrase, saying that Trump says a lot of things. Let's wait and see what actually happens. But I wouldn't complain with the nearly a 200-point uptick on the Nifty after so long. It's not a roaring comeback. Remember, from its highs, Nifty has lost a huge steam. This is just one small step in that direction. I want to pull up contributors for the Nifty before we move ahead. And it's ICICI Bank that is leading the charge in pulling up the index, HDFC Bank, L&T, SBI as well. RIL, so now a Reuters report saying that Reliance is beginning to buy Russian crude after the US's nod. ONGC is expected to come off, Infosys because it had bucked the trend, but this side is looking strong, 184 points from these top 4 stocks, and others of course coming in as well. Let's pull up India VIX. India VIX is important to see because it had gone to dizzying heights, and this cool off here is important. 11.5% down, so some reprieve there as well. Small cap and mid cap, are they participating in the relief rally? This is right now a relief bounce back. I wouldn't even call it a full-fledged rally, to be honest. And you're seeing the Nifty small cap about 1% up. Not bad at all, doing better actually than the Nifty, 1.5% nearly up for the Nifty mid cap 150. The sectoral index will tell you who's leading the way, and it will be your oil and gas, perhaps. Consumer durables doing very well, 2% up this morning. Auto stocks, remember, one of the top losers yesterday, are recovering well, and also because of some of the numbers that have been coming in and updates that have been coming in. PSU banks have recovered sharply, and that is also a reprieve. This was one of the top losers. Oil and gas, because of ONGC here, feeling the heat. ONGC and other upstream companies, downstream companies will be in pain. CPSEs are also pretty flat, but this is not a bad screen at all this morning. I want to get to specific stocks, and let's pull up Dixon. We talked to you about the clearances that they have got for their joint venture with a Chinese company. This is something that the company was waiting for. Does this pave the way for the clearance with the JV with Vivo that they are now awaiting? 5% up on the stock. They're going strong. Escorts was our stock of the big brokerage call of the morning. After that Kotak upgrade, about 4% up right now. IDFC First, I mean, they just got done with the problems in Haryana. Now Chandigarh has seen another fraud, 116 crores in FD. Statement from IDFC First coming in just before the opening tick, saying that they have received no other complaints since the last one, and this will be sorted out as well. So a bit of a tick up in the green. Minda Corp has an interesting joint venture for electric vehicles that they have tied up with for powertrains that will help electric vehicles. 3% up on that stock. And Idea Forge we talked about, they're going to be doing drone testing for NATO, about 0.5% down. Defense, I suppose, has sort of lost steam today as the world seems to hope for a calmer future.
That is the line, I think, that best describes the mood as things stand right now. I would like to pull up the automotive index and its components, if you can, because a few of the top gainers in the broader markets actually are from this pack. Pull up the components of the automotive index and you will see what I'm talking about. Ashok Leyland leading from the front, that commercial vehicle play, pure play commercial vehicle play, nearly 4% higher at this point, and then a few automotive ancillary companies which had taken a bit of a battering. Samvardhana, Motherson, it plays in a lot of pockets in the automotive space, will benefit from a normalization. The tire makers had also gotten battered because remember that a rise in crude oil prices has a bearing on their input costs. On account of crude derivatives, MRF is up about 2.4% or thereabouts. Hero MotoCorp, Eicher Motors, M&M, TVS, the whole host of that automotive list doing well. But there's also Force Motors. Pull up Force Motors, for example, and it's up about 4%. Interestingly, we saw Tejas Networks cool off, and we've been talking about the fact that this stock has been on the up and up. Not necessarily any fundamentals driving this, so bear in mind that there have been cautionary signals that Kush on this table itself has provided for you with regard to Tejas Networks. It has moved up from close to 300 levels very, very quickly, up above 500 and now back up after having declined quite substantially. A couple of power-related names are doing well in trade today. Pull up Hitachi Energy. It's up and about 4% higher or thereabouts. You have GE Vernova TND, now known as GVTND, which is also up and about in trade today. So doing well, both of those stocks. So from the entire list that I've spoken about, Kush, what stands out to you? What can you potentially trade?
So the last ones that you mentioned, very interesting, setup on these Hitachi or GVTND for that matter. Very interesting setup. They just went into a consolidation mode for the last week when the markets were taking that big knock. But as long as as soon as the first inkling of any kind of a short covering trade also came about, these are back to their winning ways. So this is something that I would have on my radar from a buy on dips kind of setup. 24,300, 24,500, good levels for Hitachi Energy to start accumulation. For GVTND, that level comes to 3750, 3800. Not suggesting a very big rara buy right now because of how the entire setup is for the market, not for these stocks individually, but definitely pockets of strength in a market like this. And just to point out that stock that you mentioned, Alex, Tejas Networks, indeed we saw a big spurt on that, but if you see the long term, the medium term view, it has corrected massively. So this is more of a hold for anyone who's been holding on to this for a while, rather than a very convincing buy. So maybe some accumulation here and there, but not a very sustainable move. Maybe once it crosses 550, 540, the 200-day moving average, do we see some kind of a reversal?
Guys, the first person that we spoke to today, David Roche, had a very interesting comment that he was making. Neeraj, you'll remember this because you asked him the question about fishing in troubled waters. And he said that if you catch the fish, run to shore and cook it as quickly as you can. So should you be taking profits off the table is the question. Kunal, in this kind of market, if you see a spurt today, do you very quickly book those profits and keep trailing stop losses, particularly because of the fact that uncertainty is not necessarily out of the window?
I think, yeah, definitely, Alex. If you look at this Nifty, my sense is that this is just a pullback, what we are seeing on the Nifty index. And this could extend towards, say, 24,400, 500 zone. Again, from those levels, I'm expecting correction. And probably in the next couple of trading sessions, you will get more clear idea how the rejection is playing out from that 24,400, 500 zone. Once we get that confirmation, we get a confirmation as well, the low what we had made of 23,697, 698 on the downside, that will be broken. And then we are heading towards 23,500, 400 on the downside. So still the view remains bearish for the markets. Pullback utilized as an opportunity to either book profits or exit. We still have one more leg which is left on the downside, and that could extend towards 23,500 or even maybe 23,200 on the downside.
Why do you think there's one more leg left on the downside, Kunal?
Yeah, so firstly on the technicals, the top what we had made on Nifty, as per the Elliott wave, what we follow, we have completed the A, B, C structure. So it's more of on the technical terms. I think most of the audience won't understand it, but still from the Elliott wave perspective, we have completed the third leg. That is the A was completed from the top, then we had a B, that was that the budget, the tariff news, we had a massive gap up, but we were not able to surpass the all-time high. We just missed that by 30 points. So that again confirmed our B structure, and now the C has played out. Now probably what we will see on the Elliott wave, that the next leg, that is the ABC, will be played out on the upside, which is generally a pullback, and then you will have the last leg coming on the downside. So this I'm seeing it as a pullback, since all the technical indicators are also in the oversold zone. So you will have a pullback on the upside. Utilize that as an exit opportunity. Probably there is one more leg which is left on the downside for Nifty.
I'm going to get actually Kush's view on this and on the process that Kunal is talking about, the Elliott wave that he's been tracking. Do you see that technical downside left to go?
So let me put it this way. My approach to the markets at these levels would be different from what Kunal is suggesting. But can there be another leg of down move? In all likelihood, with the kind of news flow, if another, Truth Social post or tweet or, an X post comes about, there could be that down move. Very likely. But I will go with whatever I've said, this morning in the recent past. I would actually be looking for buying opportunities, because I see this dip, that comes about, and wherever this bottom is made, as the medium to a long-term bottom for the markets. 24,300, that is my long-term support zone for the market. Yes, if that is broken, we could slip below that like we did yesterday, but we'd be quick to regain that. Also look at VIX. Typically, when VIX moves above 23, 25, even to 30 zones, the reversal on the VIX itself is very sharp, and hence the negative correlation with the markets, where once you go to those levels, the reversal on the markets is also equally sharp. So I'm not saying that, we'll go to all-time highs very soon on the Nifty, but the reversal from where this fall started could be sharp, and we could perhaps be consolidating to sideways. So I will actually take this dip as a buying opportunity for a medium to a long-term setup. I don't know where the market bottom will be made, but like I said, from a medium-term perspective, this looks like where you should be going out and buying from medium to a long-term perspective.
The only thing is that this is so difficult to predict, because it's not a trending market based on fundamentals alone. There is news flow of another magnitude out there.
On technicals alone, you mean?
Or even on fundamentals alone. You're right. On technicals alone. But even on fundamentals, Tamanna, simply because it is not an event about economic growth or otherwise per se. That's a second order derivative. The actual cause is a conflict and statements being made by both sides, which are driving sentiment so strongly. I mean, imagine crude, after rallying 35%, added 28% in a session, and then has fallen back to 90 in a matter of 48 hours. It's just impossible to comprehend this in any financial model or a technical chart. So what Kush and etc. is saying today, they could fall flat on their face tomorrow, so I won't blame them. I'm glad we are not in their shoes right now, because it's damn difficult.
So just if you remember, yesterday I told, luckily, Touchwood, that something in the world has to happen for crude to fall. And that has happened, right? Something has happened. Of course, I am not saying that we are at the bottom of the crude. There can be another shock. And I already am seeing Brent is up 5%. 93, I think. So it might go up, but you cannot afford to have a very high energy prices staying there for a long time. It can stay there for 15, 20 days, 1 month.
But no, yeah, exactly. But normal parlance, completely agree. I'm just saying right now it's just so difficult to predict.
Absolutely. That's why I'm saying
this way for a long time.
That's why it's not a structural market. You have to buy on dips and sell also.
By the way, I read a note yesterday. So I just ending this conversation here, but I read a note yesterday. It was from one research house, global research house, which is saying that based on the fact that oil fields are now at the end of their life cycle, and removing or extracting crude is going to be so difficult, their prediction, I don't know how true or false, their prediction is that by 2030, oil prices will be $500 per barrel. $500 per
Hopefully
barrel.
by that time we figured some other way.
Exactly.
Maybe Venezuelan oil will come into the market in a big way.
By 2030.
Yeah.
Of course, you wanted to make a point.
Yeah, one quick point on this one. See, Neeraj, you rightly pointed that sometimes, fundamentals and technicals in the wake of news flow just go out of the window. Completely agree. And that is why the third element becomes very important, which is the trading strategy itself, something that we alluded to yesterday, which is, how you approach trading. You go out and speak to any investor or trader worth their salt right now and ask them कि ये level पे बेचोगे क्या? Correct? Everyone's going to say the same thing. 2 साल से पकड़ के रखा है, profit नहीं देखा, अब थोड़ा और loss देख लेंगे, but यहाँ नहीं बेचेंगे, right? So this is where your trading style, your appetite, your risk, profile, all of those come into picture. I wouldn't suggest selling at these levels. Even at higher levels, I wouldn't suggest selling. Yeah.
Okay, I think it's only fair we have a response from Kunal.
Absolutely.
Because on his comment, we had a lot of commentary coming in. Kunal, anything you want to say before we round off this conversation?
I think, as I said, Tamanna, overall the structure again for the markets, what we see at the Elliott wave, the structure still remains on the bearish side. I think in the last 1 to 2 years, we have already been seeing that buy on dips. But now again, this has become a sell on rise market in the last 1 to 2 months or so. So again, for me, 24,600 is what I'll be eyeing for. That has been the strong hurdle zone. Till the time we don't surpass that decisively, close above it, I don't see any trend reversal coming. Again, utilize pullback as an opportunity for either booking profits or exit. About 24,600, if we have a decisive close, then probably you can see some bulls coming back into the picture. So my sense still remains on the negative side. No clarity. We might consolidate in this broad range of 23,800 to 24,600 for next 5 to 10 trading sessions. But overall, if we have a rejection, that is what my point is. If we have a rejection around 24,400, 500 decisively, that will confirm the next leg is likely to continue on the downside towards 23,500. And the entire rally also, even when you look at the Nifty chart, which started the 61.8% Fibonacci retracement comes at 23,500. And we have not touched that. So probably we will be heading there, and then probably you might see from the lower levels the reversal coming in. So right now the view remains negative.
So this is the beauty of it. We bring you all kinds of views. Finally, you, the viewer, the investor, has to make your own decisions. I want to thank you, Kunal. I want to thank you, Kosh, and of course, Parag bhai, for joining in on this leg of the conversation on India Market Open. You decide what you want to do as the viewer. Now, in view of escalating tensions in the Middle East, the GCC hiring trend is in focus as well. We're going to be speaking with TeamLease on this. And remember, we put out a report yesterday on Iron Dome stocks. TeamLease was one of them as a company that could relatively be well protected. Before we have that conversation, let me go across to Puneet for more.
Well, thank you for that. Definitely a couple of key points that you highlighted. One was that TeamLease focusing on our Iron Dome portfolio. That is relatively 12 analysts covering the stock. All 12 have a buy call with a return potential of almost 85 to 90% on TeamLease as of now. So the last few months, last 6 months, stocks down 40%, and that's one of the key reasons why the return potential seems so lucrative at this point of time. And rightly said that GCC as a key trend has been emerging over the last 12 to 24 months. Now at a time where there's been a lot of volatility, especially in and around Europe, does the trend of a lot
much for Ms. Dati, but thank you so much for taking the time out and being with us today.
Thank you. Yes.
Did I get the second name correct? Is it Ms. Dati?
Yeah, it's Dati.
Dati. Okay, fine.
Yes.
Thank you so much. Please tell us if you believe that amidst all of this wake of developments and geopolitical developments, etc., that's happening, is your business looking kind of Teflon coated in that there has not been too much of a disruption in the inquiries, hiring activities, so on and so forth, across various sectors that you are catering to?
Well, so let me position it this way. So whenever there is uncertainty or the trends are not very clear in terms of whether the market is going to positive or not so much, typically companies tend to keep their permanent hiring on hold, and whatever requirements that they have on their resources side, they tend to use more of contract stuff. And those are the trends which we have already started seeing, especially GCCs. In fact, in the earlier comments, it's also mentioned. So over the last 6 months, the maximum amount of hiring that we have done for GCCs are coming from the European GCCs. And in fact, given the current situation, the number of inbounds and the inquiries also have gone up from the European GCCs. That's also because of the recent India-EU deal that got closed, and there is a much more interest in expanding or setting up their shops in India. And many of these GCCs, both US as well as Europe, are not restricting only to the IT talent, not just the niche IT talent. They're also looking for other specialized skills like financial analyst, actuaries, legal, HR, finance analyst. So they're looking for many of these non-IT specialized skills as well, which is a good trend. And also in terms of overall general hiring, I would say right now we are not seeing any kind of slowness in any particular segment as such. But at the same time, BFSI, what it used to be like 2 years back, right now the open positions are not at par with the same line. So compared to last year, it's slightly better in terms of the number of open positions and the hiring trend in BFSI. But 2 years back, compared to 2 years back where we were, it's still, I would say we are still at 70% of that kind of demand.
Got it. Can I just ask you to give us this information? I heard you say that European GCCs are actually making their presence felt in India. So would it be safe to say that last 3 or 6 months or the last 12 months, the larger portion of the GCC setup in India has been from European entities?
No, I didn't say that from overall perspective. The comment I made is specifically from teamlease perspective. So overall, the hirings that are done by teamlease in the last 6 months, the majority is with Europe-based GCC segments.
Ramani, hi, Alex here. I'm just trying to is that what is nearest in your rearview mirror takes precedence. And once the dust settles on this conflict, there will once again be a focus on the artificial intelligence story, the implications that it has for hiring in the software space. I'm just wondering whether you were already seeing a change in the way hiring is done at the base level. Are the numbers already indicating that? Because we're hearing murmurs across the world, not necessarily here in India, of people being laid off, of there being a change in roles, and individual companies, smaller, have already stated that they've done this already.
No, AI definitely is going to disrupt certain jobs and certain roles. So there is no question about that. We have already started seeing many of the IT coding, development, testing, these kind of roles are already a disruption. Like if I take our own numbers, so we lost almost 60 to 70% of the headcount that we used to have under these coding and testing profiles are already laid off over the last 2 years. But since we are a temp staffing company, wherever there is demand, we have quickly shifted the focus there and now started focusing on those AI, data analysts, data annotations, those kind of profiles. But definitely there are certain roles that are getting disrupted. But for the non-IT roles, like the typical sales and marketing and manufacturing, so these kind of roles, at this stage, we are not seeing AI as a big disruptor. In fact, we believe that it can help increase the productivity of the entry-level job seekers, because one of the biggest challenge that India faces is the productivity of freshers, especially when we talk about manufacturing and sales and these kind of profiles. In fact, AI tools may help these freshers to be more productive, take less amount of time for their trainings and inductions, make them immediately job ready after onboarding. So this is what we have been seeing at this stage, where AI is being used as an enabler for employee productivity in a large segment of jobs, especially at fresher level. But definitely there are certain segments where we are already started seeing the disruption, the number of open positions, or even the attrition backfilling has significantly come down, especially in white collar jobs.
Ms. Dati, just want to understand from the IT space, I know GCC is what everyone wants to talk about right now, but from the bread and butter, IT space and IT hiring perspective, what is changing? Because net hiring numbers year on year are shrinking for all the majors, isn't it?
That's very true. In fact, for IT services, the large number of jobs are typically into these coding and testing, debugging, these kind of profiles. And that's where AI has kind of disrupted. So there is a consistent drop in net hiring. And in fact, on these specific roles, right now, we are not seeing any kind of incremental demand coming from the IT services segment. So they are also right now revisiting their entire resource planning. And in fact, they're also under a lot of pressure to implement these AI tools and further optimize their existing employee productivity than adding incremental new headcount.
From your perspective, from the balance sheet perspective, from revenue perspective, how much of a difference is it making if the quantum or the volume of headcount comes down for IT companies? Is that being substituted or filled up with GCC demand?
Yeah. No, in fact, over the last 2 years, we have lost almost 80% of the headcount that we used to have with the IT services. Because the first one where they started cutting jobs when they started seeing the headwinds is contract staff. So our IT services exposure is now down to very minimal level. And over the last 1.5 years, we have significantly increased our exposure to GCCs and diversified there also into IT and non-IT as well. So I'm not seeing any incremental impact for us on the IT services front. In case if there is any recovery, that could be positive to us.
Okay. Okay, thank you so much, Ms. Ramani Datti, their CFO of TeamLease, talking about the impact of IT services and AI on jobs. 80% of jobs that they used to fill are gone. I think that really stands out for me, though there are now opportunities in GCC which will be seen. But let's focus also on real estate stocks. They didn't focus for a variety of reasons, but the Middle East unrest has also rattled the sector in the Gulf, and also raise the question on whether Indians in these countries, in Gulf countries, will come in and look at homes in India. Will they reduce those buys if they were already doing it? What is going to be the impact? Before we speak with Puravankara on this and more, let me go across to Mahima for more details.
Right, Tamana. So as you rightly mentioned, right, real estate brokers are now expecting a slowdown when it comes to real estate in Dubai, and unrest in Dubai is likely to boost residential sales in India, and that is something that analysts are expecting. About Dubai real estate, well, it gives a yield of around 5 to 7%, and that is why that is what makes it really attractive. It is compounded at a CAGR of 50% through 2020 to 2025. Now, Indians have powered sales in Dubai because they account for 10% sales in 2025, which is up from 6% in 2024. The unrest is likely to set back this kind of trend, and maybe those flows would come to India as a whole. Now, in terms of where NRIs can shift their investment in India, overall, NRIs could also benefit from the depreciating INR as well, and NRO balances have compounded at a CAGR of 13% since FY21. Now, major luxury markets in India that they could look at includes Gurugram and MMR regions with rental yield of around 3.5 to 4%. Bengaluru, Hyderabad have also displayed steady to robust pricing growth as well. Elara expects that high value projects will be preferred by NRIs in micro markets, and these will be launched in the next 12 to 18 months with a total GDV of around 70,500 crores is what they are expecting. Plus, for Puravankara especially, yesterday they announced a development project in Bengaluru with a GDV of over 1,300 odd crores. So all of this combined together is what puts this company into focus.
Okay, we're speaking with the CEO of South of Puravankara, Malana Sasalu is joining us. Sir, thank you so much for joining in, Mr. Sasalu. Let me just start by understanding the core question which is there right now. Is there any fallout you're seeing of what's happening in the Middle East right now?
Thank you, Tamana. Thank you for having me here. Global things that happen that are out of our control, and what we can do is how we respond to what happens. And as an Indian developer, I'm really looking at it positively in terms of the NRIs generally who used to invest in India invested big in Dubai and Middle East. So now there is an opportunity, end of the day, people need a home, and home is here in India. And I believe that it's going to be quite positive for us. We generally have around 12% of our total sales through for NRIs accounts for 12% of our sales. And we have a large development that's coming up in Cochin. So I'm a bit excited about this, even though the situation is unfortunate, but it's positive for Indian real estate, I guess.
This is the first time I've heard anyone in the last week or so saying, I'm a bit excited about what's happening. You did qualify it, saying that even though the situation is
as I said, that it is unfortunate and it is something that not in our control. Yes, any human loss and anything that's called a war. And
no, of course. But I'm trying to understand, have inquiries gone up in the last week or so? On what basis are you seeing this as an opportunity?
Not yet. It's our prediction at this point of time, because people will be still under shock and dismay at what's happening at this point of time. So I expect them to recover and really understand that home is here.
Home is here. I'm sorry, I'm going to ask you a follow-up on this, because this has been the big debate and question. People who have lives they are very happy with in these countries, in Gulf countries, will they have a knee-jerk reaction and want to move back, or will they want to have a safe haven home in India? And will that actually be seen? Or if in a few days things settle down, it goes back to normal? That's a bet you're taking. And your thinking is that they will want to have now at least a home in India if they're not moving back.
A large number of people are living there, right? And people will be in different, at levels of in their entire life, their life cycle. So people who have already bought homes, people are well settled, and people have made either Dubai or any place in UAE as their life. That's where they want to live. Maybe they would not consider. People who are young and people who are still in their 30s and still thinking about where to live. And I think those are the people who are going to get attracted to this opportunity.
Mr. Sasalu, just a quick question on the impact on raw materials, because we've seen very sharp spikes and, of course, volatility in the underlyings as well. So crude, just as an example, having hit that 119 odd mark, and then now as we're speaking, it's back to about 94, 95. I'm talking about Brent here. So that's an impact that you will see in cement, in various raw materials that you're using. So will you allow for a little bit of time to go by to settle things before you bite the bullet and acquire at higher prices? Is there likely to be a slight slowdown in construction?
I don't think so. Basically, what it is that you're right. The crude went up to $110, and maybe today it's come down to $94 or $91 is what I saw. So these are all things that these shocks will definitely have some impact on the raw materials, because a lot of things that we use depends on petroleum products, and also the transportation and everything that we use has a lot of petroleum related prices. So it will go up a little bit, but I don't think that it has got so much of impact that we have to really think to reduce our operations. And also, it is not it's a real estate company that we are not blessed with that kind of an opportunity where we can just make changes, twists and turns as quickly as the things change in the world. We have to be going with a long-term vision of what's happening in this country and where we are going. As you can see that everywhere else, there is so much of disturbance, and India continues to do well. And just now I heard Ms. Dati talking about it we continue to chug along because of our ability to consume, and as a potential as a country to consume is so large at this point of time, and over the next 20 years in any which way that we will be doing. So these are all on the way. You will find some little bit of obstructions, and we should keep moving.
I'm glad you listened to that conversation. Just another question, and since you're talking about long-term implications, perhaps you're not going to be able to see that immediately. But the sense is, and the worry really is, that the south-based markets in the metropolitan cities will get impacted if there is an impact in the way, or if there is a change in the way that IT services are provided, in that you will move from a bench strength model to a delivery-based model, you won't have a requirement for as many people. And so the implication is that those people will no longer look to buy the properties that they have bought in such large numbers over the course of the last decade and a half. Is that something that worries you, Mr. Sasalu?
At this point of it is not. It is not. Of course, there is that a huge talk about what AI can do to the world, and the readjustment of the jobs is what I call. As I was listening to Mr. Nandan Nilekani, and what he was saying is that just because the steam engines are not there, it does not mean that we are not using coal anymore. It's what an analogy. So it's what happens is that even though that this whole AI has to be implemented. If somebody has a big bank has to implement the AI, even to set that data up for usage of AI generates multiple levels of jobs that needs to happen. So yes, in the short run, there may be a little of disturbance, and I see this as a great opportunity. And in my experience, that every time there's a technological change, we've only seen progress, only more jobs are generated. So we've been seeing from printers to computers to internet, and whenever we had this kind of thing, that people in the short term will have the fear of losing jobs. But in my opinion, it's just a readjustment. So we are going strong as real estate developers.
Speaking of artificial intelligence, data centers, is that something that you're pivoting towards, or managed offices, specifically data centers? What's the plan?
We're not really there yet, and of course we are exploring the possibilities. We are big in commercial development with around 2.5 million square feet of portfolio in Bangalore. But as data center business itself, data center business has commercial real estate, and it has got energy, power, and it also has got technology. So it's quite a number of things come together. So we're not there yet, and in the future that we will be looking at it, because that's the way forward, with the country saying that the data sovereignty, the rule that we have made, that data that's made here must be used here, and I believe that it's a great opportunity we should look at.
I'm just wondering, in terms of demand and where it's heading, you just answered the question that you're not worried about IT, etc. But overall, AI is going to cause some loss to jobs. We're already seeing some impact of that. Are you seeing real estate prices maybe rationalize a bit going from here in your region?
I don't call it price rationalization, and yeah, maybe it's a price rationalization. Will always be better than what the inflation, and maybe the inflation is setting at around 6.2% or whatever. So we've always done better than the inflation, right? It's if you look at the job losses, what we are talking about, the last year alone, for the year that is going by, we have leased the highest amount of office space. Who's going to lease the office space if people are not coming to office? It's definitely the human beings are getting into the office, and Google took some 3 or 3.4 megawatts and 1.8 million square feet, and I understand that there's another 1.8 million square feet request for the proposals are going on, which means that Google is at the center of artificial intelligence, and if they are saying that we don't need more people, and why would they take more space? And so I'm quite bullish about it.
No, clearly you are. So, I mean, you're in the business, so you have to be bullish. But I'm just asking you about the trends that you're seeing. And in terms of pricing, are you seeing any difference in residential or commercial?
I didn't see any change. In fact, that we are where we are, and of course that whatever we saw over the 2022 to 2023, 24, that the price went up quite significantly, and I think we will not see that kind of price rise, but it will hold up and maybe doing a little better than the inflation. And as I said, that I'm bullish, and hopefully I explained the reasons for my being bullish.
Fair enough. You have every right to be bullish, and I think it would be frightening if a top CXO is, very bearish about their business. But I think it's uncertain times for large sectors, and maybe real estate as well. And you've seen that up and down in how the stocks have been behaving. That's the Puravankara view coming in. I just want to do a quick Brent check and a quick market check. And Brent is something that we need to track very, very closely at this point because that's really where the story lies, right? Back at 94.51. So you were as low as 88. You're now at 94.51. As far as the markets are concerned, you have you're staying put, about 0.5% up on the Nifty off its highs, but above the 24,100 mark. IT is the only one that's not really performing today. Banks are making some sort of a comeback. I wouldn't say it's an absolute sell rapidly on rise kind of a scene. So that has, that could give you some reprieve in this market. It's not as if the moment there's an uptick, all investors are coming in and selling in and taking every opportunity to exit. Consumer durables doing well, but that's largely Dixon that's pulling up that entire space, and Dixon as well off its highs of the day, still about $400 up. We'll take a very short break, but we're coming back with all our large conversations. We're making an attempt to get the best voices on geopolitics over the next few days because everyone wants to know what's going to happen next. And after the break, we're speaking with James M. Dorsey of S. Rajaratnam School of International Studies to understand and make sense of all the statements around the Iran war.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
where stories are shared, ideas are exchanged and culture takes center stage.
जब देश पे हमला होगा तो सब एक।
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
Welcome back. All right, we are trying to get you the most astute geopolitical voices on the show, and at 10 a.m. every day, we'll speak with someone who can help us understand what's going on in the world, simply put. James M. Dorsey joining in today of the S. Rajaratnam School of International Studies. Mr. Dorsey, thank you so much for speaking with us. A lot of developments in the last 24 hours. I will start with them, and a lot of them emanating from what the US president is saying, claiming that the war will end sooner than he expected. They're pretty much done, and they will ensure that the Strait of Hormuz stays open. Is it likely that he can push through on these claims and we will see a quicker end to the war?
Trump will probably unilaterally declare victory. The problem with that victory statement is multifold. One, it takes three to tango in this case. With other words, the United States, Israel, and Iran. Israel may very well want to push ahead with the war, irrespective of what the United States does, even though it will be lobbying for the United States to stay in the war. Iran, for Iran's survival of the regime, survival of the Islamic Republic is victory. And that will make Trump's unilateral declaration ring hollow.
Mr. Dorsey, I just want to understand from your lens the moving parts geopolitically beyond the entities that are involved in the war. And you've spoken about it in terms of three to tango, but you have the countries in West Asia, you have various trading partners, you have Europe, and you have the political scenario in the US itself ahead of the midterm elections. All of these could have a bearing. So how do you see that playing out?
Well, one reason for Trump to unilaterally declare victory is the fact that this is having a backlash in the United States. A majority of Americans does not want to see this war. In addition, they're feeling the effects of the war at the gas pump. And that's not a very good situation for a president who is already running low in his performance ratings in an election year with the midterm elections coming up. As far as the Gulf states, but also the larger international community, they want to see this war end now. They never wanted to see this war begin. And so the Iranian strategy has been primarily directed at increasing the pressure on members of the international community, particularly the Gulf states, but also Europe, in the hope that that would generate pressure on Trump to end this war.
Mr. Dorsey, in some sense, there was some people argue it's an uncalled for attack by Iran on the GCC countries. Yes, they wanted to make a point because these countries have US bases or installations or what have you, but a lot of them were not direct participants in the war. What's the aftermath of something like this? Because at one hand, people are saying GCC countries would disassociate or associate themselves less with the US and the US investments as well, because US left them high and dry on defense. But two, parallelly, Iran was the one who attacked them in the first place.
I think, first of all, one has to understand that Iran faced a choice at the beginning of this war. And that choice was to be defensive or to be offensive. Keep in mind that there are no US or Israeli targets within the borders of Iran. There are no targets close to Iran as such that are purely US. So Iran had if it was going to retaliate rather than try and would have been unsuccessful in trying to fend off the attacks because its military infrastructure, its air defenses aren't such that they could have done so. Its only option was to attack targets in the Gulf states, potentially also in Turkey and in Azerbaijan. The problem with that is that it didn't restrict those attacks to US military facilities. They included hotels, residential towers, airports, energy facilities, oil production facilities, water desalination plants. And that's really become a problem. I think, though, at the end of the day, what you will have is the United States, the Gulf states moving closer to the United States because they have no defense alternative. There is no one that can replace the United States, nor are they capable in and of themselves to defend themselves against Iran. But at the same time, there is anger in the Gulf states. Anger not only against Iran for attacking them and drawing them into this war, but against the United States for dragging them into a war they did not choose for. Keep in mind that the Gulf states had lobbied frenziedly in the run-up to this war to prevent this war from erupting.
Yeah, that's a fair point. Mr. Dorsey, the other aspect is of crude. One of the one line of thought is that when facilities around LPG, crude, etc., are all shut off, they take a fair degree of time restarting. And while the world was in surplus oil supply scenario until this conflict started, that may not be the case going ahead. You may or may not be a crude expert. Forgive me for not knowing that. But if you have some thoughts on this, would love to know. Sure.
I think that Iran trying to hit the energy facilities in the Gulf was key to its strategy. At the bottom line, Iran's strategy is to increase the pain of the international community and the Gulf states when it comes to access to oil and gas or the ability to export oil and gas, and that in turn would also have effects on the American public, and combined would increase the pressure on the United States. So this was a price that Iran was willing to extract no matter what.
Mr. Dorsey, just trying to understand what's happening on the Iranian side. And you have written extensively about the new supreme leader, Mojtaba Khamenei. That's the Ayatollah's son. He has lost his father, his mother, his wife, his daughter in the American and Israeli strikes. Is he going to be in any position to find a way to halt this war? What's happening on that end? Because we're hearing a lot of what the Americans are saying. What about the other side?
Your guess is as good as mine. Having said that, he has a government experience. Or let me put it differently. His appointment was an act of defiance. It was a demonstration, as far as the Iranians are concerned, of resilience, of regime cohesion, of resistance. He is a man who's never held public office, but he has, for all practical matters, in many ways run his father's office when he was supreme leader. He was his gatekeeper. He was his political broker. He's a man who has very close ties within the clerical class of Iran, within the military and security establishment, including the Islamic Revolutionary Guard Corps, or IRGC. And he has, as such, he brings a lot of credibility to the office. His initial statements are going to be hardline. There's no question about it. And he's going to emphasize those issues of defiance, of resistance, of resilience. But if anybody, and it's a pure guess, if anybody is willing not to submit to Donald Trump's demands, but to seek some form of negotiated settlement, he is someone who will be able to carry that off because he has the legitimacy also of his lineage. If you look at the pictures, he wears a black turban. That is a sign of being a descendant of the Prophet Muhammad. And of course, he's his father's son.
Mr. Dorsey, I'm wondering about the populace and some of the images that came through just hours back about the mass gathering that took place for the announcement of Mr. Mojtaba taking charge as the supreme leader. Seems to indicate that there is popular support as well. But having said that, in the run-up to this conflict as well, there was suggestions from outside in that there was an inside push for a change in the regime. How much will that local populace play a role in what ultimately comes to pass at the end of this conflict?
One of Mojtaba's drawbacks is that he's not a figure who's been in the public eye continuously. He's not a man who's been out there meeting people in society. He's not a man who's held speeches He's not a man who's given a large number of media interviews. So for many within Iran, he's an unknown figure. Now, having said that, there is no question that a majority of Iranians would like to see a change. Some of them, whatever percentage that may be, want to see regime change. Some of them want to see social and economic reform, and particularly improvement of their living conditions, which have deteriorated significantly as a result, on the one hand, of mismanagement of the economy, and on the other, because of US sanctions. But there is a significant portion, whatever that may be, many estimate that at 20 to 30 million people, 20 to 30% of the population, which is committed to this regime and to the Islamic Republic. 20 to 30% of the population is anywhere between 18 and 27 million people. That's a substantial block.
So, Mr. Dorsey, of course, it would be foolhardy to try and predict what's going to happen. But if the stated goals as of this moment of the US is a regime change, that Iranians come in and choose another leader, and of course, Mojtaba Khamenei doesn't seem to be acceptable, is that likely to happen at all for this war to cede, or will new guardrails have to be drawn on what's acceptable to both sides?
Well, first of all, I'm not sure the United States would like to see regime change, but I don't think that is a sine qua non for the United States to end this war. It is a sine qua non for Israel. It wants regime change, and it's determined to achieve that. Trump needs to be able to declare a victory, and the longer this war lasts, the less likely he is going to be able to do so. And so I think what you will see is, as we talked about earlier, a unilateral declaration by Trump, which will be challenged at least by the Islamic Republic itself and potentially by Israel.
Off-ramps might be difficult in such a scenario. Let's see how it shapes up. But Mr. Dorsey, this was fabulous talking to you today. We hope to be able to talk to you soon, and hopefully that soon comes in after the conflict is over, because for peace sake, we need to see the end of this sooner.
Thank you very much for having me. I enjoyed the conversation.
Likewise, lovely talking to you. Well, that's James Dorsey, and he's written, as Tamanna said, extensive pieces on the figureheads in Iran as well, in some sense, and therefore, great to get his view. Okay, the markets have cooled off as well. So it's not that everything is in a rah-rah mood. The question only is how to approach a scenario like this, wherein there has been a bit of a correction, world markets by and large, because of the conflict. And could the first sounds of the ending of the conflict lead large investors to deploy capital into India, into other markets? Swanand Kelkar, managing partner of Breakout Capital Advisors. They advise over $1.5 billion of capital into India and other markets. Joins us right now in our studios. Swanand, great having you. It's been a year and a half that you've been here, but thank you for joining in.
Thank you, Neeraj. This is always a pleasure.
The pleasure is entirely ours. So Swanand, we were just talking to James Dorsey. He's a great thought leader on what's happening in the Middle East, and likely that there need to be off-ramps, but difficult to get them right now. If this conflict doesn't show signs of ending in the next 1 week, would you use the valuation argument to deploy capital, or would you be sitting on the sidelines waiting for the event to end?
So that's an interesting one, right? So thankfully, you have had an expert who's told you all about what's going on. So that sort of saves me the questions on Iran and oil and all those things.
No, we'll still ask you what you think.
For sure.
But let me tell you how we are thinking about it, right? So even within India, I think if you just look at the big picture, comparison versus emerging markets. So we have two funds in India. There is we have two funds. One is an emerging market fund and an India dedicated fund. So before this started, we had printed 2 years of single-digit earnings growth in FY25 and FY26, and we were being generally asked to pay 20-22 PE for that type of an earnings profile. If you look at emerging markets, I think we'll probably have a 20% plus earnings growth here in 2026, and we were asked to pay 12 PE for that multiple, or for that earnings growth. So in that sense, the the priority was clear on where you are going to allocate incremental time. That was the starting point even before all this started. And I don't think that has changed in a material way just because in a week's time. We are not thinking about what happens to the conflict, what happens to oil prices, etc., because we are deploying money for at least 3 to 5 years. Over the past many years in India, I would say that we have looked at many stocks and businesses and said that, hey, listen, this is not the price that we want to engage in. If this price comes to X, we will definitely consider this as a stock. Now, the fallacy that everybody has as an investor or a fund manager is that a price doesn't come to that level that you want it to on its own. It's generally accompanied by something which makes you stop in your tracks and say, hey, no, I need to wait a bit more. So what we have done over the past 1 week, right? I mean, I think that's important for some of your readers to, or some of your viewers to also know, is that we have not paid too much attention to the screen. We have said that, okay, we have probably looked at hundreds of companies over the past 3 years in India and overseas. Are some of them coming at prices which are attractive? And we're deploying in trickles. We are not deploying money lump sum because this is an event, you don't know what the end to that is. So that is what we have done, not only in this bout of volatility, but generally in all bouts of volatility. There is this person in our office who does not understand stocks at all. We look at a stock, it's at 500. We say that we would be interested in buying this at 350. When it's at 350, he sends an email to the entire system saying that it is at 350. What do you want to do about it? I think that's a very good way of thinking about it because you tend to get lost in the screen if you keep staring at it, and then somebody has to respond to it. Because it kind of, now you are being publicly asked this question, that the stock price is 350, what are you going to do about it? So that's what we have done, really speaking, over the past couple of weeks.
I'm wondering who is this person in your office?
So he deliberately is a person who's not part of the investment team,
okay,
who just runs an Excel.
As long as AI doesn't have his job anytime soon. No. Just on that point, and I like the thought of having focus no matter what's happening. But that confidence doesn't seem to be coming in on fundamentals in India.
That's right.
If on one day we say, okay, this is going to be behind us, what's happening in the Middle East, in Iran, etc., then we come back with, oh, but India doesn't have an AI trade.
Yes.
Does that bother you?
So it's a good question, right? So let's take this again. This conflict seems to be occupying a lot of our mind space. Just let's go a couple of 2-3 weeks back. As I said, the big picture construct in India versus emerging markets was clearly skewed towards emerging markets, as I mentioned. Now, there are several reasons why people attribute this underperformance to, but I think the core reason is that the earnings growth versus what is available elsewhere is not as attractive. That is the simple answer, right? And once that is happening, then you have ancillary, you start to think about ancillary irritants like there is no AI play, we do not have commodities, foreigners need to pay taxes. All these things are not new, really speaking, right, from an Indian standpoint. These are all, I would say, kind of backfitted answers. The core issue is that you are being asked to pay 21, 22 times PE for a 10% earnings growth. And that is just hard to pay when other parts of the world are looking reasonably attractive. I think that's the core FII issue as well. So I'm sure at some point in time, why are FII selling? And I have had this discussion with N number of asset allocators. So I think the big hurdle is that, yeah, we understand the long-term story, great domestic market, there are enough and more themes. But for now, I need to cover my North Asia, which is Korea, Taiwan, China, not so much China, but Korea and Taiwan. And also India is not a beneficiary, unlike some other emerging markets, of the commodity event falls. So in emerging markets, sorry, just to digress a bit, there are two broad stories which are playing out. One is the AI beneficiaries. So the capex spending from the hyperscalers in the US, who benefits within emerging markets is the foundries, the memory, and all those things. And the other beneficiaries are countries which are net exporters of commodities, because commodity prices in general have done well, and that generally trickles down to the domestic economy over time. So if you look at South Africa, if you look at Brazil, large parts of Latin America, all that has done well. The AI beneficiaries in North Asia, which is Korea, Taiwan, they have done well. Unfortunately, India does not seem to be at the intersection or even partly in any of these places, which is why the FII interest could be at the moment lower. But the core reason which I mentioned, let's say we are here a year later and India has printed a 15, or we can see a 15, 17% earnings growth. I would be surprised if the FII flows would still be negative.
But so the ancillary reasons still don't change, because I don't think in 1 year we'll become an AI beneficiary or the commodity boom either. So where does this possibility of this 15 to 17% earnings growth come? Do you believe that, or is that the argument you're making right now?
No. So if you look at, so again, going back 3 months, right? Valuations are cheaper than 3 months ago. At least the growth green shoots are better than they were 3 months ago in India. Right? I mean, one of the biggest numbers there is the credit growth number, right? We were languishing at 10-11%. That number is now up to 13-14%. Given the amount of financials in the index, that number will lift the index earnings growth. Autos in general are putting out decent numbers, especially after the GST cut. So these are two big parts of the index which seem to have a reasonable lift coming through, and that should eventually feed through into the overall earnings growth number. So that is one part. So every analyst starts the year with the next 15 or the next 12 months number of 15%. So I know that's an old joke, but at least on the ground, looking at the high frequency indicators, it's not all gloom and doom. I mean, there are enough places where there is growth which is improving from what it was over the last 2-3 months. And valuations have corrected a bit. Have they corrected enough? I think that is, your guess is as good as mine, but they definitely have corrected from what they were 3-4 months ago.
Where are these pockets where you're seeing positivity coming in? Which spaces in the Indian ecosystem right now are you watching? Because one part, we've spent some time talking about FIIs, but as far as domestic investors are coming, they seem pretty much locked in and committed.
Yes.
So for them, where are those opportunities?
I think that's the good part of it, right? One of the reasons why we are at a 2021 P is because Messrs. Vasan and Navneet Munot have been continuously deploying capital in this market, and thank God for them. I mean, I wrote this in my year-end piece that you should count your blessings sometimes. As I said, right, the two broad sectors where I'm seeing in general an inflection upwards is credit growth and autos in general. Those are just broad sectoral.
So banks and autos.
Banks and autos are generally looking okay. When credit growth used to pick up in the past, we used to generally get excited, but this time around there is a sort of a nuance there that even deposit growth needs to pick up in line with credit growth for you to be able to capitalize on that number as an investor. So that is something to watch, but both those places looking reasonably okay. Within autos, we've seen an uptick in commercial vehicles after, I think, I don't know how many years. And it's been the past 5, 6, maybe 3-4 months even, and we remain reasonably optimistic about that part. On IT services, I know again a contentious issue. We feel that the baby has been thrown out with the bathwater in certain cases. We are hopefully trying to look for those babies and get some of them.
Such a hard hunt? Because there are not so many.
No, so I'm not very clear that, so there are collateral damage candidates to, what's happening to IT services. I think we are first focusing there. Things like OTAs, things like maybe consulting companies listed overseas but have bulk of their workforces in India, etc., who seem to have been painted with the same brush as a normal software company. The issue with the Indian software companies is that if you look at similar business models overseas or in emerging markets, they're at 12 PE, they're at 10 PE, right? Which, as somebody who looks at the whole swath of markets, that's a question I ask myself, that you're essentially playing the same investment thesis. Do you still want to pay 20 PE for it, or do you want to pay 10 PE for it? So that's where I'm stuck on the plain IT services model. But there are some interesting models which have also gotten damaged because of, this whole vague worry that AI is going to eat up everything out there. So we are looking at that space. The one thing which you asked, the last thing I'll say, I know you have a few more questions, is does India benefit at all? I think we'll benefit from a bit of the tail end of that AI thing, which is the power and data center related investments and companies. But apart from that, we do not have some of the things that are leading the AI.
What about energy, Swanand? Because that sector in the last 12 months has gotten massively derated.
Yes.
Despite the fact that presentation after presentation from companies seems to point towards a fairly strong earnings growth, fairly strong cash flows as well. So why the derating, and are you using the derating?
So good questions again. So if you look at just the electricity consumption number, right, that is still broadly in line with the real GDP growth number. Right. So that hasn't picked up. We had an early monsoon last year, etc., etc. All these data centers that we are talking about will probably add a percentage or two over the next 3 to 5 years to the overall electricity demand growth. What is more exciting in that space, I think, is the capex plays around that. Because there is grid renewal, you need to hook up all the renewable energies now into the main grid, etc. So I think we are trying to look at those opportunities. Also, this grid renewal, which is a theme, is not just an India theme. Go to any place across emerging markets or even the US, I think every grid needs to be renewed. I mean, you have outages in places like Europe that, the Heathrow incident, etc., etc. So that is something that we are looking across emerging markets, including India, that can we find some good capex place there?
We've not spoken at all about the Middle East crisis. So as we wrap up, I'm going to ask you from the point of view of the might of NRIs in these countries. So a few days ago, the whole conversation was, are Dubai family offices selling? And are they managing to shake up what's happening in Indian equities? The reverse also may be true. Are we sort of underestimating the contribution of non-resident Indians to equity markets? And when these regions shake up, so do their confidence.
Sure. I have no data to say yes or no, but it's a valid question. I think there are a couple of transmission mechanisms for this to happen, right? At a big picture level, the remittances, which is a big bulwark of what India gets from the Middle East and cushions our BOP, I think that can come under pressure if this sustains for a fairly long time. A lot of people have been evacuated, people are leaving the country, going back to their homeland. Can that impact remittances and hence the currency and hence the BOP situation? That's a question. We are just 8-10 days into this. Are the family offices are people who are in Dubai, are they selling the Indian equity markets? I really don't have an answer to that. But a statistic which I find interesting is that across the globe, the retail ownership or non-institutional ownership of stock markets has gone up, be it in the US, be it in India, be it in most other large liquid markets, even in a place like Korea. So that has a different dynamic than how an institutional investor behaves sometimes. When a retail investor behaves differently a bit than how an institutional investor behaves.
Yeah, so we might see that play out. Interesting aspect. And I think the remittances aspect is one which we haven't fully understood.
We haven't. No, just to clarify, I mean direct retail ownership or retail ownership through mutual funds?
I mean direct retail ownership.
Direct retail ownership across worldwide has gone up.
So if you take the world market cap and if you split it the way we do in India, that how much is promoters, how much is foreign institutional, domestic and retail. So that last segment, the world over has gone up.
Interesting statistic. Okay. Well,
totally
not just
cool.
India.
Thank you so much, Swanand, for coming in. This has been a fantastic chat. Hope we don't have to wait another year to have you back in our studio.
Thank you so much.
Too much happens in a few weeks to wait that long.
We don't have a lot to say, unfortunately.
Right. So that was Swanand Kelkar for you. That's pretty much a wrap on India Market Open. We're seeing an uptick in Brent, but markets holding on for now off their highs, of course. But stay tuned. All the action up next on Ask Profit.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bazaar ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
First India tour in your city. Rock on with Shankar Ehsaan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the more.
Hello and welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani and with me is Puneet Zaveri. I think Puneet's smile is telling us that some recovery in markets is at least, that is what we're seeing. The Nifty 50 right now is up by about 0.6 odd percent. But you know what? The India VIX is also up by about 12 odd percent. Not as much as what we've seen in the past couple of days. But volatility still, remains as a question mark. So that's something that, you need to keep your eye out for. But the bank, Nifty Bank is also doing fairly well after the kind of free fall that we've seen yesterday in both private as well as PSU banks. PSU banks more, of course, but today is seeing an uptick of around 1.4 odd percent. With regards to where, the counters on the Nifty go, let's try to pull up the heat map. It's a good day. If we take a look at the entire heat map, there's lots of green at least. And the red, the counters in red are also not falling as much as what we've seen in the past couple of days. There's Shriram Finance, which is gaining up 5%. Crude prices now correcting is positive for something like an Interglobe Aviation, which is up 3%. Today, in fact, Parag Thakur was talking about how it is now available at an attractive levels of just 15 times forward P. So that's something with regards to where Interglobe Aviation goes. Ultratech, M&M, Asian Paints, all of them doing fairly well in that range of 2 to 3 odd percent. On the flip side, Infosys, Tech Mahindra, some IT names seeing some correction. ITC, Bharti Airtel, some other counters in the red. But with regards to where some sectors go, let's try to pull the heat map up for sectors and see as to what sectors are doing in trade today. Almost all in the green except for the Nifty IT, which is seeing some correction down by about 0.6 odd percent. Defense also seeing slight bit of correction down by about 0.4 odd percent. But the Nifty Auto leading the pack 1.6%, and Puneet would be happy to see that. Your bank, PSU bank, pharma, rural, etc. are also doing fairly well. But advanced decline ratio will indicate as to how the broader markets are doing. Let's try to pull that up. There you go. Finally, at least a 4-digit number.
The number is reversed now.
One more zero added to that number. And that gap is widening, which is a good thing to at least look at. So that's how the broader markets are doing.
Yes, most certainly. I think yesterday we were at the advances side, the 378, 360 advances, and now that has finally reversed. So that's a key positive. While of course there is a bias from my side on the Nifty Auto, the key aspect is that it's a space that has done well, and buying has come back into that, at least for today. And you had a lot of individual movers. Brokerage firm initiated coverage on Uno Minda today, and you see all those constituents, right? Ashok Leyland has done very well for its investors, so has Mahindra and Mahindra. Both are the top gainers for today. Tata Motors continuing that momentum. So is Eicher Motors as well. So after just a one-day streak, and here is where the divergence comes in for the Nifty Auto versus the PSU Banking Index. Both have done very well. And today there's a clear divergence there. Let's also look at the Nifty Metal very quickly because that has also been a space which has done very well. Started to see sell-off because of the broader market. So that is yet again come back into the buying as well, up 1%. But the individual movers, BSE 500 very quickly. I spoke about the auto pack with Uno Minda had a new initiating coverage note. Minda Corp had a new joint venture. Apart from that also some similar names like Tejas Networks, Reddington as well as RCF. The value players come back into the market now in terms of at least some favor back in that sense, and over in the declines not too many, so that's a key positive as well. But let me welcome in at this point of the show Swati Hodkar. She's the EVP Technical Research Analyst at Nirmal Bang, as well as Astha Jain, the Senior Research Analyst at Hem Securities on the fundamental side. Ladies, thanks so much for joining in. Very good morning to you, and a belated happy Women's Day to both of you as well. Let me start off, with the first question on today's show, and that's coming in from, Sunil from Pune. He's asking a question on Shilpa Medicare. He holds 142 shares at 139 rupees per share. Swati, he's sitting on a profit of almost 28,000 rupees and asking what he should do now with this particular counter. What would you recommend?
Good afternoon, all of you. Definitely the view is positive. He bought it at very attractive levels and earning a handsome of money at the current levels. The setup is positive. As of now, we believe that the stock manages to take a support of the 300-day moving average, and again it's heading on the northward directions. This rally is likely to be extended towards the immediate target, will be 380 and beyond at 420 levels can be seen. So I will suggest to hold on your long positions as long as Shilpa Medicare holds the 300 rupees on the downside. So maintain that as a profit stop loss and carry your long positions for a target of 380, then 420 levels can be seen very soon.
So that's the view on Shilpa Medicare. The next question that we have is on IDFC First Bank. This is from Mansi, who's writing in and wants to know a view on this particular counter. She's purchased at the levels of 83.8. Should I buy more or average at the current levels or sell is the question. Astha, very good morning to you. I'll come to you on this one. What's the view like? There's one more fraud that was reported yesterday of around 116 odd crores. Overall, fundamentally, what is your view?
Hi, good morning to all of you. So talking about IDFC First Bank, the kind of news flow which we are getting in are not up to the mark, and that is why we are seeing this stock is continuously showing downward momentum. Now, what I believe that apart from the negative news flow which is happening around the stock, I think even the financial performance was not very, very strong, which we have seen in their numbers as well. So I think if I take the combination of both these, I'm still not very much, optimistic about this counter, and has recommend to just hold for a long term, or either if anyone want to book partial losses, then also I'm recommending to book certain sort of losses, but enter into some good kind of a bank where we will not get these kind of news. So I prefer I'd say bank over IDFC First Bank at this point of a time, and recommend even booking out partial losses, or just stay here for a longer duration, because in the shorter duration we can see some more pain in the counter.
That view, Astha, and welcome to the show. The first caller for today, it's dialing in from New Delhi, and Sanjay has a stock query for us. Sanjay, good morning, welcome to the show. What's your query?
Very good morning to you, and thank you for taking my call. Last month I missed out this Indian bank at the level of 900, and this time I got an opportunity yesterday, and I bought 500 shares of this Indian bank at the rate of 905.
Okay.
And I was little delighted today morning when I saw it is somewhere around 910 or so. And my view is very shorter period. Would I be able to get 950 levels in this, or what would be my stop loss in such purchases? Please do guide me.
Got that view, Sanjay, and glad you are in the gains for now. But Swati, on Indian Bank, at the start of the month of February, stock was trading very close to the 980,000 mark. What would you recommend as a short-term view on the stock?
Short-term view is positive also because the counter has manages to take the support of a 50 days moving average, and we are seeing some bounce back rally. Yesterday we have touched those levels, and today we are getting a bounce back rally. Since the view is very short-term period of time, I will suggest to hold on at the current market price. 900 is the immediate support levels. As long as it holds that levels, I believe that the stock has a potential to reach up to 940 levels. So I just hold your long positions by keeping a tight stop loss of 900 rupees for immediate target of 940 rupees on high side.
Okay, all right. So that's the view on Indian Bank. One more banking query coming in, and this is on IDBI Bank. Komal from Jaipur is asking that she's bought 1,000 odd shares at the levels of 107 from a long-term perspective. Is this a good hold? As such, she's sitting on a loss of around 7,000 rupees right now, but what's the view?
So regarding IDBI Bank, my idea here is to stay invested in this counter at least for some months, and then make any sort of decision regarding the exiting, because I believe the upcoming days will be good for the counter, and hence we are positive on this counter for a shorter to medium term perspective, recommending a hold with a price target of 105 to 110.
Okay. All right. We've got a caller coming in from Bengaluru. Mohan is calling us. Mohan, a very good morning to you. I believe you have a question on Vatek Vabag.
Yeah, I just bought 14 shares at the rate of 1,400.
Okay.
So, and I just wanted to know, in the Middle East, there were huge orders have been received for Vatek Vabag. So it is, for long-term perspective, can I add these shares for this, for long, to buy more?
Okay, got your question. Mohan, I'm not very sure of the Middle East exposure for this counter, but I'm sure Astha would have a view on this one. Astha, what is the view on Vatek Vabag, and is his analysis correct with regards to its exposure in the Middle East?
See, yes, the order book is strong, first of all, because they have got the order book of around 15,000 crore. And the importance here is this order book is around 4.1 times of TTM revenues of this company. So definitely a good and a very strong order book they have. Apart from that, what we believe that this company is well poised to move at a CAGR of more than 10% from FY26 to FY28. So we believe that the growth rate will going to be very strong, along with the strong order book which this company is having. And I believe that one can stay invested in this counter for a longer term perspective, and even buy on dip strategy can also be applied to this counter. Today being the markets, we are seeing the markets being very strong. So we are seeing a good momentum in the counter. But if any dips come in the down market, then definitely it's a buy on dip as well. Price target which we are setting for this counter is around 1,250 to 1,280.
Got that view, Astha, but definitely, the international markets are almost, 70% of its, order intake also in 9 months of FY26. So continue to monitor this stock as well. The next, query that we are taking in, and this one's an interesting one from Ramya. Now she has invested, Astha, almost 9 lakh rupees, and in terms of a portfolio allocation across 16 stocks, and she is down almost 25% in her portfolio right now. Now, we had asked her for a few stock names, so I'm just going to throw that to you. In terms of Suryodaya, Happiest Minds, Signed, the IT company, as well as India Mart. Now, all 4 of these counters actually haven't done well, right, Astha? So would you suggest her to exit either of these counters? She also holds stocks like Apollo Tyres as well as SBI, ITC. But in terms of just a very quick analysis, what would you recommend her to do, given that she is down 25% of an overall portfolio value?
So the kind of IT stock which the investor is holding is looking decent. See, if I talk about the IT stocks which she has talked about, I think one IT stock which she is having is Coforge, right? Can you just tell me the IT stocks?
Signed was the IT stock, Astha.
Signed and Happiest Mind. I'm sorry.
That's right.
So Happiest Mind and Signed, both these counters are looking good right now. So there is no need to get out from these counter as of now. In fact, she's holding India Mart as well, if I'm right with my memory. So in fact, India Mart is also looking good. Looking after the kind of market condition, I believe the fall is inevitable. But if horizon is longer term, then definitely one should stay invested in this counter and continue to hold the counters. I don't believe that there is any such counter which one need to exit. So right now, just stay invested in this counter is what I can recommend for the investor.
Okay, all right. We've got our next caller. Arvind Mohan is calling us from Bareilly. Arvind, very good morning to you. What's your query about?
गुड मॉर्निंग मैम। मैम मेरा क्वेरी है LIC के लिए। LIC के शेयर है मेरे पास 50।
ठीक है।
शेयर है 893 के रेट पे। अब LIC में मतलब LIC मार्केट को बचाने आ जाती है, पर मार्केट में LIC के शेयर को कोई लेने ही नहीं आता है। फंडामेंटली तो स्ट्रांग है, पर टेक्निकल बेसिस पे जानना चाह रहा था इसके बारे में।
ठीक है, मैं समझ गई आपकी क्वेरी अरविंद, एंड आपने आपका एनालिसिस बहुत अच्छे से किया है। मैं ये सवाल स्वाति से लूँगी। स्वाति, LIC के लिए चार्ट्स कैसे लग रहे हैं अभी? व्हाट इज द व्यू लाइक?
शॉर्ट टर्म ऑन द टेक्निकल फ्रंट लिटिल बिट कॉशियस है, क्योंकि लास्ट अगर अपन 6 महीने का भी डेटा देखोगे तो लो टॉप लो बॉटम फॉर्मेशंस में चल रहा है, विच इज ऑल्सो नोन एज अ डाउनवर्ड स्लोपिंग रेंज में चल रहा है। बट क्लस्टर जोन्स बना चुका है 780 785 के रेंज में। कल भी हमने देखा कि 793 से एक पुल बैक रैली हमें देखने आई है। ये बाउंस बैक रैली कंटिन्यू हो सकती है 840 860 के लेवल्स तक, जो कि एक 20 डेज मूविंग एवरेज के लेवल से वहां तक एक अपसाइड रैली हमें देखने मिलेगी। तो मैं कहूंगी कि थोड़ा वेट कीजिएगा, डेफिनेटली इसमें एक अपमूव रैली 840 860 तक आ सकती है। देन यू विल गेट अ चांस टू बुक योर प्रॉफिट्स एट द करंट लेवल। मैं कहूंगी कि होल्ड कीजिएगा, नीचे में हो सके तो 790 का स्टॉप लॉस रखिएगा एंड कैरी योर लॉन्ग पोजीशंस।
Got the view, Swati, and thanks so much for that. But the next question is on the defense pack. Paras Defense is what Anil Singh has on his focus right now. He's asking if it's the right time to enter at these prices. He's not mentioned the time frame, but Astha, would you recommend that?
So Paras Defense is looking good to us, and in fact we have already given recommendation on this counter to our clients as well. Now here the point is whether it is the right time to enter. I believe the kind of upsurge we have already witnessed in the counter, from there we have started witnessing some sort of a downfall. So it's better to wait for more downfall to come in and then make entry into this counter. Maybe 650 or 660 are some good levels where one can make fresh entry in. So right now I would recommend to make fresh entry at the lower level, because the kind of valuation the stock is enjoying right now is looking on the higher side as compared to its peer, and hence we recommend buy on dip strategy. So enter at the lower level.
Buy on dips on Paras Defense is the call coming in from Astha. But another caller dialing in from Bengaluru, and Swati has a stock query for us. Swati, good morning. Welcome to the show. What's your query?
My query is on ONGC.
Okay.
I'm holding 770 shares of ONGC at the rate of 275.
Okay.
So I'm at loss. Since oil prices are coming down, whether I should sell this stock or I can hold. Similarly, MRPL also I'm holding.
And Swati, is this a short-term buy, or did you buy it for the long-term on this news flow?
Actually, I bought it for short-term,
okay.
But I can even hold it for medium-term if can stock go up.
And medium-term would be roughly 6 to 12 months?
Yes.
Got it. But let me just go across to Swati only for this. Swati, on the technical side, ONGC as well as because it will take time to transmission these gains, and my colleague Somit has put out that there won't be any windfall tax if the price of oil keeps on rising. So that was a key positive on the fundamentals. But she's making a very valid point, right? With the oil prices coming down, anything on the charts that suggests that it can come back to 275 or higher?
See, the longer term view is definitely positive. ONGC, we are witnessing that even though the market has shown a lot of correction, this particular stock manages to stay above the important moving averages, say 50, 100 and 200 DMA, well placed. No wonder from the last 4-5 trading sessions, we have witnessed some sort of a profit bookings, which cannot be denied since we have seen a very good rally from 230 to almost 290 levels. So downside, it has a very good support around 255 levels. So I will suggest hold for some more time, at least for a 6 months period. You will definitely get an opportunity to book the profits at least 300 to 320 levels. So it's a hold from my end from the ONGC part.
Okay, the next one is from Biswajit, who's writing us from Kolkata. He's holding 200 shares of JSW Energy at the levels of 518 from a long-term perspective. He says, is it advisable to average at the current price, or maybe if it goes lower at lower prices? Asa, I'll come to you on this one. What's the view?
So talking about JSW Energy, I mean, this is a part of a JSW group, and it is one of the leading private power generation company in India. And they have got a very, very strong installed capacity. If I talk about their numbers, Q3 numbers were a strong number. And that was mainly what we have seen in the number was mainly driven by, the capacity additions which this company has done. And in fact, the growth was also very, very robust. What we are thinking about their, quality of the company is that their management is also speaking very positively, and they are talking about diversified growth in the pipeline which the company is having. So I believe that this company is well poised to move till the level of 550 or so. So idea here is to stay invested in this counter and target price can be set at around 530 to 550 odd levels. So stay invested in this counter.
Invested is the view coming on JSW Energy, but we've got our next caller. Sharad Sinha is calling us from Patna. Sharad, a very good morning to you. What's your query about?
Yeah, I'd like to invest in Indian Hotel or Indian ICICI AMC. Which one would be better at this point of time?
Okay. You are looking at this from a slightly short-term perspective. What is the time horizon?
No, for long term.
For long term. Okay. So, two very different stocks, Astha. He's asking about either Indian Hotels or ICICI AMC. Which one would your pick be between the two?
So talking about Indian Hotel, first of all, I mean, both these counters are looking good to us. And both these counters have their own set of relevance. Now, talking about Indian Hotels, Indian Hotel is looking very strong to us because what we have seen is the good set of number which this company has posted in the Q3 FY26. In fact, the numbers are looking very, very strong and kind of cycle which the company is into. In fact, the industry is into. Management is quite optimistic if you just go through their con call as well. So my idea here is that Indian Hotel is looking very strong to us in the long-term perspective, and one should remain invested in this if someone has this portfolio. Now, here the question is whether he has a choice to keep only one between these two. So definitely, I would like to go with the Indian Hotel. Although ICICI AMC is also looking very good to us, and we all know that this IPO has came just few months before. But the kind of valuation right now this company is going on, I think Indian Hotel is a better choice. So if anyone has to go between these two, then Indian Hotel is recommended. But as of now, I am bullish on both these counters.
Got that view, Astha. But time now to dive into the BSE F&O setup for now. And Sharad, as always, is joining us to give us exactly that. Sharad, over to you.
Well, thanks a lot for that. A relief rally is coming in today. After yesterday, we saw massive oversold positions coming across Bankex and Sensex. A sea of green coming in. And of course, the crude also reversal. We saw the biggest one in the history. M&M, Asian Paints, Ultratech, domestic-facing companies and even banks everywhere, there is a good buying happening. But what's not working is definitely the support of Reliance is not there, which was expected to be there today. And Tech Mahindra and Infosys, slight sell-off. Again, it comes back net-net, but the position is definitely there. Technical bounce is something which I would like to call this. Bankex also, the story remains the same. And interestingly, let's just pull out the constituents of Bankex to see what has happened. Yes, so Bankex is also trading in the premium and the stocks are also doing well. The VIX overall, which we are tracking, that has also dipped. Because of that, the macro factors are also improving. Let's see the long build-up stocks, which would be there in focus today. And of course, the list is on the higher side. Shriram Finance makes it to the list. It was around 3% in the opening and now it's jumped to 6%. Dixon Tech also showing a good up move and a good buying and fresh positions are coming in. Talking about short covering, we have KFin Tech. Interesting name from the capital market theme, and Petronet LNG, that's also up almost 4% odd. Long unwinding, let's see where the volumes are moving. That's Nalco and InfoEdge, nothing so convincing, but let's see what's there in the overall short build-up, and that's where KI Industries and Bharat Forge comes in. But net, the entire sentiment of the market is towards the positive, and very fresh positions are being built, especially in the longs right now. But this is just the first day. We might see a little bit of volatility towards the end of the session today.
Got the view, and thanks so much for that, Sharad. But the next question now, it's on Mahindra & Mahindra. Now, a viewer holds roughly 250 shares of Mahindra & Mahindra 3050, and that's Naveen. Now, he's asking whether he should continue to hold or sell out of this counter. He's not mentioned his time frame, Astha, but the February update did look positive both for its existing models of Bolero, Scorpio, as well as the 7XO now. How do you view the stock now in terms of the run-up that it has seen? Because the base effect is quite high, right, for FY27, because the growth has been so strong in this year. What would you recommend?
So there are two points about it. First of all, their blended volume growth was very, very strong. Secondly, the kind of price realization which this company is earning is also very, very strong. Because if I talk about first of all, their blended volume, it was a growth of around 22%, and that is what I believe is much higher than some of its counterparts. Talking about the price realization, the realizations have also been up by 3%. So I believe that this counter is well poised to move upside from here. And this is one of the very strong counters which we are betting on in the automobile space. So stay invested in this counter for the price target of 3350 to 3400 in the short to medium term.
So that's the view on M&M, but it's time for our rapid fire round. Swati and Astha, you both know the drill. I'll take up the first question, which is coming on IRFC. The viewer has bought 78 shares at the levels of 100, wants to know if you can hold or buy more. Swati, your view on this one?
At the current level, I will suggest to hold this position with a stop loss of 97 rupees on the downside.
A short-term perspective, Swati, on Solar Industries, our viewer has bought for the next 3 to 6 months. Can he buy 10 shares now?
Not at the current market price. Any momentum or dips towards to 14,000 levels can take a long positions.
Okay, the next one is on Tata Elxsi. The buying price is 23. The quantity, the buying price is 6,200. The quantity is around 23. Should I hold or book losses? The stock is trading at 4,300. Astha, your view?
I would recommend a hold on this counter and just wait and watch till the buy price comes.
Reliance bought at 1465. What should we do with it, Swati?
1465, definitely it's hold from my end. Upside, I believe that 1500, 1550 levels can be seen.
Okay, the next one is on Punjab National Bank. Ramesh from Vizag wants to know if we can hold from a long-term perspective. Astha, your view?
Yes, PNB is a hold from long-term perspective. Price target can be set at around 125 to 130.
Kirloskar Royal Astha bought at 1457. Is it a good time to buy more right now?
Maybe buy on dips can be applied to this counter at a price level of around 1420 to 1410 with a price target of 1500 to 1520.
Okay, Eternal is the next one. Dheeraj Reddy has bought an average price of 260. He wants to know if the stock will reach 400 in the next 12 months. Astha?
Eternal is a long-term story to bet upon, but reaching 400 level, I cannot comment so early about it. But yes, this counter is looking well poised to move till the level of 250 to 260.
Cupid, view, Swati, if you have one right now at 91, is it a good time to buy? Is what our viewer Arvind is asking.
Not at the current market price. If you're getting any dips towards to 84 to 83 rupees, that will be a good level to take a long position.
Lemon Tree Hotels, is this a good time to enter? Is the question that Arvind Reddy has. Swati, your view?
I will not suggest to take a long position in Lemon Tree. Apart from this, the Leela Hotel looks good, so you can switch on to the Leela Hotel.
210 rupees per share bought on Castrol is bought by Satyan. Swati, would you recommend buying more right now?
Castrol Industry, as of now, I will not suggest to take a long positions. Wait for some more time. A profit booking is likely to be seen towards which will take a counter to 180 rupees. That can be a good level to take a long position.
Utkarsh Small Finance Bank, bought at the levels of 18.5, wants to know if this is a good hold from long-term perspective. Astha?
Not a very good hold, but one should remain invested in this counter for the price level of around 15 rupees as of now.
Right time to buy Wipro, Astha?
Just for the dividend perspective, if someone is interested, then one can go for it. Otherwise, buy on dips can be applied.
Got it. Well, that's the end of the first round of the rapid fire in this edition of Fast Profit, but a very short break. Lot more stock related queries on the other side. Stay tuned.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है,
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक।
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं.
2 powerful days, 14th, 15th March, Sundar Nursery, New Delhi.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. So if you haven't already, do start sending in on the WhatsApp number that will start flashing on your screen very shortly on the top. You can also call us, talk to us directly, and the landline number for the same is also flashing on your screen up there. But the next query that we are taking in, and we still have Astha as well as Swati with us, it's on Vishal Mega Mart. Now, Bhuvana has actually bought shares at 125, roughly 200 shares, and asking for a 2-year view on the stock. Astha, a very disputed counter in that sense, because if you bought it at the IPO, you're very happy. If you bought it at 150, you're not. Promoter selling also a key news flow and something that Mahima has been covering. What would you recommend on Vishal Mega Mart? Is it a good time now to look at it? Because it might be the lowest that it has been since listing.
So, in fact, what we have seen that the same store sales growth in the Q3 was impacted. And if I am not wrong with my memory, it was around by 2% or 210 basis point. And there was a reason behind it due to some shift in the festivals, we should say, all the dates of festival. But what management was saying that they are really very much optimistic about the kind of growth trend which this company is witnessing. And in fact, I believe their quarter performance of Q3 of FY26 was also very strong. It was resilient, not very strong, but resilient is the right word for it. It was resilient despite what we have seen, in the shift in the festive period. So I believe, yes, those who have taken it in the IPO will really be happy if they are continuing holding it. But yes, buying at this point of a time is somewhat, which I believe that one should just look out for some more fall to come in and then make entry into this counter. So even I would recommend to buy at the lower level if anyone wants to buy it. And if anyone has already bought it at a higher price, then remain invested in this counter. We are optimistic in this counter from medium to long term perspective with a price target of around 120 to 125 in the medium term.
Okay, all right. So that's the view on Vishal Mega Mart. In fact, all of these tier 2 retail companies are also sitting on a very high base of growth last year. But moving on to the next question, this is also for you, Astha. Harsha from Vijayawada is asking, can I enter CleanMax or Fractal? Any of these, recently listed companies that you're liking?
I believe that Fractal is having its own issues because this is one of the AI company which is, I think it is one of its own kind in the India. But the problem is that when the IPO came, we were already very much surrounded by the negative news flow due to Anthropic, and that is why what we have seen that Fractal was not able to perform so strongly. In fact, if I talk about CleanMax also, both these counters are looking good to us. But if I want to go with any one counter, then Fractal is my choice, but at the lower levels.
CleanMax definitely bore the brunt of the market levels, right? Down almost 28% on that listing day. And definitely a few that are still coming in terms of the IPO markets as well. So continue to monitor all of those counters. But Mulli from Hyderabad is actually asking a question on Skipper. And he's asking if it's a good time to enter the stock right now. Astha, let me come back to you because the transmission distribution space, these smaller infra companies saw a lot of run up in the last year, and then since September have seen a lot of correction. Would you recommend getting into Skipper right now?
So getting into Skipper at this point of a time, I think one should wait for some more downfall to come in. But there are certain positives about this counter which I should mention. First of all, this is a company which has got a long history because it was established in 1981. Now, the positives about this company is this strong order book which this company is enjoying, along with the capacity expansion. And they have got a very, very strong export opportunities as well. But my idea here is the company is not able to perform so strongly due to the valuation thing, and hence we are recommending it to buy at the lower level, maybe at around 310 to 315 odd level, not at this present moment of time.
Okay, all right. So that's the view coming in on Skipper. But Seemant is calling us from Bhopal. Seemant, hi, a very good morning to you. What's your query about?
Morning. My query is on Mrs. Vector Foods. I hold about 100 shares of Mrs. Vector Foods at the price of 266.
Okay.
What I see, the results have been quite steady for the company, and the FMCG market is quite stable. Even then, the stock is not getting steam for almost a year. What should I do? I can hold it for next 6 months or so if I can get some answers on this from Astha ma'am.
Sure. Okay. Since 6 months is a slightly short-term perspective, but I'll try to get a fundamental view from Astha. Astha, he's not wrong, right? This company has seen a steady growth, but overall things are not picking up in terms of where volumes go, and that is what the entire industry wants to see, a volume uptick coming in for the FMCG space. Last 6 months, it's seen a downfall around 33%. Do you think a recovery from here on can be expected?
So now, yes, what we have seen that their export was not very strong. So that was the major reason we have seen that the volume growth was not very, very strong. Now, if I talk about the other fundamental seems to be in place because what we expect from this company is to grow at a CAGR of more than 10% over next 2 to 3 years, maybe by, if we say from FY 25 to 28. And that is mainly because what we are seeing, although export volumes are not very strong, but the domestic growth in the bakery business is really very good. And in fact, the premiumization is also one of the strong thing because this company is always looking for the innovation, and their products are always, health focused product. So innovations, premiumization, I think is well set for this company. These are some of the parameters which this company is strongly focusing on, and that is why they are witnessing a good growth in their domestic business. Yes, export business are not performing so strong. So I think Mrs. Vector is such a counter which one should not make an entry at this point of a time, but at the lower level, it is always recommended to enter into this counter. So make an entry, but at the price level of around 155 to 160. This is what I believe are the right levels to make entry into this counter.
But the view Astha, definitely another one of those casualties from September 2024. Stock was at 420 at that point of time, and then the 55% sell-off since then. But a very pertinent question this time coming in from Sunita from Hyderabad. It's on Dixon Tech. Stocks up 5%, and very interestingly, just in the last 5 to 7 minutes has started to inch up again as well. Now she's asking a short-term view on this stock. Let's pull up the intraday chart as well, and there you go. That slight increase yet again. Hopefully Sunita has not bought in immediately and before we answer the question, but what would you recommend on this, Swati? Definitely that on the fundamentals, approval for HKC joint venture is leading the momentum, but after the sharp downfall, is it a good time to buy?
time to buy, because already we have seen a lot of correction from almost 1800 levels to 9600 levels. Now the interesting fact on the daily chart, it is just forming the positive divergence, which is a very strong indications on the technical front, and the stock manages to take a support of 9600 rupees on a downside. I believe the immediate rally is likely to be seen towards to 10,800 levels. Beyond that, 11,000, 11,500 levels can be seen very soon. So it's a hold from my end, or if you want to create a long positions, definitely one can go for a long positions by keeping a stop loss of 9600 rupees. An immediate target for a short period of time will be at 12,000 levels.
Okay, all right. So that's the view on Dixon Tech. The next question that we have is from Richie, who's asking if this is a good time to invest either in BHEL or FACT, that is Fertilizers and Chemicals Travancore, and he's got 2 lakhs to invest in. Kindly advise on this one. Astha, I'll come to you on this one. FACT today, by the way, is up 13%, as you know, Puneet was just trying to point out. Any view on both of these? Maybe 2 lakhs divided in both of these, or any one of these?
So I'm more optimistic about BHEL at this point of a time, and I recommend to make entry into this counter, but in the tranches. Now talking about FACT is also one of the strong counter in the fertilizer space, but today what we are seeing is a strong upside momentum. So FACT is such a counter which is, you know, always being volatile. So making a investment call into this counter is little bit, you know, early, or maybe a little bit, you know, risky. So idea here is that BHEL is looking very good in the long-term perspective. So just look after that counter, but make entry into this counter in the tranches and not invest the lump sum amount into this counter. Now talking about the BHEL's fundamental, first of all, the strong order book which this company is enjoying, the kind of execution ramp up which this company is doing, and the kind of environment or macro conditions which we are into, definitely are pointing towards the strong upside which this counter can show in the long term. So BHEL is my choice between these two, and one should make entry into this counter, but not the lump sum amount should be invested. It's into the tranches.
Got that view, Astha, and thanks so much for that detailed answer on both these counters. The next one's on Bharat Electronics. So it's a counter that's done well for investors, and our viewer is asking here, hold 27 shares at 455. Swati, would you recommend a good time to add more to this current position?
I will not suggest to add on at the current market price, because already the counter has bought it at 450 levels, so no need to average it out and take your buying position at the higher levels. If you're getting any tips towards to 440 to 430, that will be a good levels to take the average of positions, but at the current level you can definitely hold on. The immediate target will be 480, and beyond that 500 levels can be tested. So it's a hold from my end.
Okay, it's time to step into a very short break, but we'll be right back answering all your queries on the other side, so do stay tuned.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, single. zing girl. Baby, I'm your Santa.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Welcome back. You're watching Ask Profit. Viewers who are tuning in, you can give us a call or send us a WhatsApp query about all your stocks that you're holding. Now, we've got Dr. Bharat who's done the same, who's writing us from Andhra Pradesh and asking about Quality Power. He's got 500 shares, the price of 916. What should I do? Hold or sell? Swati, your view on the charts on this one?
Current level, I will suggest hold on these long positions because I believe there's some sort of a pullback rally can be witnessed into this particular stock, which will take a counter towards to 840 to 850 level. So it's a hold from my end.
Got that view, Swati. The next question, that's coming in. It's on Pace Digitech. It's a recent listing it as well. Bought at 164 for 150 shares by a viewer Lokesh. He's asking a 1-year view on the stock. Asta, what would you suggest?
So Pace Digitech, I think one should remain invested in this counter for the longer term. This was a recently listed company, but what we have seen that the listing was not up to the mark. Going ahead, we believe that this counter is well poised to move till the level of 170 to 180. Remain invested in this counter.
Okay, all right. The next question that we have is from Nihal Mohandas, who's writing us from Mumbai, asking about SBI cards, whether he should go ahead and invest in this particular counter for the next 2 years. Asta, your view?
No, I don't believe that SBI card is such a counter where one should make any sort of fresh investment at this point of time at least. So idea here is just to go for SBI card because what we are saying, the kind of financial environment which we are into, we are not very much optimistic on this company. Why? Because although we know that this is making us steady acquisitions and there is a improved credit cost outlook is also there. But my idea here is that this kind of a counter can remain volatile if we see any sort of uncertain event happening around us, and hence this is not a very safe investment for a longer term perspective. So SBI card is looking good, but not for an investment point of view.
Got that view. Asa, stocks down almost 30% even since listing, so not given a single year of positive returns in that sense. But let's go across and take our next caller from Andhra Pradesh. Bharat has a stock query for us. Bharat, good morning. Welcome to the show. What's your query?
Good morning, sir. I am holding a development shares for 460 at the price of 305.
Okay. And do you want a long-term view?
Yes, sir. Long-term view.
Okay. Asta, a quick one on development as well.
So development, I think this IPO came way back in 2024 and 19 June 2024 at a price of around 203, and this is basically an engineering company, and what we believe that this IPO was not able to perform so strongly on the bourses as well, and since listing, although it has generated good return, but since I think the kind of listing, the results which are coming in is not looking very strong to us. So my idea here is that it is a good long-term story to bet upon, but in the short term we are not very much optimistic on the basis of the number.
Okay, all right. The next one is an interesting one. Hitesh is writing in And he's saying that he's got 200 shares of LIC Housing Finance, which he just got dematerialized just weeks ago. And he says that his grandfather bought it years ago and he happened to find them now. Probably in 2006 or 2007 is when it was trading at 28 or 30 odd rupees is when he's holding it. The stock is currently trading at 510. He's not given us the quantity, but he wants to know from a long-term perspective, should he continue to hold?
200 shares.
Okay, he's given. Okay,
Yeah,
200 shares. Oh yeah, 200 shares. So I mean, if you can just multiply the kind of profits he's made, Puneet is trying to do that on his calculator. But till then, Asa, there you go. What should he do right now?
He should remain invested, but we are not very much optimistic about this counter, because what we have seen is, first of all, the kind of results which this company has posted. It was majorly impacted by, first of all, the kind of interest rate environment which we are into. And secondly, what I believe that they have got a very, very strong competition. So both these factors have impacted the results of this company, and we have not seen a very positive side of a number. My idea here is that this counter is a slow mover counter, not very much competitive as compared to its peers. So just remain invested in this counter for the longer term. But if anyone want to make a fresh entry, I won't believe that this is a good counter to make a fresh entry into.
So a 6,000 investment has now ballooned to almost 96,000 in terms of profit. So Hitesh Jotwani's grandfather, a big one up to you in that. My fellow Sindhi Bhaya has made a good investment in that sense. But the next one's on Protean. Our viewer Rajiv is holding 118 shares at 925. What would you recommend, Swati, with this counter?
The longer term view is definitely positive because the counter has already witnessed a very sharp correction on the price perspective. I believe the stock is trading in the oversold zone. Not to book your losses at the current market price, you can hold on. If possible, try to average it out the positions whenever the counter comes at between the 520 to 500 levels. A bounce back rally can be expected, which will take the stock towards to 700 to 800 levels. So, but it's a overall 1 year view, so you can definitely hold on this particular stock.
Okay, all right. The next one is on Radhiko Khaitan. Veer from Bengaluru is asking this question. He's bought 27 shares at the levels of 2,800 and wants to know as to what should be the next course of action for him. Asa, I'll come to you on this one. One of the beneficiaries of the recent move by Karnataka government, plus this particular counter has been playing the premiumization game very well. What do you think? Should he continue to hold? He's sitting on a minor loss.
I think one should remain invested in this counter, because what we are thinking about this counter or analyzing is that this financial performance of this counter is here to sustain, and we will continue to see the double-digit volume growth in this counter. Apart from that, we are believing that this is one of the main candidate of the premiumization, and the kind of margin expansion which this counter has witnessed is a sustainable one. We are expecting this counter to grow at a CAGR of more than 15% over next 2 to 3 years. Hence, one should, and this is, I'm talking in terms of revenue. So I'm giving CAGR growth in terms of top line of more than 10 to 15% for coming 2 to 3 years. So remain invested in this counter for the longer term perspective with a price target of 2850 to 2900.
Got that view, Astha. But the next question coming in, it's on LT Foods. Our viewer has bought 100 shares at 75. Let's pull up the counter. And a question largely, he is sitting on material profits as Sardesai and asking what he should do with this particular counter. Should he hold on or book profits? What would you recommend, Astha?
So for LT Food, I would recommend to hold this counter, because kind of upsurge which we are witnessing in the stock price is here to stay. Although today we are seeing some sort of a profit booking, but in the longer term, I expect this counter to cross the level of 400. Remain invested in this counter.
Got the view, Astha. But time now for the rapid fire round in this edition of Ask Profits. Swati as well as Astha request you to keep your answers on buy, sell or hold so that we can take as many queries in the next 3 minutes. The first one's coming in on Keynes Technologies, bought at 3675. What would you recommend, Astha, is a good time to buy?
Maybe at a lower level. Buying at a lower level, but if someone is in this portfolio, then remain invested for the price target of 4,000.
Okay, LTI Mindtree is the next one. Ravi from Bengaluru wants to know if we can continue to hold this from a medium-term perspective. Swati, on the charts?
Definitely, you can hold on for an immediate target of 4,500 rupees.
Apollo Microsystem bought at 234. What should we do with this counter, Astha?
Polo Microsystem is a hold from our side with a price target of 225 to 230.
Right. Chennai Petrochem, Anand from Bengaluru has bought 96 shares at the levels of 1050. Good hold from a short-term perspective. Swati?
Hold, the target will be at around 1050 to 1070 levels.
Good time to buy BPCL or IOCL, Swati?
BPCL will be the good position to take a long call, but not at the current market price. 300 rupees are the attractive levels.
ITC Hotel, 600 shares at the levels of 200. Harish wants to know if this is a good hold from a long-term perspective. Astha, your view?
Yes, definitely a good hold with a price target of 180 to 190.
Good time to buy Ashok Leyland for the next 1 year, Astha?
Maybe at a lower level. So Ashok Leyland is a buy, but at a lower level of 185 to 180 zone.
Exide Industries, Arun wants to know if you can continue to hold or sell. Swati, your view on the charts?
Hold for a target of 350 rupees.
Kaplan Labs bought at 1670 by Benny. Should he continue to hold, Astha?
Kaplan levels continue. One should remain invested in this count with a price target of 1750.
Okay, Canada Robeco AMC, 30 shares bought at the levels of 258. Hold, average, what should he do? What should she do, Swati?
I will suggest to hold on for a target of 240 rupees.
A good time to buy into Tenneco Clean Air Solutions, Astha?
Maybe at a lower level, not presently.
United Spirits, 80 shares bought at the levels of 1460. Hold or sell? Swati, your view?
Definitely, it's a hold for an immediate target of 1450 to 1500.
Ratan India Enterprise, Swati bought at 72 by Niva and she wants to exit this counter. Any levels that you can recommend?
Exit if you're getting, keep a stop loss of 25 rupees on the downside. Any positive move up to 28 to 29 levels, you should exit those levels.
Sagility India, can I hold for a year? Kabul from Delhi is asking this. Astha, your view?
Yes, definitely a hold with the price target of 45.
Tata Chemicals, is there a good time to buy? Is what Guru is asking, Swati.
Yes, 20-30% can be accumulated at the current market price.
Birla Soft bought at the rate of 692. Hold or sell? Swati?
It's a definitely hold from my end for a target of 440 rupees.
A 10-year view for KPIT Tech is what Basu is asking. Would you recommend that, Astha?
10-year perspective is definitely a hold for KPIT Tech with the price target crossing 800 and above levels.
Okay, Ola Electric bought at an average price of 44. What should I do? Astha, your view?
Try to exit from this counter at every rise.
Alright, okay. Sell on the rise for Ola is the view coming in from Astha. But with that, completely out of time, Astha and Swati, as always, thank you so much for taking out the time and helping us answer all those 60 stock-related queries. We aim for 40 more in the afternoon edition. So do stay tuned and do, of course, tune in at 2 o'clock to ask all your stock-related queries again. But completely out of time, KYC comes up next.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
बिटिया की शादी है हमारी।
बधाइयों बधाइयों।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी
Jingle, 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 jingle.
बस आज का
Jingle, 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 jingle. girl, then girl, then girl. चल करें थोड़े then girl, then girl, then girl, then girl, then girl, then girl. क्योंकि तू है single, 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 single. Baby, I'm your Santa.
First India tour in your city. Rag on with Shankar Ehsaan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. An interesting company today, but I'll give you some hints. Try to smell the coffee. Maybe there might be a hint over there. The first one is, of course, the company is a global manufacturer and exporter of instant coffee. Okay, now the universe is becoming a bit smaller and smaller. Let me give you another hint. The second one is that it recently increased its revenue guidance for FY26 and also the margin front. That is where the street is very bullish on this counter. And the third hint is, of course, it has been a multi-bagger. Last 5 years, if you're holding the stock, it has given you 313% of big returns coming in. The company in focus, keep guessing. But if you're having a coffee, maybe you have understood and guessed the company by now. And yes, the company in focus is CCL Products. This is the company which we are talking about the industry, the coffee pricing, the demand, and of course the growth outlook going ahead. But the question remains is, why are we calling this coffee company? What is something unique about it? The global tensions, they are impacting the global coffee prices also. Minor jump, but nevertheless, it is, rattling some feathers if you are tracking this industry or trade. The second reason why we are calling this company is, has the coffee demand been affected because of that? Remember, everybody loves their coffee, but is the demand hampering that? The third question definitely is going to be the debt reduction plans, because they are ramping up capacities abroad. So the debt levels are on the higher side. When company starts reducing debt, that becomes very strong for the financials going ahead. The volume versus value growth targets, what the company is setting in FY27, we will be watching out for that. And also, apart from this, the update on the Vietnam operations, how much ramp up has happened, what's the progress looking like. Are they going to be a bit wait and watch because of the geopolitical tensions, or is it business as usual? And of course, the branded business, Apne products. Remember, they are exporters for a lot of clients, but they have their in-house brand also. They are going very much heavy on that. So we'll be asking the important target plans for that. And to decode all our queries regarding the industry and the company, we'll be joined in by Srishant Challa. He's the MD at CCL Products, where he'll give us the entire view of the company going ahead. But this is on the show. We'll get in Shishant in a while. But let's come back and understand about the company. What is CCL Products all about? CCL full form, of course, is Continental Coffee Limited as well. It's world's largest private label manufacturer. That's the first and the most important point to look at. Let's talk about more about the company. It's a global manufacturer and exporter for instant coffee, and there are a lot of variants to it also, and I'll explain you that. I'm sure you must be wondering, where is my cup of coffee? Do take that cup of coffee and listen into the entire KYC show. This is operating over more than 110 countries. That is the expansion they have already done, and they are expanding. It was founded in 1994. It's a 30-year-old company. And also, if you look at CCL Products, let's find another key detail is they do spray-dried, freeze-dried, agglomerated, roast and ground coffee. I'm sure you just know a couple of the varieties, but if you're in the B2B business, these important varieties also come in, to each person to their coffee preference, as I say. But apart from the product range, the company has 4 factories. 2 of them are in Andhra Pradesh. One is in Switzerland, and we are talking about Vietnam. That's the newest addition to it, and the way they are ramping up their capacities is something which the street is eyeing on. Also, talking about the company is serving more than 400 plus clients, and also if you are a D2C consumer, their own brands are also there where the consumption numbers are high as well. They have expanded the direct distribution reach to almost 140,000 touch points, and that is a strength or the moat. It's the distribution. Above that, they are adding their own brand as well. So it's pretty much interesting for CCL Products, the way the company is at its inflection point. Now talking about the B2C business, जब भी consumer का business आता है तो खर्चा ज़्यादा करना पड़ता है. That is what's happening here. The margins over here, they are trailing the company level margins. Remember, company was a B2B company, and now it's going to the B2C segment also. And because of that, initial expenses are high on the B2C segment, and the higher reinvestment and brand building spends also comes in. So definitely there will be a little bit of pressure going ahead, at least in the margins and maybe on the return ratios as well, क्योंकि इन्होंने capex में भी खर्चा किया है. But coffee market impact, what's happening here, and it's a very beautiful coffee graphics made by my team here. The May Arabica coffee prices, they have risen, but not so much, but yes, definitely on the positive side, that's up almost 1%. Other key detail also, let's talk about the demand supply. The New York Arabica coffee prices, that's at its 3-week high levels on Monday. Means that's the recent price which you are talking about. So yes, the global coffee prices are on the up, and the inventories, that's at a 5-month high levels which we had seen on Monday. Also, apart from this, let's look at the Robusta coffee inventories. That is sitting at almost 3.5-month high at the start of month of March. Remember, all Brazil and other nations also are producing coffee, and fresh harvests are coming, and when the fresh harvest comes, the pricing generally comes down because there's a more supply in the market. But CCL Products has been a winner in the Q3 numbers, very strong numbers, and they've stated that the coffee prices, they have also corrected between 25 to 30%. One thing which led to a margin upgrade also for FY26 was the margin beat. That was almost 120 basis points of up move coming in. But it's just not the story of the margins. The operational strength which was there, that gave PAT beat estimates also, and of course on the revenue front also, we saw a good move happening. But let's get into a little bit more details on the Q3 performance. The volume growth was at 20% and the value growth was at 18%. So of course the volume side, remember the company does a lot of bulk work, and that is what we are seeing there happening. Gross debt, remember company has taken a higher debt. There's a little bit of pressure on the return ratios and the balance sheet coming because of the expansion plans. But net there is a gross debt reduction also coming from 2,000 crore a year ago to almost 1448 crore rupees. In the last Q3 con call, management did say they're targeting a 12 to 300 crore gross debt by the end of FY26, and right now that number is around 1248 crores. This is something which is very much important. If you're a long-term investor, this is an important management criteria. The management has reiterated the gross debt of 1250 crores by 31st March 2026. So in some days, we might see this number coming down as well. We'll understand the status and the progress from Shashank, and the current blended utilization, that is around 65 to 70%. This is the utilization levels of the company when it comes to the manufacturing of coffee. But going ahead, of course, the management is expecting this can click in the 80 to 90%, and whenever in this industry you have something at an 80%, your new fresh capex plans start. That's what is being mirrored, at least in their international expansion setup. And overall, this is what we are looking at. 85 to 90% utilization would be coming in the next 2 years as well. So there is a scope of growth, and that's what the management has also stated. But the FY26 EBITDA growth guidance, that has revised upwards. Earlier it was between 15 to 20%. Now you can expect that to go much more higher than the 20% part, and can be ranging, between you could say almost 25%. Now earlier I had spoken about this number, it was just 15 to 20%. So the guidance is going up, expansion is happening, little bit of pressure on the debt and the return ratios, which is obvious it will happen. So this is where CCL Products is actually standing right now. But to give you more perspective and to add more flavor to our coffee, which is a special show called KYC, I'm going to give you some rating parameters. These are the basic non-negotiable parameters which we track: income statement, balance sheet, cash flow. This is the heart and soul of a company. After that, we look at the return ratios also, how things are going to pan out for the company, the shareholding, how much it has moved, are the promoters buying stake, FIs, DIs, what's the action looking like, street cred, कम समय, ज़्यादा समय और बहुत ज़्यादा समय. All these criteria, पैसा कितना बना, that's the most important thing in stock markets. And also the valuations and the outlook is something which we'll be talking about. So 8 rating parameters are there. The first rating parameter let's talk about is the income statement. And yes, the revenue has been a steady compounder. This is very much important. There is always a volatility in this kind of industry, but remember the company has a very fast pass-through mechanism as well, and that's why we see it's a very decent margin setup looking like. The bottom line numbers also increasing step by step, and company is now focusing much more in their consumer business also. So there might be a little bit of marketing expenses, but nevertheless company is moving towards that FMCG portion as well, and because of that maybe the company can demand a valuation of an FMCG company in the next 4 to 7 years, but it's just for the long-term investors. Q3 numbers were superb, and you see the jump happening in the margins. Whether it will continue or not, that's a question. But net all the numbers beat street estimates, and that is something which caught my eye. A very strong income statement move coming in from the CCL Products, so it's a thumbs up when it comes to the income statement. Let's talk about balance sheet. Balance sheet is something which a little bit of concern definitely comes for me. Why? I'll talk to you about that. The borrowings, that has gone up. It's around 1815 crore rupees. The gross debt, company has stated it will be roughly 1300 odd crore rupees. But my concern is definitely there, because if debt is high, finance cost will be high, and because of that the PAT will be impacted. But net the cash reserves are decent. It's around 98 crore rupees. So इसमें working capital इस industry में तो चल जाएगा. But yes, when that expenses are capitalized from their Vietnam plant expansion, we will see a little bit of pressure on the balance sheet, and that is basic mathematics for you. So I've kept it neutral rating for CCL Products. So we spoke about income statement, we spoke about balance sheet, but cash flows, that's also very much important, and that completes the holy trinity of financials. As a student, as an investor, as a stakeholder, you should know. And net operating cash flows has been very decent in FY25 and net PNL. However, this net cash flow, we can see this is an outflow which is happening. This is of course on investing and financing activities as well. That is why the reason I have given is a neutral rating, because operating cash flows is good, but investing and financing flows are putting a little bit of pressure, and that's why a neutral rating comes in. But apart from the cash flows, let's talk about the return ratios. And generally, whenever a company is doing a capex or an expansion plan, largely a little bit of pressure comes on the return ratio. See, over the FY22 and 23, around 15% plus, and that is what, if you get that in terms of ROC, it is very decent and it's actually good. So the company was ticking the right boxes, but then the expansion started coming in, and now it's trying to come at that 12 to 13% part. But after this expansion, the benefit starts coming in 1-2 years. So you can expect that to come back to 15-16, say by FY28 or FY27 end. So makes sense. And return ratios, I would be giving this a neutral rating. But let's talk about the shareholding portion, how things are moving, and promoters have been largely very stable, no movement, and that's a very good point, to be honest. But interestingly, FIs and DIs, it has been largely flattish around 21 to 22 odd %. But FIs is something which I looked at around 8%. This is the mark I'm talking about. That has increased to 10% and 11%. So each quarter FIs are adding stake into the company. That means there is a big conviction in the future going ahead as well. And public, it's largely neutral, 21%. This is too important to you should actually track. So it's a very strong thumbs up when it comes to the overall shareholding for CCL Products. But apart from shareholding, another question is how things are panning out for street cred. क्या पैसा बना इस stock में कि नहीं बना? 1 month flattish. We understand there have been so much changes happening in the industry. There might be positive, there might be negative. But 6 months, it's 18%. Very decent returns coming in. Year to date, 11%. But if you're a long-term investor, congratulations. The stock has given in 1 year 76% of returns, and आपको ये stock multi-bagger बना के दे दिया है. 313% of returns in the last 5 years. So congratulations to the long-term shareholders. The company has rewarded them very handsomely. And because of that, and even in the medium-term, short-term, the company has shown the technical strength despite the volatility in the market. I will be giving this a very strong thumbs up when it comes to the street cred. Now let's talk about valuations, and of course we have taken the company itself and understood at which level the company is currently trading at. The valuation is of course price to earnings ratio forward basis. The peak valuations that went in at almost 42 times when there was a lot of interest and buying happening. Just looking at the 10-year median, it's at 28.5 times. That's pretty much decent, but currently also the stock has shown a good up move and it's holding the premiums in the market. It's around 37 times. So you could say roughly 30 to 40% premium to the average, the long-term average which I'm talking about. It's largely 10 years. So right now, will it be a good time to enter? Maybe, maybe not, because valuations have run up. But remember, the company does command premium valuations globally also last time I checked. And if the company moves towards the B2C segment, the FMCG valuations start coming in, and I wouldn't be surprised that these valuations could start to touch back to 40 and 45 as more and more contribution comes from the earnings from the B2C segment. And of course, globally, they are the leaders in the B2B segment. So largely, it's a neutral rating when it comes to the valuations front. But let's talk about the outlook. That is where the overall momentum lies. The coffee demand, that is still remaining strong, and this is despite the geopolitical tensions. That means if you're having your coffee, you're not changing your daily routine, and neither am I. The global prices, they have all moved actually towards the upper side going ahead, and the new exports from the countries, from the new harvest I'm talking about, that is where initially there was an up move in the geopolitical tension. That might actually come down because Bazaar mein supply ज़्यादा आ जाएगा, वो भी fresh वाला. And that is what the management has also stated in the Q3 con call. But we'll get in more details in the show as well. Let's talk about another outlook. The company is targeting roughly 1,000 crore branded business revenue. ये अपने brand की बात कर रहे हैं. Their own brands which are there, not the ones which they are exporting on the bulk basis. Those brands itself are also gaining a lot of traction. Around 400-500 crores is something business they made in FY26. So it's almost double. So that'll be something to watch out for when it comes to CCL Products. Now the margin guidance has been already upgraded for FY26. Remember, the margins offshot in Q3 numbers, and the Q4 numbers are also likely to be strong. But will this continue? The margin growth momentum in FY27, that's the big question to be asked with the management, and Mr. Challa will be answering these queries to us. Also, the green coffee pricing, are they stable? Last year there was a little bit of instability, and because of that, some business pricing was impacted on the value front. But let's see whether the green coffee prices, are they remaining stable or not. Apart from this, important outlooks, I have given this a very strong thumbs up because in current situation also the demand is showing strength. The price is still stable, nothing to be major concerned about. Why? I'll tell you. Geopolitical side, the price might be rising, but on the other hand, the harvest which is coming, the new harvest from the companies, that might put a bigger pressure in the prices of the coffee in the coming days as well. So two school of thought, and neither or nor, or either or, whichever the way it is, the company will be benefiting. But it's a strong thumbs up when it comes to the overall outlook. But let's revise. एक revise करते हैं KYC ratings की company का value क्या है? KYC show में what numbers have we given, and this is something which I have pointed is income statement is really strong. The Q3 numbers is something which the company proved again. Balance sheet, cash flow, return ratio, there are some bigger investments happening. There is a debt reduction at play. So we couldn't say that, it's really very wonderful. Shareholding I really like because the FIs have been, increasing their stake. Promoters are also holding up. So there is a good, absorption happening in the technical charts. If people who are students of supply and demand, they can relate with me. Street cred, it has been a multi-bagger if you're a long-term investor, and even if you have holding stock for 6 months or a year, you have made money in this counter. Valuations, not very cheap, still at a 30 to 40% premium, I would say, for the 10-year average, but nevertheless, you can still have a look. But outlook, that is where the strength lies. Despite the volatility, the demand is still there for the coffee. On the higher side of my ratings in KYC show, I have given this company 6 out of 8 for this KYC. But to get in more perspective, we will be joined by Srishant Challa. He's the MD and CCL at Products, and he's a second generation entrepreneur and a lawyer by education. That's very much interesting. You run a coffee company and you're a lawyer. More than 2 decades of leadership is there in this global instant coffee industry. And another interesting snippet about Srishant I would like to share with you. He's a gold medalist in corporate law at Nalsar. It's a very hard school to get into if you're a law student in Hyderabad, and also gold medalist in mathematics. So man wearing a lot of hats, but the most important hat is the MD of CCL Products. Now, of course, the first question I would like to ask Srishant is definitely going to be on the global coffee prices. They have risen up. The New York prices went up almost 3-week high as well. And Srishant, I'd like to get you on this as well. And the first query, Srishant, would be on the first question is the global pricing, how those things are changing, and is it actually impacting the industry and the demand? Your views on that, Srishant?
One, because of the coffee prices have been quite stable, to be frank. We were expecting a correction which has taken place, and today the prices are hovering around $3,800 to $4,000 a ton level. They've come down from $6,000, what we've seen about a year ago. We are expecting a further reduction as the crop increases in Brazil, Vietnam, and Indonesia as well.
All right. So, what kind of a pricing we can expect? That you're expecting a downtick in the prices. So, what kind of downtick you can expect in terms of percentage if you had to estimate?
So percentage-wise, we're looking at maybe a further maybe 20% reduction at least over the next 1 year. So we've been guiding our customers also accordingly to cover cautiously and not to be too aggressive in their coverage, because we're not expecting a huge increase anytime soon.
That's interesting take on the pricing. But anything on the volume front for the industry? Globally, the amount of sourcing which is happening, and the exports are also going across. Any kind of changes in the volumes which you have seen?
So coffee consumption as such is still constantly increasing. So we don't see any reduction in that area. Across the world, the demand is there. It's still growing at a healthy pace. So we're not very concerned about any dips or reduction in any manner.
All right. So be it demand, be it supply, the request for coffee is always there throughout the world. But let's look at the debt position also, Mr. Srishant. The gross debt actually was around 2,000 crore last year. Now it's down to almost 1448 crore rupees. Further debt reduction plans we can expect going ahead, and if yes, what could be the ballpark numbers?
So right now for this year, we are still looking at maybe around 1,300 levels or so. In the next quarter or two, we are hoping it will come down to less than 1,000 crores of gross debt.
Right. And moving on, the capacity utilization, that seems to be around, the current blended utilization is 65 to 70%. Correct me if I'm wrong. This number, is this correct? And what kind of growth you can expect in the next 2 odd years, Mr. Srishant?
So yes, this number is correct. So we've just recently doubled our capacities about a year ago, and that's one of the reasons for the debt as well. And our intent also is to gradually fill this capacity over the next 4 to 5 years.
All right, so 4 to 5 years is something which you spoke about. Last time we spoke about the guidance also. The FY26 EBITDA growth guidance was revised upward. Guidance is now approximately 25%. Earlier it was 15 to 20%. And seeing the current global scenario, will you be sticking to these guidances, or is there going to be a change in the guidance? Because you mentioned about the demand that is still remaining strong.
Yeah. So for this financial year, the guidance of 25% is intact. In fact, we might do a little better than that as well. For next year onwards, we are still targeting, typically we look at a 15 to 20% growth year on year. So for the next couple of years at least, we are quite confident that we should be able to achieve that.
And what will be the targets for FY27 if you talk about the value or the volume? Any ballpark figure for that?
So we are value-wise, there could be a slight reduction because of the green coffee prices coming down. But volume-wise, we are still looking at that 15 to 20% volume growth. So the better way to track our company is to look at the EBITDA growth more than the top-line growth.
All right, so top line growth is something which we'll be looking out for. But green coffee price environment, is it materially more stable versus last year? What's an update on this green pricing, green coffee pricing right now?
Yeah, so the pricing, like last year, we've seen around $6,000 a ton, and there was a lot of fluctuation last year. But now with Brazil throughput increasing, Vietnam crop being quite good, Uganda crop also was quite good. So keeping all these factors, there has been a correction downward. Now we're at around 3,800 to 4,000 levels. Over the next couple of months, we are expecting the further correction to be there as well.
That's pretty much interesting on that. But another question I have, Mr. Srishant, is the Vietnam operations. The new assets ramping, that's also being planned. Any kind of yearly, year utilization, it's still a bit low. What's the outlook for the Vietnam business right now? Is this picking up, or you're going to wait it out as the geopolitical tensions are still there?
So actually, we've doubled our capacities both in India and Vietnam for strategic reasons. And even when we saw the tariffs from the US coming in, initially when India was at 50% duty, we were supplying from a Vietnam facility, which was at 20% duty. So strategically, because we had that extra capacity, we were able to adapt to the changing circumstances. The Vietnam plant was also set up mainly to target the Asian regions. So that is what we are doing. So the capacity ramp up is taking place in both units, and it's growing at the pace that we've expected.
Right. And for your, of course, the private level and the D2C segment, that is where there was a lot of bullishness. Last time I spoke with you around a year ago. And so how much things have changed and outlook ahead for these segments, for Continental Coffee and your private label?
So the response of the brand has been quite good on a pan-India basis. We are right now in the number 3 position. In a couple of states, we've already reached a number 2 position. And we are looking at further doubling down on our branded business. This year, we had projected around 450 crores as our branded business, and we are on track for that. Overall, India business was supposed to be around 650 crores, so we are on track for that as well. And next year, we are targeting hopefully closer to 1,000 crore.
Okay, that's a very big statement. 1,000 crore you're tracking in terms of revenue for your branded business. That's an important update coming in. Thanks a lot, Srishant, for joining in and giving us entire views on the industry and the company's growth plan ahead, and best of luck for the future.
Thank you.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The stage that brings together India's most compelling creative voices.
एनडीटीवी का क्रिएटर मंच है
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक।
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
इट्स ओके यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi. After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a
Asian markets and Dalal Street cheered. True signals. US President Donald Trump signals that the war in Iran may be pretty much over. Meanwhile, Iran's deputy foreign minister hints at a truce if it is assured it won't be attacked again. Markets cheer the possibility of a de-escalation in the Middle East war. Nifty jumps more than 200 points. Sensex soars over 600 points. Most major sectors in the green, with autos in top gear. IT bucks the trend. A shortage of commercial LPG cylinders has triggered alarm across the hospitality sector, with restaurant associations in Maharashtra, Tamil Nadu and Bengaluru warning that eateries could shut down if supplies are not restored. And in Middle East conflict hits LNG flows in India, government sharpens focus on priority gas allocation to sectors like fertilizer, PNG, LPG. The Petroleum Ministry constitutes a committee to review the representations for LPG supply. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar, and let's take stock of the markets today. And of course, the de-escalation signals have really cheered the Indian markets, and Nifty 50 has been hovering comfortably above the 24,000 level, a level that it had long forgotten in the last few days of trade. So at the moment, comfortable, but it has also lost the top position of crossing and breaching the 24,300 level. In the last few minutes of trade, there has been some bit of shave off from the top in terms of Nifty 50's numbers there, and it's hovering around 24,200. Let's also take a look at the internals. Well, autos are performing very well. It's bank index which is outperforming the key index Nifty by a huge margin, and also the broader markets like mid caps and small caps are the ones which are outperforming the key indices by a huge margin. When we look at the IT sector, it was really bucking the trend and contra call in terms of yesterday's performance, when it was the only sector which was in the green, and today it's exact opposite. While all other sectors are in the green, it's the IT sector which is showing some bit of weakness there. So it's a role reversal of sorts that is being seen. When we take a look at the Nifty 50 contribution, well, it's the top banking names. Remember, banking is also the quasi-investment for the economy, and therefore HDFC Bank, ICICI Bank, Axis Bank, and some of the financials like Shriram Finance are really doing extremely well. But one word on crude oil, as crude oil prices ease because of the tensions now looking de-escalating, and also more reserves being promised by the global G7, as well as the words coming in from US. Reliance Industries is one of the top losers, along with Infosys today in trade. All right, Rohit Agarval, who is a senior executive and vice president and equity fund manager at Kotak Life Insurance, joins in now with his expertise on the markets. Rohit, markets have been quite volatile. Today, there is a huge amount of recovery that is being seen. But how do you read into a very, very dynamic situation?
Yeah, hi. Well, as you rightly said, it is a very dynamic situation. Yesterday morning, when the world woke up, we saw crude hitting 180 to 120 Brent, and we saw a sharp reaction in the Indian markets. Today, as we woke up, we saw the sub $100 kind of handle, and right now it is somewhere between the mid 90s. I think this volatility is here to stay, and it is going to be extremely difficult to take a very clear view. It is not just about the crude. We have to keep in mind that because of what's happened to some of the strikes that have actually happened, gas will become a bigger concern than crude, and not just the crude price, because we've already seen some curtailment, some pullback to gas allocation in some of the very critical sectors. Obviously, the government will need to prioritize gas consumption and gas availability to the priority sectors like agriculture, like auto. But the consumption sectors like hotel, like restaurants, like AC making, all of that can start to suffer if we do not see supplies easing off or supply coming back to stream in the next 10 to 15 days. So I think it is not just about the geopolitics. It is not just about the war. We may come to hear that Iran is now not able to create or cause more damage, and that US is causing quite a lot of damage. We may hear that they are coming on the negotiating table. But what we actually need in the next 10 to 15 days is for gas supplies to start resuming. Otherwise, we will have to start looking at some kind of lower growth for India as a whole.
All right. So that's a big statement, Rohit. The economy getting impacted because of the resources-led supply chain constraints that we are dealing with. But how do you play the market in this scenario? And given the oil price volatility that we have seen, the gas shortage that we have seen, and the two sectors cutting across various sectors, impacting either transportation or raw material for several other sectors, how would you assess which sectors are a no-go or a definite buy opportunity at this particular time?
Well, historically, if you look at wars and look at a view from a lens which is after 12 months or so, you always tend to make money. However, when you are in the midst of a war, it is very difficult to say which segment will get impacted a lot. But if you look at what's happening in this kind of situation, obviously because oil has gone up, because gas has gone up, because there's a constraint in supply, we can clearly see that the consumers of feedstock, which have oil and gas as their feedstock, will get impacted. However, some of the other sectors which are more top-down or macro, which is to do with a higher inflation, higher fiscal deficit, and hence those sectors which is BFSI, which get impacted, I think that gets reversed pretty quickly. As soon as the war gets over, or we get a whiff of lower oil prices, or we get a sense that war is coming to an end, or we get a sense that it may linger on, but the impact will not create any damage anymore. Hence, I think BFSI, which has got hit a lot because as soon as the war news came, oil went up, the banks, PSU plus private and NBFCs started to correct. I think there the pullback will be pretty fast and swift. The areas where pullback may take longer is what I again explained is the users of feedstock which use gas or some derivative of crude as feedstock where they will get impacted for longer. However, if supplies do come back on stream in the next 15 to 20 days or max a month, then these sectors will come back. Otherwise, BFSI is an easy sector to go and buy. Some of the users, especially consumer facing, will have an issue because they do not have feedstock, clearly. Yeah, and that will become a challenge even if the war stops because those taps cannot be opened overnight. A war is very different than a tariff. A tariff can be reversed overnight and things can change.
Yes.
But the damage that has been caused to the facilities, the gas storage facilities or the gas facilities, that does not come on stream just because the war gets over. That will take its own time to come back on stream. So we'll have to assess the damage on that side. If that doesn't come back, we'll have to shave off 25 to 50 bips from our GDP growth estimates. Otherwise, I think banking, and then obviously as the war news trickles in that it is likely to get resolved, the beneficiaries of lower oil prices is the one that you should be looking at. Maybe some stocks, maybe some other FMCG where they have got hit by higher crude, derivatives of crude, wherever it is, but not industries which use direct feedstock as crude. So that not crude,
all right,
but
so
gas.
that's a great differentiation and gives a sector-wide view on how to play the market with respect to the gas as well as oil price uncertainty. Now, my final question to you, Rohit, at this point would be how to play the market and how much of cash conservation would you really suggest at this particular time? Because looking at the earlier flip-flop scenario when it comes to the US global, discourse, do you think that volatility is going to really continue on various fronts?
Well, volatility is likely to continue. However, the markets are no longer very expensive. Okay? If you look at the last 18 months or so, due to various reasons, India has corrected and underperformed the global and especially emerging markets. Countries like Korea, Taiwan, China have massively outperformed India already in the last 18 months or so. So the Indian markets, which were trading at 2 standard deviations above its average, are now down to 1 standard deviation or little lesser. So the markets at 20x odd, give or take 1 year forward, is not in a real expensive zone. Having said that, one can argue that the earnings expectations from the market, especially from the say Nifty, is also early double digits. In that case, should it trade at 20x? But I think historically, given that India has grown its earnings at 12 to 14%, 18 to 22x multiple is a fair multiple because growth is there. Hence, markets now are not very expensive. However, given what's happening on the war front, if oil were to go above 100, stay there at 100, 120, then there will be an impact. Otherwise, it is time to buy the markets.
Yes.
Indian market has now shifted from a sell on rise to a buy on dips market.
Right.
Even mid and small caps have seen quite a lot of correction, especially quite a few stocks which are doing all right. And now I think it is time to start gradually getting into the market and not be afraid of what's happening around, because what we believe is, even if the war were to linger on,
right. We got right. So the voice is clear that the market is not looking very expensive at the current moment. So there can be gradual buying, is what you're saying. But of course, cautious approach when it comes to the overall volatility as well as uncertainty. That point very well taken. Thank you so much, Rohit Agarval, for joining us, and more talk for probably another day. Thank you so much. All right, let's also focus from the equities onto the rupee side. And yes, huge amount of volatility when it comes to rupee. Remember that yesterday rupee has touched its record lows, and today a huge amount of recovery is getting done, about 92 rupees and 6 paise against the dollar currently. Let us also talk to one of the forex experts to get more sense on the rupee movement from here on. Abhishek Goenka, who's the founder of India Forex and Asset Management, now joins in. Abhishek, good to have you on NDTV Profit. How are you seeing the recovery path for rupee? Is it stabilizing around 92 rupees per dollar? Is that the level that we are looking at now?
Hi, Nisha. Thanks for having me. Well, India is having a tough spot, in the last 2 months. Earlier, it was the earnings slowdown, then FII outflows, then the tariff, and now the war, and with that, the oil prices. All these factors are relevant for India, and somehow these things have not worked in the last few months, and we are getting one after another hit. Having said that, when we say that the pendulum moves both sides, and this time around we are on the wrong side, where a lot of negativity is there in the market. Equity is falling, FPIs is selling, and the oil is above 100, which has always been a nightmare for India. Having said that, historically we have never seen oil staying above 100. The global forces start acting. G7 would start having a coordinated, work towards bringing the oil prices down. So personally, even though the momentum is about rupee weakness and US dollar strength, because globally also US dollar has got very strong. But I've always been an optimist, thinking that things would improve as valuations are getting more lucrative in Indian markets and war will fade out sooner or later. And I think I do not expect the rupee weakness to keep continuing like this. The margin of safety towards rupee strength is improving. And one matrix that we clearly track is the real effective exchange rate. In my career, I've never seen the real effective exchange rate going all the way to 94, 95. It used to be around 105. What it means is the dollar is broadly weakening against all the major currencies. The Asian currencies are not getting as weak as the US, as the Indian rupee.
Yes.
So sooner or later, it is going to course correct.
Right.
So in short term, Nisha, there could be some pressure on the dollar rupee, but I feel that in the medium term, it's very much possible that we could see levels of 90 and below.
All right. So by when are you expecting those kind of levels, Abhishek? And what factors will drive it?
I think the most important factor for rupee is oil. Time and again, if we see the oil stabilizing below 80, then obviously there is no reason. The tariff thing is not a big problem now for India. So first is oil. And second is, I think if Indian valuations also get very lucrative, like your guest was saying, 20p is the valuation if it comes to say 18, another 10% down. I don't see any reason why the FPIs will not come back. And then again, we could see the flows coming in and the rupee might get stronger. So 1 rupee on the upside, $2 on the downside. From a range bound perspective, if things get really well, then we should see levels below 90.
Right, and 92.35, the lowest levels that it touched. Abhishek, just your final word on that. Do you think that, as an expert of Forex, that is a worrying level even for the RBI?
So, Nisha, well, no one is an expert in these markets. Markets are giving us shocks every single day. But, RBI is definitely having a tough time right now. They are selling dollars, reserves are getting used, and they are running short positions. They have to manage liquidity, growth. At the same time, the US 10-year is not inching down. So we have a interest rate difference between US. If the US rates don't come down, obviously there's a pressure on the flows, debt flows. So RBI is definitely having a tough time. Is 92.30 a worry? No. We still have a lot of reserves, and they are intervening slowly and steadily. What they have to possibly do is that whenever rupees down, they're building the reserves again. So short term, definitely there is a lot of struggle for the central bank.
Yes.
But I always believe, and I've always seen that if central bank wants it 2 rupees down, rupee comes 2 rupees down. And time and again, whenever they have intervened at thin liquidity, they have brought the rupee down with a jerk.
No. So Abhishek, clearly worrying levels for us is when RBI has to intervene and also, arrest the fall of rupee. But lots of takeaways on rupee movement from you. And as you rightly pointed out, with crude price, going down, rupee also is moving a little bit in that tandem because crude oil price is a big worry for rupee as well. Thank you so much for joining us on NDTV Profit. Let's move on. Let's move on to another important development that we are tracking today. LNG prices sending shockwaves across many sectors, from power and fertilizers to even steel, chemicals, as well as even city gas distribution. Now, the exposure varies widely, but the impact could be meaningful for several companies. Remember, in fact, Mahima, my colleague, is standing by with all the sectors and companies which are most vulnerable because of this factor. Mahima, take it away.
Right. So, overall, shortage of LNG will have a widespread impact on a lot of sectors because a lot of sector consume LNG for the production that they do. For power to start with, the Torrent Power, around 56% of the current generation is gas-based, and that could impact their overall production. For NTPC, that is around 7% in terms of the current generation is gas-based, and for Tata Power, it's 1%. In terms of where fertilizers go, natural gas, often imported as LNG, is generally serves as a critical feedstock. 70 to 80% of the production cost is from that LNG. So counters like RCF, Chambal Fertilizer, Coromandel, etc. Could get impacted because of this. Petrochemical and refining oil marketing companies are pivoting towards PNG, that is petroleum natural gas, to diversify from traditional liquids. All of these companies will be in focus on the back of that. IOCL, HPCL, BPCL, RIL, GAIL, for that matter, controls 70% of India's natural gas transmission market and 50% of gas trading as well. For steel, JSW Steel uses natural gas at the Dolvi plant, but has actively kind of worked to reduce the dependence by reducing the usage of LNG over coke oven gas. Tiles and ceramics companies like Kajaria, Somani, Sera Sanitary will be in focus. There was a note today also saying out that any 5% increase in cost could impact the EPS by around 5 to 7%. Some other names that could get impacted include chemical names like Aarti Industries, Tata Chemical, Gujarat Fluorochem. You have textile companies like Arvind, Welspun, Vardhaman Textiles, etc. EMS players like PG Electroplast, glass companies like Borosil, pharma companies like Zydus, Alembic, Torrent Pharma, etc. could also get impacted. So this is the overall view of how widespread impact and ripple impact that LNG shortage can have on the Indian manufacturers as well as different segments.
All right, Mahima, thanks so much for getting us the entire list which is getting impacted because of LNG shortage. And with India's LNG flow hit due to the Middle East conflict, remember, government is working on to optimize the gas flow to the industries, including, remember, the priority segments such as fertilizers, PNG, LPG, etc. In fact, my colleague Sharad is here to share more on how the government really plans to allocate these resources to allay any fears. Tell us, Sharad.
Thanks a lot for that, Nisha. But largely we see there's a big dependence coming in, especially in the domestic PNG industries. The 6-month average numbers, if you look at it, 100% of that is having gas consumption, CNG, LPG production, pipeline compressor. These names sound very technical, but this is a part of everyday life for most of us. But tea industries, that's a bit on the lower side. The 6-month average gas consumption is roughly 80%, and manufacturing industries also comes in. That also remains at 80%. But when we start coming down, fertilizers comes in. Of course, fertilizers have other energy sources also which dictate the price. But if you just take the gas component, that's roughly 70%. Some of them are, of course, imports also. And oil refiners, they also have roughly 65% of this gas consumption coming in. So it's just not the crude oil, but the gas also which is very much important for the industries, domestic and commercial usage as a whole.
All right, Sharad, thanks so much for getting us all those important details. Now let's focus on one important word really coming in, an important commentary of sorts. FII growth is likely to really come with a 15 to 17% earnings growth in the upcoming quarters. That's the word coming in from Swanand Kelkar, who, remember, is the managing partner of Breakout Capital Advisors. While speaking to NDTV Profit, he shared his comments, and also adding to this, he even highlighted the key challenges in emerging markets like India. Let's listen in.
Big picture construct in India versus emerging markets was clearly skewed towards emerging markets, as I mentioned. Now, there are several reasons why people attribute this underperformance to, but I think the core reason is that the earnings growth versus what is available elsewhere is not as attractive. That is the simple answer, right? And once that is happening, then you have ancillary, you start to think about ancillary irritants like there is no AI play, we do not have commodities, foreigners need to pay taxes. All these things are not new, really speaking, right, from an Indian standpoint. These are all, I would say, kind of backfitted answers. The core issue is that you are being asked to pay 21, 22 times PE for a 10% earnings growth. And that is just hard to pay when other parts of the world are looking reasonably attractive. I think that's the core FII issue as well. So I'm sure at some point in time, why are FIIs selling? And I have had this discussion with n number of asset allocators. So I think the big hurdle is that, yeah, we understand the long-term story, great domestic market, there are enough and more themes. But for now, I need to cover my North Asia, which is Korea, Taiwan, China, not so much China, but Korea and Taiwan. And also India is not a beneficiary, unlike some other emerging markets, of the commodity event falls. So in emerging markets, sorry, just to digress a bit, there are two broad stories which are playing out. One is the AI beneficiaries. So the capex spending from the hyperscalers in the US, who benefits within emerging markets is the foundries, the memory, and all those things. And the other beneficiaries are countries which are net exporters of commodities, because commodity prices in general have done well, and that generally trickles down to the domestic economy over time. So if you look at South Africa, if you look at Brazil, large parts of Latin America, all that has done well. The AI beneficiaries in North Asia, which is Korea, Taiwan, they have done well. Unfortunately, India does not seem to be at the intersection or even partly in any of these places, which is why the FII interest could be at the moment lower. But the core reason which I mentioned, let's say we are here a year later and India has printed a 15, or we can see a 15, 17% earnings growth. I would be surprised if the FII flows would still be negative.
All right, take a look at Nifty 50 very quickly. 24,150 odd levels has shaved off about 50 odd points in the last 15-20 minutes of trade. So keep an eye out on that sell-off that is taking place a little bit on the higher side. So sell on gains probably seems to be the momentum. With that, it's a wrap on markets at 12. The other shows will take the market action forward. Keep it with NDTV Profit. Thanks so much.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to.
Hello and welcome back to NDTV Profit. You're watching, trending stocks right here at 12:30. This is me, Puneet Zaveri. With me is, of course, Sharad Dubey. And over the next half an hour or so, we'll try and continue putting focus on some trending stocks that should be on your radar today. But Sharad, before we do all of that, what's the current status of the markets? Because it's been a very volatile day yet again today, but a much positive one compared to yesterday.
Exactly. Good afternoon, Puneet. And largely we see a good up move coming in, especially the gap up opening was there. But it seems like the Nifty expiry is at play again. A little bit of correction from the day's high. But nevertheless, we'll take the up move coming in. Nifty Bank also, let's see how the overall setup is looking like. And largely, it's much better than Nifty going ahead. It's up almost 1% and an up move of more than 650 points are coming in But as of now in the market pit, what are the key triggers you should be watching out for? The first one is definitely going to be on the Nifty. It's a relief rally at play. Remember Trump commentary and the crude reversal, that is bringing cheers to the market. These are the two most important points. But the question is, will this rally last? Because there's a volatility on the expiry day today as well, and we are already seeing that. I pointed out earlier with Puneet. Nifty did see a good bounce back from yesterday's congestion level of 23,700 to 23,800. That becomes a long-term level to look at. Key support levels at the 200 DMA comes in for Nifty Bank. The resistance level at the top can be at around 57,000 odd levels. We had mentioned about the buy the dip strategy as well, but interestingly, India VIX has dropped 15%. Now it's below the 20 mark, or near that mark we can see. So of course the volatility has come down, and this is a surprising element. An expiry day, but volatility dipping. Broader indices are seeing good buying, value buying, and the technical reversal is coming. And for the folks who are tracking the macro indicators, Rupee has strengthened and the bond yields have also dropped as well. So that signifies stability coming back to the markets, and risk off sentiment which is there. There is a reduction happening slowly, but yes, nevertheless, geopolitical tensions are still there. A lot of questions need to be asked. But moving ahead, the focus is of course going to be on European market opening today at around 130, 140, and the US futures, how they react, and that might shape up the last hour of trade. But this is where right now we are standing at the market's junction right now. Over to you, Puneet.
Well, thanks so much for that, Sharad. But definitely there are some key aspects that we have on our watch list today. And, let's start with the OMC counters. Now, the oil marketing companies are all in focus. We've essentially seen an intraday reversal for a lot of those counters as well. Let's pull up the watch list now and give you that perspective. And for crude, aviation, tires, as well as fertilizer stocks are all in focus as well. We've seen the war sentiment improve with what's happening in the global factors, with some comments from President Donald Trump, and you're seeing that on your screen as well. In terms of the pipe stocks, Astral, Supreme Industries, all are in focus today on the back of what we've seen, an increase in the PVC prices. The stability of it will be something to watch, but for today, all of them are up and about in the trade. Idea Forge is the other one. NATO drone training in the US is something that we're tracking the counter on as well. When you also look at the other stocks like Dixon Tech, a big approval for the joint venture with HKC. It will now obviously have started off construction there, but the expectation of Q2 FY27 and some volumes coming in from HKC will be a key big approval coming from. Mind you, the Vivo JV is still pending, so you have to keep this counter on your radar as well. Arvind Smart Spaces is the other one where we've seen Pirocha Adi Godrej, the name should tell you enough, has bought stake in the company. Escorts Kubota has been upgraded by Kotak Securities to a buy now. Although the target price hasn't inched up materially, it's gone up from 3,300 rupees per share to 3,375 now, but gives you a confidence of Escorts that FY26, while being a strong year, FY27 could be another multi-year for the tractors, albeit a lower growth. Redington continues to be buzzing on the back of volume, so is Shriram Finance at this point of time. The Hinduja Global Finance is also the other counter that we're tracking. Let's move on and show you the other key stocks in focus. It has signed an MOU with STC and continues to be in focus. And finally, the Auto Pack is doing well in trade today, was the biggest gainer at around 10:30 in the morning. And Uno Minda is the counter that we're putting our focus on. Jefferies has actually initiated coverage on this particular counter, and with a buy recommendation, target price over 1,300 rupees per share. But that's largely what we have trending stocks in terms of the watch list. But Sharad, what are you picking up in terms of the stocks we have on a rapid fire round now?
Well, thanks a lot for that, Puneet. Joining us is Raja Venkatraman. Good afternoon, Raja. First question is, of course, the reversal which has happened, be it aviation, paint, tire, or even fertilizer stocks. Out of these picks, any of these companies which are looking good in this reversal for a much more medium-term play? If yes, what would these stocks be?
Yeah, when we take a look at the markets overall, we are able to see that the reversal or the rally is only for a short-term play. So, considering the kind of scenarios that are emerging right now on the global geopolitical news flow, I would say that all these rallies should be considered only as a opportunity just for an intraday purpose. If you're going to consider this as a dip buying opportunity, I would say that we are still a couple of days away till we achieve some clarity. So I would say that at the current juncture, you could treat it as an intraday play. And out of that, I find that the tire stocks looks to be interesting. So from that, I would like to go with Apollo Tire, because I find some kind of bullish sentiment emerging here at lower levels. So I would say that that would be my pick from all the set of stocks that are firing right now.
All right, there's a good reversal happening and a very interesting theme coming in. But PVC price rise reports have also come in, and Astral is there, your Phenolics Industries is there, Supreme Industries is there. Out of these three stocks, which is looking good on the charts, Raja?
Yeah, like you rightly said, the PVC pipes are showing some bit of momentum here. And yes, Astral did move well a week ago. And the current decline which we saw based on the geopolitical news flow has actually given us an opportunity to enter Astral. So I would say that Astral is a good mover, it's a fast mover, and this kind of dips is seen in Astral. So Astral can be considered as a short-term bet. And out of the names which you mentioned, I would place my bet on Astral.
And a positive corporate development coming in for Dixon Tech. The stock, of course, had some overhangs, but today itself, stock is doing well in the trade. Some volume pickup also. What are the key levels to look out for, Raja?
Yeah, see, Dixon Tech, I have always believed that it has lost its charm over the last, I would say, 6 months. And every time it is, going in a state of recovery, actually, there are exits that are happening at the current juncture. So I would not advocate venturing into Dixon Tech. At the levels of around 11,000, there is also some strong value area resistance there. So I would say that it's best to avoid the stock at the moment, because there are other opportunities available.
Okay, so avoid is coming in for Dixon Tech. Your views on Escorts Kubota? There was a brokerage upgrade also, and it seems like Auto Pack also value buying is coming across the counter. Your views on Escorts Kubota?
Yeah, Escorts is definitely a good bet, and over the last few days, they have definitely witnessed some decline, but I would say that the declines are now settling down, and this would be a good point to enter Escorts, because I feel that over the next 6 months, a target of around 4,000 is possible. So I would say that this is a good time to enter, because the supports are getting defined.
Okay, so a target of 4,000 coming in for Escorts Kubota. But last one, Uno Minda, there is a brokering upgrade as well as a JV tie-up announcement. Your views on that?
See, Uno Minda is always a hit and miss story, and there is always a selling pressure in this stock. So now, considering if you are a futures trader, then all that is fine. But then if you are going to look at it from an investment perspective, then again I would like to remain on the avoid side for Uno Minda. Even though there is a brokerage upgrade and even though there are positive news flow, the stock has not shown that kind of momentum here.
Okay, so very selective approach in our rapid fire segment coming in from Raja. Thank you very much, Raja. Always a pleasure to have you on our show. You giving us important technical views. But moving on, Puneet, Dixon Tech has been buzzing in trade. Of course, important news flows are coming in. What are you picking up from this counter?
Well, definitely one that's finally seen an up move after a long time, and this is on the back of approval for the joint venture with HKC. Now, this is a PN3 approval received by MeitY. And it is something that the company had already guided for, as expected in Q4. And now that it finally has come, and mind you, we are still awaiting the approval for the joint venture with Vivo. It's an important part of its plan to have margin accretion over the next couple of years. But to talk more, if this is the right time to look at this particular counter after the volatility that we've seen, we've been now being joined by Ms. Renubet Pugaria. She's a Senior Vice President Research at IIFL Capital. Ms. Pugaria, very good afternoon to you, and thanks so much for joining in today. Let me put across and pose the first question then on this particular approval that has come in now. We've largely seen that it is something that the management had already guided us, but the key question then, a lot of numbers being thrown around of a joint venture of 74% stake that the company has in this. What is if the revenue accretion as well as the margin accretion that you are penciling in, just not in the near term, but also maybe in FY28, maybe in FY29, with this approval now coming in for the joint venture?
So point number one, for the mobile smartphone phase 26 was the sunset year with respect to the PLI scheme. So increasingly investors and company also has been working towards what would provide the next leg of cost competitiveness. And Dixon for the last 1.5-2 years has been closely working with various supply chain partners to get a little more deeper into the value chain. And this JV announcement was on the same lines in terms of deepening their presence on the display module side. So the PM3 approval was awaited for a long time, and fortunately it's come around just the same time the plant was expected to commission. So company was expecting to complete the capex and plant commissioning in the early part of fiscal 27 itself, so that it goes up and running through the year. And by the time the facility is fully scaled up, it will help to provide cost competitiveness and improve the costing structure and look at smartphone segment. Not just for smartphone, the JV is also for notebooks and tablets as well. So to that extent, on the component PLI, they tend to benefit in terms of the incentive structures, and also the absolute margin on the component side. For example, display module is a double-digit margin profile for them. So while one would say, yes, almost 2/3 of the business volumes, nearly 70-75% would be for captive consumption. This will help to bridge the gap between the absence of the PLI incentives on the mobile phone and to some extent the cost savings coming in from the component level. So the stickiness with customer and the value accretion which Dixon provides will remain sticky with the kind of value addition that they're doing on the component ecosystem for the electronic products.
Ms. Pugalia, is the expectation that this business, while Dixon operates at roughly around 3.9 to 4% margins, with the display business specifically, the asset turns are much higher, roughly around 7 to 8 times. You see also margins traditionally for players who operate in this business as around 15 to 16%. But do you expect that this business will also have similar for Dixon as well? And do you expect that FY28 could be a year where we see meaningful margin accretion coming in rather than FY27 at this point of time?
So, well, yes, on the component level side, the profitability is double digit, and I think management also has been guiding for the same. But one also has to look at the perspective that these components, almost 75% plus, will be going in for captive purposes for their own products, which they are assembling on the smartphones as well as notebook side. So as I mentioned, that higher margin contribution that they're coming, not entirely will come to the P&L, but it will also help to bridge the gap and pass on some of these savings to customers and improve the cost competitiveness and ensure stickiness on the business volume. And the remaining a quarter of the business volumes which they will be selling up in the third party open domain, that will directly add up in terms of incremental EBITDA. So while I think the company is definitely optimistic that beyond the cost savings, they'll be able to retain the profitability on the component JV structure, which in their view should help margin improvement. But even if we assume that the PLI extension doesn't come through for mobile phones, this in my view is technically a very strong reason to ensure the cost competitiveness is maintained. So yes, for FY27, there would be some likely impact of maybe up to 50 basis point on the margin side for mobile smartphone PLI, mobile smartphones for them. And that should broadly recover back in 28 with savings coming in from the HKC JV for them.
Right, and Ms. Pugalia, we the management has of course highlighted that the longer term target of going from 4 to 5.5% margin continues to be through, and a target that they look to achieve. But could you give us some perspective that at this present juncture, what is Dixon's current bill of materials essentially, and where do you expect? Because the estimate is that it's roughly around 17 to 20% right now. And with the display module coming in, there'll be the first phase of that, and then the camera modules will additionally add that as well. I don't know if all these numbers are already in because the HKC approval has just come in this morning. Could you give us some perspective of where do you see that value addition to go? And is the expectation of 5.5% margins maybe by FY29, is that something that you're penciling in?
No, I am not penciling in my numbers to become 5.5% in fiscal 28 to 29 for the moment. Relatively, we have been more conservative on the profitability side, especially in the current environment where most of the OEMs on mobile phones, especially in the economy segment themselves, are struggling. So to that extent, we have left that cushion open. We need to see how the overall bargaining moves between brands, OEMs, and here with Dixon in terms of give and take on the profitability side. But definitely from the margin dip that we're expecting in fiscal 27, 28, we're expecting margins to improve back to 4. Now, whether that 4 becomes 4.5 will also depend on the kind of volume scale up, which would happen in their main EMS that they're doing for mobiles as well as for laptops. If you look in terms of revenue contribution, the HKC numbers initial years expected to be in 20-25 billion rupees, and thereafter able to scale up to close to 50-55 billion on full scale. So to that extent, the revenue contribution in absolute terms from the component PLI is lower than the kind of revenues that they're expecting from the main OEMs, where typically the margin mix tends to be in 2.5 or up to 3 percentage point level. So a combination of the mix will also vary. At the onset, we would rather look at how the cost competitiveness is improving,
right?
How the company is able to hold back on their customers and deepen the value chain, rather than looking at optimistic margin numbers at the onset.
Got it. Just as we wrap up, if I can just squeeze in one question on, and if possible, a quick answer as well. The Vivo JV is something that has not come in yet, but do you think that this favorably puts it into a position? I know it's a difficult ask right now, and your current, your target price and your rating on the stock as well.
Well, Vivo and HKC JV both are two different JVs for different purposes. The Vivo JV has been under process. There is no clear yes or no yet. In the analyst and management guidance, it's partially already baked in. So the timely approval of the JV or the under PN3 will help ensure that there are no gaps on the numbers and delivery as we progress through fiscal 27-28. If there are material delays, there could be earnings risk. Or we need to see how does the company maneuver with respect to an alternate route. Instead of manufacturing in a JV format, it could be done on an outsourced EMS business model. Few of those routes need to be worked out, and we need to wait and watch how the company and the management works on those levels.
Right.
We like the name. We have an ad recommendation on the stock with a 15% upside from current levels.
Well, thanks so much for that, Ms. Pogaria, and look forward to our next conversation as always. That's the view coming in on Dixon from IIFL. It's a key counter that's buzzing in trade today as well. But let's also look at what are some of the other trending stocks on Google currently, and let's pull up that list for you now. We have seen a bunch of counters, especially in the auto space, that are buzzing, especially in the EMS space also as well. But Cupid makes it to the list. Dixon, of course, the volume search is looking very strong at this point of time. Mazagon Dock back in favor, and post that 99,000 crore order win that they could get as well. HPCL as well as Asian Paints and some of the other stocks that are buzzing in trade today as well. But Sharad, so is Escorts Kubota right at this point of time. What are you picking up on the counter?
Well, thanks a lot for that, Puneet. Initially, there was a bump up. We had actually taken this stock as our brokerage call of the day also at around 905. Interestingly, it's an upgrade coming in from Kotak Securities from sell to add rating. And look at the target price also jumping from 3,300 to 3,375 rupees per share. Now, they have stated that the core drivers are remaining intact for this stock, and the domestic tractor sales, however, are showing mixed trends in the El Nino years. In the construction equipment segment, that business is expected to recover this calendar year as well. Lastly, there is a diversification also at play into spares, engines and agri solutions, which will increase the revenue base, and also the cyclicality which is there in the business that might be on the reduction front as well. So a lot of important developments coming in when it comes to Escorts Kubota, and the stock itself also sustaining that 3% mark in the day's trade.
Thanks so much for that, Sharad. But let me also welcome in Raghvendra Kedia, founder of Prosperity Advisors at this point of time of the show. Raghvendra, thanks for patiently waiting by. Very good afternoon to you. A quick one first on Escorts Kubota. Do you feel that, and do you have a similar view to what Kotak Security does? Is it a good buy at this point, given that FY26 has been very strong? Do you expect that FY27 could be similar as well?
Good afternoon, Puneet. We are bullish overall on the auto space, and specifically with the expectations of a good monsoon reports, the overall two-wheeler space, specifically on the tractor space, sales would do well. And we are bullish on Escorts Kubota at current levels, and believe that even at current levels, the stock can give a 15 to 18% upside for a time horizon of 12 months to 15 months. So we are bullish on Escorts at current levels. Broadly, the P multiples are still at moderate levels, and any correction further would also be a better entry level. But even at current levels, one can look at enter for a 15% annualized return from current levels. So the bullish undercurrent would continue in Escorts Kubota. It's a buy from current levels.
Devendra, good afternoon. Sharad here. Uno Minda, what's your view on that? Jeffries come out with an upgrade here, and also JV announcement is there. Your views on the fundamental perspectives of this company, especially on the medium to long term basis?
So, good afternoon, Sharad. For Uno Minda, we continue that their export revenue would continue to do better, and the overall pie of the exports versus the domestic sales through two OEMs would go well. Positive catalyst, what we always look in stocks is also the strength in the US dollar, which is currently at 92, 93. So that would be a straight away bottom line in terms of a margin expansion to the entire export vertical. So Uno Minda, it is very well diversified revenue pie coming from OEMs of India export and the upbeat space in terms of the two-wheeler numbers. We believe that its valuation though might look premium, but with this recent market correction, it's a good buy, and expect a 20% upside in Uno Minda for a 1 year to 15 months investment horizon. So the bullish undercurrent would continue considering the strength in dollar and a very healthy export pie increasing, as also mentioned in the earnings commentary of the stock in the previous quarter's result reportings.
Raghavendra, we leave it at that. A quick chat today, but thanks so much for joining in and giving us your views on a couple of stocks. But the AMFI numbers for the month of February are out. Let me welcome in Alex to give us perspective of what the numbers look like. Alex, over to you.
Well, thanks so much for that. It's a steady state, if you think about it, for the month of February from the mutual fund industry as a whole. And let me take you through some of the key categories. First, and I tend to do this on an ongoing basis, I look at active equity as a category, because most people invest into actively managed equity mutual funds. And that category has gotten an overall net inflow of about 25,978 crore rupees. That compares with an inflow of about 24,000 crore rupees in the previous month. So it's a slight improvement, but then you have to also take into account the fact that new fund offers, that is new schemes that have been launched in the month gone by, accounted for about 4,000 crore rupees of those inflows into actively managed equity mutual fund schemes. So yes, there has been a bit of a deceleration in net inflows in the month of February, but the context is important to understand. Remember that Indian equity markets had lost in the month of January and February more in certain cases than they had lost in 2025 as a whole. And so it was a tough operating environment. Of course, the SIP figure is something that you should pay attention to as well. It has fallen from that peak level of above 31,000 crore rupees to about 28,800 odd crore rupees. And so therefore there is a deceleration that is evident there as well. Now, last month, the big talking point, and I said that it was 24-carat magic in the air, and that was because you saw inflows of 24,000 crore rupees into gold ETFs. That hasn't taken place this time around. They've dried up just a tad bit. They're still substantial, but they stand at about 5,000 crore rupees, 5,255 crore rupees to be specific. And the inflows into the multi-asset category, which, as you know probably by now, also includes commodities and gold and silver, has gotten inflows of about 8,476 crore rupees. So those have also slowed down just a tad bit. All told, it's a decent set of numbers for the mutual fund industry as a whole in a tough operating environment, particularly because diversified equity mutual fund schemes have continued to get more money. And here I'm specifically talking about flexi cap funds, which have gotten inflows of about 6,900 crore rupees on a net basis. And that's because people are selling less in this category. In fact, in the sectoral and thematic category, there is still quite a lot of churn. There's gross inflows of over 13,000 crore rupees, but is also outflows of over 10,000 crore rupees, which is why the net inflow is just about 2,987 crore rupees. Decent numbers for the mutual fund industry.
Well, thanks so much for that, Alex, getting us perspective on the AMFI numbers for the month of February. But viewers, that's all the time we have on this show. From myself, Sharad, everybody who put the show together, thanks so much for watching. Keep tuned in to NDTV Profit.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The stage that brings together India's most compelling creative voices.
एनडीटीवी का क्रिएटर मंच है
Where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
इट्स ओके यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi. New Year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode sing girl, sing girl, sing girl, sing girl, sing girl, sing girl. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad.
Asian markets and the Lal Street cheer true signals. US President Trump signals that the war in Iran may be pretty much over. Meanwhile, Iran's deputy foreign minister hints at a truce if it is assured it won't be attacked again. Markets cheer possibility of a de-escalation in the Middle East war. Nifty jumps nearly 200 points. Sensex as well soars over 500 points. Most major sectors in the green, with autos and top gear. IT bucks the trend. And AMFI data is out. February MF flows in fact show equity resilience, but overall net inflows have normalized as ETFs and gold cools off. Broader market and thematic funds drew stronger money and NFOs are back. A shortage of commercial LPG cylinders has triggered alarm across the hospitality sector, with restaurant associations in Maharashtra, Tamil Nadu and Bengaluru warning that eateries could shut down if supplies are not restored. And as Middle East conflict hits LNG flows in India, government sharpens focus on priority gas allocation to sectors like fertilizer, PNG, LPG. The Petroleum Ministry constitutes committee to review representations for LPG supply. Good afternoon. Thank you so much for tuning in to Lunchtime Trades with me, Shreyansi Singh. And this is the show that's going to get you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, a very quick look at the markets. When you talk about Dalal Street, you're seeing a similar picture as to what you saw when it comes to Asian markets. So 200-point uptake as far as the Nifty is concerned. When you talk about the Sensex as well, about a 500-point uptick is what you're seeing right now. When you talk about the entire list of losers as well as gainers, it's actually IT that is largely on the back foot. So that's one sector that's holding on to a tinge of red as we speak. And oil and gas also on the back foot. What's doing well right now is PSU banks, auto, pharma, bank, realty, and metals, exactly in that order. With that in mind, let's quickly take a look at the list of losers and gainers as well. When you talk about some of the stocks that are under pressure, there's something like a KEI Industries, something like Polycab as well, Coforge, Infosys. Those are some of the counters that are under pressure, and within the Nifty 50 pack as well. Like I mentioned, some of your IT names, heavyweight Reliance also just a little bit on the back front right now. Tech Mahindra, Bharti Airtel, HUL, ONGC, HCL Tech, some of your other counters that are trading with cuts in the red right now, but something like a Shriram Finance is doing well, 6.5% thereabout uptick coming in. On that one, Quality Walls, 3.5% uptick. Interglobe Aviations as well, slight bit of recovery, 3.2% uptick. And it's seen green after a lot of days after that entire tension on the back of the Middle East war. Concern seems to be de-escalating right now, and there's that entire bit of commentary coming in from Trump in terms of the timeline as well, helping Indigo with that 3.2% uptick. SBI Life, Eicher Motors, Ultratech Cement and Tata Motors PV. Also some of these counters that are gaining with gains of about 2.5 to 3% thereabout. But with that in mind, let's also get your quick check going as far as the world of commodities is concerned. So on one side, there's the entire tumble that you have when it comes to oil prices. On the other side, gold prices are advancing and sort of gaining after that commentary coming in from Donald Trump on the war timeline really weighed on oil. Let's also try and get you a better sense of what the week is going to look like from here on. Vandana Bharti, Head of Commodity Research, SMC Group, joins us right now. Thank you so much, Vandana, for taking time out and joining us this afternoon. And a very good afternoon.
Very good afternoon, Shreyansi, and it is really a very good afternoon because everything it is going on normal path, and the crude oil prices it is moving down, which was the concern for the Asian economies, too much now. MCX prices it is moving down, and WTI in NYMEX it is moving up. So there is a huge gap between the prices. But yes, it was a very much required step or statement by the Trump.
No, absolutely. And it is a good afternoon, like I said, for gold prices as well, Vandana. Let's start with that and we'll come to crude in a bit because there's a lot to cover when it comes to crude. Slightly less in terms of triggers that you're looking at immediately right now when it comes to gold prices. Let's talk about that advance that we're seeing coming in. This looks like a little bit of mixed haven signals that you're looking at when it comes to bullion. Because on one side, you do have safe haven demand. On the other side, there's that entire picture with oil prices also tumbling. That really seems to be helping gold prices as well.
Yeah, it is money which is switching from one counter to another counter. So the story was a little different because gold is known for safe haven buying, but this time it was crude which behaved like a safe haven buying in the entire world, and because the influence petrodollar is over, but yes, the influence of petrodollar was there. Because of that, we have seen crash everywhere, but yes, dollar index, it was in the winning situation, and the money, it was going into a dollar index. So because of this de-escalation news, we have seen a slight fall in the dollar index, treasury, and the S&P VIX, and now the market is getting normalized, and now money is switching into gold and silver, and this was the trigger. And this time gold and silver, it was on the back foot because of the oil margin calls, other market margin calls and all, and because of the high liquidation in the market. So now it is already known for the safe haven buying, and the fundamentals were so good that again money is again into this counter, and we are expecting that now the rally should continue up to around 5 to 6% of rise in gold and more into silver, because silver was something which was in high demand, and the manufacturing, it was stuck, especially in China, because of the crude oil availability and all. So yes, now silver will get the higher momentum as compared to the gold prices. So 90,
Vandana, absolutely, and that is something that we were sort of penciling in also for the tides to really be turning when you talk about both of these metals. But are you looking at range bound trades, especially when it comes to gold? I wanted to get a quick sense of that, and then we'll move on to oil.
Sure. 5250, 5260 in dollar terms we are expecting in gold. If we talk about Indian prices, 1,72,000 is the near resistance for this commodity. If we talk about silver, silver is stronger looking at the current scenario. So we are expecting 3 lakh kind of level in silver. And if we talk about COMEX prices, it can touch $97, $98 because the rally was really suppressed.
No, absolutely, and that's something that you're looking at when you talk about gold and silver prices in terms of the price levels also, Vandana. But like I said, we've been waiting to talk about oil because there's a lot to look at. In terms of the top 3 triggers, you have Donald Trump's commentary coming in terms of the entire timeline where he does expect the Middle East war to be nearing an end. Other than that, he's also said that the Strait of Hormuz, traders need to be a little rest assured, because he's going to be sending the US Navy with them if the situation demands it. Other than that, also there's a waiver coming in for certain oil sanctions. So 3 triggers that you're looking at when it comes to the oil markets. Anything else that makes to your radar right now? Or do you think that that is what is dominating price movement?
Yeah, very well explained by you, Shreyanshi. And we are expecting now focusing on some economic data which is coming this week. Apart from that, yes, the concern is that we don't know the real figure, because while crossing the Strait of Hormuz, the shipments, they stop their transponder. So we don't know the real move. And we are expecting that the more flows of tankers between the Strait of Hormuz. But yes, one thing I can say that damages has been done, and it will take a week or month time to get over of this. So yes, the crude oil prices, it has made a higher base for right now. So yes, the prices should get support near 6,500, 7,000, and upside is still near 9,000, because we don't know the mood sense of from any time he can give a strong statement, and it will create a chaos in crude oil prices. So yes, this time crude has made a higher base, and some other triggers can give impact, and this is economic releases. And after March month, the real impact of this war will come, and it will be shown by the data of US and other countries, especially Asian economies.
No, absolutely. And, going forward, I also wanted to try and get a sense of what you think about investors who are already invested should be doing when it comes to gold and silver specifically, whether you're invested through the physical metal itself or through ETFs. You do have volumes in ETFs, by the way, that have really declined when you talk about investors investing in gold as well. So it seems to be that investors are possibly waiting on the sidelines. Is that something that they should be doing at this point in time?
They can accumulate, but for the smaller profit, because I'm expecting 5 to 6% of rise. After that, it should move in a consolidation zone. And yes, people, they book profit in ETF, and other reason was the mismatch between the ETF return and the gold prices return. So it discourages ETF investors as well. But this time, I have checked the movement of yesterday ETF price range and COMEX price range, MCX price range, and it was totally decoupled. I have seen a very little decline in the prices of gold and silver ETF because the market was ready for another upside kind of move. So you should wait for 140, 140, 145 kind of level for gold ETF. If you talk about silver, I'm expecting 272 in silver ETF. So this time they should hold for more because they have already waited for long, and they should wait for this 272 levels, and there they can book partially.
Well, absolutely, and thank you so much, Vandana, for taking time out and helping our viewers out when it comes to that entire outlook, not just when it comes to gold and silver, but also with oil. Thank you so much with that there. But let's also move on, shift focus onto FII growth that in fact is likely to come with a 15 to 17% earning growth in the upcoming quarters. And that in fact is the word coming in from Swanand Kelkar, Managing Partner, Breakout Capital Advisors. And he's also talking about highlighting some of the key challenges that face emerging markets, the likes of India. Let's go across and listen in.
Big picture construct in India versus emerging markets was clearly skewed towards emerging markets, as I mentioned. Now, there are several reasons why people attribute this underperformance to, but I think the core reason is that the earnings growth versus what is available elsewhere is not as attractive. That is the simple answer, right? And once that is happening, then you have ancillary, you start to think about ancillary irritants like there is no AI play, we do not have commodities, foreigners need to pay taxes. All these things are not new, really speaking, right, from an Indian standpoint. These are all, I would say, kind of backfitted answers. The core issue is that you are being asked to pay 21, 22 times PE for a 10% earnings growth. And that is just hard to pay when other parts of the world are looking reasonably attractive. I think that's the core FII issue as well. So I'm sure at some point in time, why are FII selling? And I have had this discussion with n number of asset allocators. So I think the big hurdle is that, yeah, we understand the long-term story, great domestic market, there are enough and more themes. But for now, I need to cover my North Asia, which is Korea, Taiwan, China, not so much China, but Korea and Taiwan. And also India is not a beneficiary, unlike some other emerging markets, of the commodity event falls. So in emerging markets, sorry, just to digress a bit, there are two broad stories which are playing out. One is the AI beneficiaries. So the capex spending from the hyperscalers in the US, who benefits within emerging markets is the foundries, the memory, and all those things. And the other beneficiaries are countries which are net exporters of commodities, because commodity prices in general have done well, and that generally trickles down to the domestic economy over time. So if you look at South Africa, if you look at Brazil, large parts of Latin America, all that has done well. The AI beneficiaries in North Asia, which is Korea, Taiwan, they have done well. Unfortunately, India does not seem to be at the intersection or even partly in any of these places, which is why the FII interest could be at the moment lower. But the core reason which I mentioned, let's say we are here a year later and India has printed a 15, or we can see a 15, 17% earnings growth. I would be surprised if the FII flows would still be negative.
All right, then there you go. That's the word coming in from Swanand Kelkar as well. But moving on, amid current disruptions faced by the export industry, Commerce Minister Piyush Goyal has provided a major update saying that the government is currently working on insurance-related schemes. Let's go across and listen in.
हमारी रोज सुबह स्टेक होल्डर के साथ भी चर्चा होती है, इंटर मिनिस्टेरियल कंसल्टेशन होती है, और लगातार हर एक विषय जो हमारे संज्ञान में आता है उसमें लगभग रोज कोई ना कोई नए कदम उठाकर, जैसे शिपिंग मिनिस्ट्री ने शिपिंग लाइंस के साथ बातचीत करके शिपिंग कॉस्ट को ठीक रखना, जैसे सीबीआईसी ने तुरंत सर्कुलर निकाल दिया कि अगर कोई सामान वापस आता है तो कैसे उस सामान को जल्द से जल्द कस्टम क्लियर करके एक्सपोर्टर को वापस मिल जाए, जिससे ऑल्टरनेट मार्केट या भारत के बाजार में वो उसको बेच सके। इसी प्रकार से हम और नई स्कीमें जिसमें इंश्योरेंस भी शामिल होगा कि अगर कोई वेसल, कोई शिप जिसमें भारत का सामान जो निर्यातक ने बाहर भेजा है उसपे अगर कोई आहत पहुंचती है तो उसको कैसे हम पूरी तरीके से इंश्योर करके एक्सपोर्टर्स को एक प्रकार से चैन से एक्सपोर्ट करने में सहूलियत दें, वो भी हमारा विभाग बनाने में लगा हुआ है, कंसल्ट कर रहे हैं एक्सपोर्ट क्रेडिट गारंटी कॉर्पोरेशन और अन्य विभागों के साथ। तो एक प्रकार से सरकार 24 घंटे तट पर है। हमारी हेल्पलाइन पूरी तरीके से चालू है, चल रही है और हमारी हेल्पलाइन के माध्यम से हर निर्यातक के लिए हमारे द्वार खुले हैं।
All right, and the government is working round the clock to ensure that there are no disruptions, especially when it comes to exporters. That's the word coming in from Piyush Goyal as well. But on that note, it's time for a very quick break. More news and updates on the other side.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders,